Everyone, good morning, good afternoon, good evening to all of you. Welcome once again to this लाइव एनालिसिस स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे क्रूड ऑयल, नेचुरल गैस और नेचुरल गैस मिनी ऑप्शंस की आज एक्सपायरी है, ध्यान रखना। कल एक ट्रेड बनाया था सेलिंग का, याद होगा आप लोगों को। नेचुरल गैस में बाइंग का एक ट्रेड था, उसका टारगेट हिट हो गया था। उसके बाद एक सेलिंग का ट्रेड था। मार्केट वहीं पर ऑलमोस्ट रेजिस्टेंस पर ही क्लोज हुआ था। आज एग्जैक्टली थोड़ा सा गैप डाउन ओपन हुआ, ऊपर गया, वहां से वापस सेलिंग की अपॉर्चुनिटी मिली, तो वही ट्रेड अभी भी रनिंग है। तो जिन लोगों ने सेल किया हुआ है ट्रेल करो। इसमें नीचे देखो ऐसा कोई अभी सपोर्ट बना नहीं है, तो दैट इज रनिंग ट्रेड राइट नाउ। वी कैन एक्सपेक्ट कि थोड़ा मोमेंटम और आए डाउन साइड तक, तो फिर देखते हैं उसके बाद और कितना मूव करता है। ठीक है, कोई फ्रेश और यहाँ पर सपोर्ट बनेगा तो बाई करेंगे, नहीं तो फिर कल का लो ही फिलहाल के लिए सपोर्ट है वैसे तो। लेट्स सी कोई नया सपोर्ट अगर बीच में बन जाए तो विच इज़ बेटर आई थिंक, बट अभी नहीं है, तो वी हैव टू वेट। 12:30 है लंदन सेशन की ओपनिंग है, थोड़ी वॉलेटाइल कैंडल हो सकती है। इसके बाद 5:30 न्यूयॉर्क सेशन की ओपनिंग रहेगी। एंड देन 7 पीएम यूएस मार्केट ओपन, और 7:30 पे फेड चेयरमैन पवेल की आज स्पीच है जैक्सन होल सिंपोजियम में। तो इस पर ध्यान रखना, ये इम्पैक्ट करेगी ओवरऑल मार्केट को। बाकी प्रेसिडेंट ट्रम्प भी स्पीच देंगे, तो वो भी नज़र पे रहेगी। ठीक है, कोई नया सपोर्ट बनता है तो देखेंगे बाइंग का, अभी कोई नया सपोर्ट नहीं है, तो वी हैव टू वेट। बाकी देखो, इसका टारगेट मैंने यहाँ पर लगाया है, जरूरी नहीं है पर आके रुके, हो सकता है और नीचे भी जा सकता है, तो ट्रेल करते रहना। कोई नया सपोर्ट बन जाएगा तभी बाई करेंगे, अदरवाइज बाई नहीं करेंगे। ठीक है, नीचे वहाँ पर कोई सपोर्ट है नहीं एक्चुअली में, इसलिए सीधा 239 के आसपास यहीं पर वो कल वाला ये सपोर्ट बना हुआ है, नथिंग एल्स। हाँ, ट्रेल करो उसको। कल किसी ने पुट लिया था, आई होप अब प्रॉफिट में आ गए होगे। थीटा डी के थोड़ा बहुत हो ही गया उसमें। बाकी अगर बात करें इंडियन मार्केट की, तो बैंक निफ्टी फ्यूचर देखोगे तो मॉर्निंग पे आज ऑलमोस्ट कह सकते हैं ट्रेंडिंग रहा है। ऑलमोस्ट 500 पॉइंट गिर चुका है। मॉर्निंग पे हल्का सा गैप डाउन ओपन हुआ था, बट उसके बाद से कंटिन्यूसली सेल ऑफ ही आया है पिछले 1-2 घंटे से। साइडवेज है, बट मॉर्निंग पे कंटिन्यूसली फॉल कर गया था। हरी बाबूजी, गुड मॉर्निंग। बाई क्रूड ऑयल को भी देखोगे तो एक सेलिंग का ट्रेड कल बनाया था, वो अच्छा चला था। उसके बाद एक बाइंग का ट्रेड था, उसका भी कल टारगेट हो गया था वैसे तो। टारगेट क्या, उससे भी ऊपर चला गया था वो। इसमें देखते हैं एक नया ट्रेड अगर बनता है, थोड़ा सा ना यहाँ पर ये रेजिस्टेंस मल्टीपल टाइम टेस्ट हो गया, थोड़ा और ऊपर आ जाए नेट क्रूड ऑयल तो और बढ़िया है। ऊपर वाला लेवल से सेल करेंगे इसको तो और बढ़िया रहेगा। वैसे ये भी रेजिस्टेंस ही है, बट ये काफ़ी बार टेस्ट हो गया है यहाँ पे ना, 2 बार 3 बार टेस्ट हो गया है, चौथी बार आया है यहाँ पे। तो थोड़ा सा सेल करने में थोड़ा सा भी डर लग रहा है यहाँ पे। बेटर कि थोड़ा सा ऊपर जाके इस लेवल के आसपास कहीं एक्सेलरेट करे सेलर्स के, और फिर सेलिंग में आ जाए। दैट टू बी ग्रेट एक्चुअली। इस पे नहीं है। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। ये है। एक बार यहीं से सेलिंग आ गई थी, दूसरी बार यहाँ से आई है। सपोर्ट इसमें और कहाँ पर मिल सकता है ही नहीं इसमें तो। ये रुक रहा है फिर यहाँ पे। रीटेस्ट तो नहीं है? नहीं। हाँ, एक बार सेलिंग यहाँ से आई है, दूसरी बार यहीं से आई है। सीधा गैप अप ओपन हो गया। नहीं नहीं, गैप अप भी नहीं है, ब्रेकआउट ही नहीं हुआ। मतलब रेजिस्टेंस पर ही है, रेजिस्टेंस से वापस सेलिंग कर दिया। तो इसके ऊपर कैंडल क्लोज नहीं होगी, ब्रेकआउट नहीं माना जाएगा ना। ठीक है, 12:30 की कैंडल है, थोड़ा सा वॉल्यूम के साथ बनेगी डेफिनेटली। ये भी नहीं है। कहाँ रुक सकता है, इसमें कोई सपोर्ट ही नहीं है क्या? व्हाट अबाउट दिस? फ्यूचर चार्ट में देखना। ओह, हाँ ये है, सपोर्ट पर ही है। कि बैंक निफ्टी को देखोगे ना, सपोर्ट पे रुका हुआ है, साइडवे चला गया। नॉर्मली बाइंग थोड़ी फास्ट तो नहीं आती है, स्लो ही आती है, तो कंसोलिडेट ही करते जा रहा है यहाँ पे। 55,000 350 से 55,000 250 तक सपोर्ट जोन बना हुआ है। एक बार बाइंग आ चुकी है यहाँ पर, ये दूसरी बार आ रही है बाइंग एक्चुअली में। लेट्स सी कितना ऊपर जाता है यहाँ से। इट इज़ ऑन सपोर्ट एक्चुअली बैंक निफ्टी फ्यूचर, बट मोमेंटम नहीं आ रहा है बिल्कुल भी। लेट्स मूव ऑन टू द क्रूड ऑयल। कल गोल्ड ने बताया था वो रेजिस्टेंस एरिया जहाँ पर मार्केट कल था 8 PM के अराउंड, वहाँ से काफ़ी अच्छा सेल ऑफ आ गया है। किसी ने अगर वहाँ सेल किया होगा तो अच्छा मूव कर चुका है मार्केट ऑलरेडी। बताया था ना कल 3,345 से 345 के आसपास, जो फॉरेक्स में ट्रेड करते हैं, फिर एमसीएक्स में भी वहाँ से काफ़ी अच्छी सेलिंग आ गई थी कल से। इंडियन मार्केट तो क्लोज हो गया था, फॉरेक्स कंटिन्यूसली गिरता रहा ऑलमोस्ट ½ %। $19 मोमेंटम डाउन साइड पे किया था। बाकी सिल्वर को देखोगे तो वो कल जो मैंने लेवल बताए थे उसी रेंज के अंदर साइडवे चला गया कम्प्लीटली। लग ही रहा था ऐसा ही होगा, क्योंकि ऊपर ब्रेकआउट प्रॉपर्ली हो नहीं पाया, नीचे सपोर्ट था और रेंज के अंदर ही क्लोजिंग दे दी कंप्लीट। तो नीचे सपोर्ट था, वहां से बाइंग जरूर आ गई है। ऊपर का जो रेजिस्टेंस था मैंने कल ही बताया था, वहां पर सेल करना ज़्यादा फायदेमंद रहेगा नहीं। और वही हुआ, मार्केट साइडवेज ही चला गया। प्रॉपर ब्रेकआउट भी नहीं हुआ, बट नीचे भी नहीं आ सकता था क्योंकि सपोर्ट था। प्रॉपर ब्रेकआउट हो जाता थोड़ा सा बेटर था। तो अभी सपोर्ट एरिया से ही सिल्वर भी सपोर्ट लेके जा चला गया ऊपर। ठीक है, 37.95 बताया था, 37.95 to 96 यहाँ पर एक सब बाइंग एरिया है। तो अभी थोड़ी देर पहले ही आया था वहाँ पर 12 PM की कैंडल, एंड जंप किया अप साइड पे। बाकी एक्सपायरी है तो ध्यान रखना नेचुरल गैस में, जो लोग ऑप्शन में ट्रेड कर रहे हैं। इसमें कौन सा था? नीचे होना चाहिए, एग्जैक्ट लेवल पे नहीं। ये मुझे थोड़ा सा क्रूड ऑयल में लेवल देखोगे ना, यहाँ से एक बार आई सेलिंग, लो बना, दूसरी बार आई लोअर लो बना, कल तीसरी बार यहाँ पर वापस आ गई थी, हायर लो बना है। आज ये चौथी बार आया था यहाँ पर, ओपन ही रेजिस्टेंस पर ही ओपन हुआ था एक्चुअली, तो वहीं पर घूम रहा है। तो होने को देखो यहाँ से सेलिंग आ सकती है, ऐसा नहीं नहीं आ सकती, बट थोड़ा सा अगर अपसाइड पे चला जाए, एक लेवल और है, को हिट कर लेगा तो मेरे अकॉर्डिंग ज़्यादा सेफ रहेगा ट्रेड करने के लिए, करंट लेवल पे। नीचे आता भी है तो फिर नीचे हमारे पास से यहाँ पर रुक जाना चाहिए लॉजिकली तो। यहाँ पे वापस रुक ही जाना चाहिए अगर ये क्रूड ऑयल नीचे आता भी है। आउट नहीं हुआ है क्रूड का। थोड़ा सा अगर इस ऊपर वाले लेवल तक आ जाए तो बढ़िया है। वहां पर भी एक रेजिस्टेंस सेल करने के लिए ठीक है हमारे पास। ये लेवल इतने बार टेस्ट हो गया है, थोड़ा सा मुझे लग रहा है वो बेटर है, क्योंकि वहां पर प्राइस एक ही बार आया, दो बार आया है सॉरी। वहां पर भी प्राइस अगर आप देखोगे तो दो बार आया है। एक बार लो बनाया था, दूसरी बार वो सेम ही डे आया है, लोअर लो बनाया है काफी बड़ा। तीसरी बार भी एक बार मार्केट ने आके एक और लोअर लो बनाया है, तो ये तीसरी या चौथी बार ही आएगा, तो एक बार वो भी स्ट्रांग है। तो अगर वहां तक आ जाए तो बढ़िया ही है। बाकी अगर यहीं से सेलिंग आ जाती है तो वी नीड टू अवॉइड। सपोर्ट लेवल या वैसे तो डे लो ही है, उसके अलावा बीच में कोई सपोर्ट बन जाएगा तो बना दूंगा। फिलहाल और कोई सपोर्ट वहां पर है नहीं। डे लो के अलावा उसमें कोई नया सपोर्ट बनेगा बनेगा तो मैं लगा दूंगा, उसके अलावा उसमें कोई सपोर्ट नेचुरल गैस में है नहीं। ठीक है, बाकी क्रूड ऑयल मैंने समझा दिया। यहाँ पर क्रूड ऑयल में रेजिस्टेंस अभी भी है, देख पा रहे हो कि ब्रेकआउट नहीं हुआ है। बट यहाँ पर 3 बार ऑलरेडी सेलिंग दे चुका है मार्केट, फोर्थ टाइम आया है, ऊपर भी एक रेजिस्टेंस है, वहां तक आ जाए तो मेरे अकॉर्डिंग अब बेटर है वहां से सेल करना सेफ रहेगा, क्योंकि यहाँ पर ना थोड़ा सा प्राइस एक्शन अब देखोगे तो इतना वो नहीं कर रहा है। एक बार सेलिंग आई मार्केट ने, लो बनाया, दूसरी बार आई मार्केट ने लोअर लो बनाया, तीसरी बार आया हायर लो बनाया, तो थोड़ा सा अब ये चौथी बार में निकल जाके यहाँ से आए सेलिंग तो बेटर है फिर। उसके इसमें नीचे नया कोई सपोर्ट ही बन जाएगा तो वो भी अच्छा रहेगा हमारे लिए। समझ रहे हो? समझ रहे हो नहीं समझ रहे हो गाइस? समझ रहे हो तो फिर लाइक कर दो। ये यहाँ पर का नहीं है, पीछे वाला ये लेवल यहाँ पर दिखाता है, एक सेकंड। ये क्या हुआ है? वैसे कभी कभी प्राइस एग्जैक्ट लेवल के ऐसा हिट करके भी आ जाता है मोमेंटम में, कई बार ऐसा भी देखा है हमने। पोर्ट बनाया है इसने जान उसकी, तो बाइंग आनी है यहाँ पर। और गाइस सभी लोग लाइक कर दो, 12:30 की कैंडल भी क्लोज हो चुकी है। लंदन सेशन ऑलरेडी ओपन प्रॉपरली, वी कैन एक्सपेक्ट वॉल्यूम टिल 3:30, उसके बाद थोड़ा सा वॉल्यूम डाउन हो जाएगा। यहाँ पर मार्केट ने ये देखो ऐसा रुड़ा है गैप डाउन में, फिर एक बड़ा मूव कर दिया। हर बार नहीं होगा ऐसा। मॉर्निंग पे ट्राई किया था इसने यहाँ पर 9 बजे पहले कैंडल, बट रिकवर कर लिया, तो इसका मतलब कहीं ना कहीं ऊपर लेके जाके। यहाँ पर क्या सिनेरियो है कि यहाँ अगर देखें तो ये था, मार्केट आया सेम डे, थोड़ी बहुत सेलिंग हुई, फिर अगले दिन ऊपर आया। ये आपका 12 अगस्त। तो क्या ये सुबह काम करेगा? चांसेस तो कम रहते हैं फिर भी, असल बड़ा है ना। 20 पॉइंट इनफ है, और जैसे 4 भी इनफ है, कोई नया सपोर्ट अगर नहीं बनता है तो। थोड़ा ऊपर एसएल का ध्यान रखना, थोड़ा एसएल रहेगा ठीक ठाक। कल जितना ही रहने वाला है। कम ऑन गाइस, 50 लाइक्स का टारगेट है. डोंट फॉरगेट टू लाइक द स्ट्रीम. लाइक भी करते रहो. इन लोगों ने लाइक नहीं किया स्ट्रीम को. यहाँ पर एक सपोर्ट बना सकता था, वो बनाया नहीं है अभी. बना दे तो बढ़िया. इस एरिया के आसपास लिक्विडिटी क्रंच. क्रूड ऑयल आता हुआ ऊपर की ओर.
You're in San Francisco, really digesting what seems to be a focus on LLMs, still on the frontier research, but then there's the application of this research and the infrastructure, of course.
No doubt. Yesterday, we were able to obtain a memo that was shared by Alexander Wang, the new chief of Meta Superintelligence Labs. And he's really laying out the new structure for this organization after weeks and weeks of an incredible effort to hire talent. As you might remember, Caroline, this is hundreds of millions of dollars, sometimes nearing $1 billion in total compensation for individual AI researchers. And now they are finding their home within Meta, within these 4 teams.
Yeah, and the home, how are you seeing perhaps what some have reported behind the scenes of some jostling or discomfort with what had been suddenly incredibly expensive talent coming in and a reorientation of where the focus is? Does this help better align that talent and actually push forward? And ultimately, is it open large language models, for example? Are they going to delve into closed ones potentially?
That is a burning question for all of us. What we do know is that one team will continue to be dedicated to large language models, the Llama product that underpins Meta's AI efforts broadly. And the one team that I really am keeping an eye on is the infrastructure team. Mark Zuckerberg has pledged to spend hundreds of billions of dollars specifically on AI infrastructure. And now we are seeing talent from within the company go and lead that specific effort. We expect more capital to be deployed there this year and then certainly next.
Lower by 1.4%, and the futures are suggesting there's going to be further selling pressure in the session today as well. Is this profit taking? Is it positioning ahead of Jay Powell? Or is it a concern about valuations, or possibly a mix of all of those factors? Nasdaq 100 futures right now pointing lower by 123 points, looking to further sell off by 0.5%. On the S&P 500, you're looking at a drop possibly at 20 points. Before we get there, of course, European futures, after a decent session yesterday, despite the pressure on defence stocks, ending the the day up more than 0.6% today, looking to erase those gains, pointing lower by 0.7% on the European Stocks 50 futures. Here in the UK, FTSE 100 futures currently pointing lower by around 15 points. The inflation data, of course, will be central in terms of thinking around the BOE, dropping at 7 a.m. UK time. Let's flip the board and have a look cross-asset. The pound then in focus for us today. Markets, of course, have paired all those bets around the BOE and additional cuts coming through in 2025 for the rest of the year. Those have been faded by the market. 134 right now on the pound. We'll see to what extent that adjusts around an inflation print expected to come in. Headline year-on-year for July, 3.7%. The pound currently a little softer by 0.1%. The dollar, though, 3 straight days of gains. 4.30 run right now on the benchmark US 10-year, largely unchanged. Stability in the Treasury markets in the session today. Brent at $66 a barrel, up 0.3 on oil. And gold also getting a modest lift after a bit of pressure in the last few days on the yellow metal, currently up 0.1%. So the tech sell-off continuing into the Asian session. SoftBank is a big part of that story. Let's get more from Paul Dobson, Bloomberg's executive editor for Asia markets. Bring us up to speed then in terms of the read across from the sell-off on tech in US into the Asian session, Paul.
Yeah, well, obviously, Asia's markets are pretty tech-heavy in terms of the gauges that we have here. And yes, we're starting to feel that follow through, particularly in South Korea, which is having a bit of a miserable week, but also in the Japanese tech sector. And, of course, industry leader TSMC over in Taiwan also taking on the nose, much as NVIDIA did in the US session. I think the SoftBank one is interesting. That's it also has a sort of parallel in the US, right? It's absolutely been flying higher in recent sessions, been on an absolute tear, and, you know, a little bit like a shooting star, it's now starting to fall back out of the sky. A lot like Palantir has been doing in the US, up over 100% year to date. But the last 5 sessions have been negative and starting to get a little bit more heavy as well. So I think that tells you that there is that sense that some of the most favourite stocks people are starting to take some money out of. There are a bunch of reasons to be cautious there, and definitely valuations and momentum are a couple.
OK, valuations and momentum. Paul, what is the assessment of you and the team in terms of what the catalyst was, if there was one, for the sell-off that we saw yesterday in terms of tech, US mega cap tech, the pressure on companies like NVIDIA, at least the stock, their earnings are out next week. Was there one thing that stood out to you and the team, or is it a collection of factors?
No, I don't think one thing, Tom, but I've been crowdsourcing the best answer to this question all morning. And I figured that there's several different things that are starting to accumulate that are getting people worried. First of all, obviously, we have the Powell speech at the end of the week. If he's not as dovish as the market would like to see, that would lift up yields, and that would be negative for the tech sector, for one thing. Plus, if the Fed's not actually going to cut, you know, then that's not great news for equities either. So I think that you have that weighing on people's minds. I think that you definitely have the momentum starting to falter. Volatility had drifted lower and lower and lower, so we were kind of teetering in a search of a new direction. So maybe down makes sense, particularly as this has been such a well-chased rally with the likes of CTAs, momentum following funds jumping on that bandwagon as well. So there's a few reasons there. There's also interesting things like seasonality factor. Retail traders in the US have been very active all the way over the summer period. This is the time of year when they start to drop out of the market a little bit, according to some research that's out there. And that would be interesting, you know, if they're not doing those day options, pushing the market ever higher, then maybe that takes some of the momentum out of there as well. I think there's one other factor as well, which is a better news thing, right? Everybody has been so worried about how concentrated the gains in the S&P have been this year, how it really has been the Magnificent Seven leading the charge. We've seen a bit of better news in the rest of the market recently. So while we had that sell-off in tech, 350 out of the 500 companies in the S&P index were up yesterday. So not all bad news. You know, maybe we're seeing a little bit of a spread out into some of the weaker and undervalued parts of the market as well.
OK, that's good nuance to that concern about the lack of breadth in the market stateside, in the S&P 500. We're seeing a bit of a change to that narrative yesterday. Paul Dobson, excellent. Thank you. Bloomberg's executive editor for Asia markets. Let's get more market analysis and bring in, of course, Valerie Teitel right now with Jerome Powell and Jackson Hole. That speech on Friday, Val, to what extent could we be seeing some repositioning on possibly caution around what Jay Powell may end up saying at the end of this week.
Yeah, yesterday's tech sell-off could be tagged to the fact that people are just taking off favored positions, crowded positions ahead of the biggest risk event of the week. Amongst these illiquid markets, we could see quite a jolt to the market. The question really is, Tom, what kind of pivot are we going to get from Fed Chair Jerome Powell? Is it going to be the dovish one that the market wants? Is he going to signal that the labor market has weakened, opening the door for a September rate cut and maybe a few more to follow? Or is he going to sound hawkish? This is a very interesting point made by our own U.S. economist Anna Wong overnight. I highly urge you to read her note on the terminal. She thinks that the Powell is going to come out hawkish and drop this framework that's been called the flexible average inflation targeting. Now, this kind of monetary framework allows the Fed to look through inflation being off target because they simply project it falling back to target. It was a very useful framework, Tom, when inflation was consistently missing to the downside, gave them a reason not to continue easing, but it's complicating the matters now with inflation above target. That could be a very subtle hawkish signal from the Fed chair. Or is he going to signal neither hawkish nor dovish? Maybe he could stress data dependence. We do have another NFP and another CPI before the Fed convenes on September 17th. So those are the kind of scenarios the market is penciling through. But take a look at what the market's done ever since that weak payroll print. When it comes to that 2-year yield, that rally has really contained. But since that hot PPI, we have continued to drift up just slightly, putting that September cut in doubt. We're now sitting around an 85% chance of that Fed cut in September. The market, though, is thinking this is a good risk reward and is adding to options in SOFR futures and front-end rates, betting on a major 50 basis point cut in that September meeting. So we are seeing a bit of two-way price action when it comes to how we're positioning. But take a look at what the political pressure has been looking like, Tom. The Fed is under substantial pressure. Still a lot of questions on how it's going to react in this next meeting to the substantial pressure from all over the Trump administration. A recent Truth Social out from the president saying that there is every sign pointing to a major rate cut. So we know where the administration stands. They look like they want a 50 basis point cut in September.
Yeah, brace yourself if we get a hawkish set of lines and a statement from Jay Powell, or a speech at least on Friday then, in terms of what the Trump administration and how President Trump himself may respond to any hawkish tilt from Jay Powell, if indeed that's what we get. The risk event of the week. Bloomberg's Valerie Teitel, thank you very much indeed. To Geopolitics, of course, a focus on what is transpiring around Ukraine and Russia. A package of security guarantees for Ukraine is now taking shape, with European leaders weighing sending troops as part of a potential peace deal. Ukraine's allies are hoping to strengthen Kyiv's position ahead of a potential meeting between Presidents Putin and Zelensky. US Special Envoy Steve Witkoff spoke to Fox News on US efforts to broker that peace deal.
It's our job to bring the parties together, to narrow the issues, and that's what President Trump does better than anybody. He's got a real sense. I mean, he's got a real sense of what it's going to take for Ukraine to meet in the middle and to move the Russians.
For more, let's bring in Bloomberg's Ros Matheson. Ros, do we have more details now in terms of what the shape, the nature of these security guarantees could look like?
What our reporting is showing is that there would be several stages potentially of these security guarantees. And the first one is simply to bolster Ukraine's troops and to bolster their training and to make sure that weapons are still flowing to Ukraine, and possibly backing that up by having troops from the UK, France, other countries in Europe inside Ukraine, helping with training and support, obviously quite some way from any kind of front line, but operating on the ground inside Ukraine. And that could number troops in their hundreds. But the key role here really would be for the US. What does Donald Trump mean when he talks about security guarantees, when his senior officials say the US is willing to be part of that? Because what Donald Trump is saying changes on a daily basis there. At some point, he even said, do actually need to give security guarantees to Ukraine? But it does sound as though the US is talking with Europe, with Ukraine, about things like intelligence sharing, making sure that's still going on, ways to ensure that weapons are still going to Ukraine, possibly providing air support, air cover for Ukraine. And that's something Ukraine had asked for earlier in the war. They wanted an air defense zone set up to help patrol the skies over parts of Ukraine. And NATO and the US said no. Is that now on the table? But that does seem to be quite some way down the track. At the start, it seems like a lot of these guarantees are simply about bolstering the existing level of weaponry and training for Ukrainian troops.
And Ros, do we have any more clarity as we look at the additional details around the security guarantees? Any more clarity as to when or even if this meeting between Putin and Zelensky will actually happen?
Well, it's certainly momentum seems to be towards finding a way to make this meeting happen. The Ukrainian leader says he's ready for it. Vladimir Putin, perhaps slightly more cautious on it, but at least reading the room, no doubt, on what Donald Trump wants here. So perhaps we'll agree to a meeting, but that's the bit that's a little bit less certain, is whether Vladimir Putin is actually eager to do so. And then when? Is it a matter of weeks? Is Putin going to drag the chain for longer on that? Because he's been very adroit at dragging the chain through this war in terms of getting towards a ceasefire. So does he drag this out? And then location. We're hearing, of course, the Swiss are saying they would give Vladimir Putin immunity if he flew in there and they hosted a meeting. We're also hearing that Budapest might be an option, that Hungary might say that they could be the venue for that, although they've been quite antagonistic towards Ukraine in this war. So perhaps Zelensky won't want to go there. Is it somewhere in the Middle East? It has to be really kind of a neutral setting for both leaders if they're going to go there. The question is maybe less location, but more timing. When is this meeting going to happen? Is it going to happen, as you say? Or is Vladimir Putin going to simply try and drag this out for longer?
OK, Ross Maddison, Bloomberg's chief Asia correspondent, in terms of the additional details that we've been getting on progress towards a potential peace deal, with serious questions that still remain, of course, and potential locations for that meeting between the presidents of Russia and Ukraine. Switching focus right now to the earnings story, with focus on PotMart, listed in Hong Kong. Of course, the stock is up more than 230% year to date. The maker of these Labubu toys that have somehow become a huge phenomenon. And the lines in terms of what we've been seeing from PotMart on the back of this, the stock is jumping. They came through with some earnings that beat. And the headline from the latest Bloomberg story is this: PotMart shares rise to a record as the CEO announces a new mini Labubu. So all those fans out there of the Labubu, you can rejoice. These are priced at about £64 on the website, at least some of the previous ones. The Labubu Time to Chill vinyl plush doll can be yours for just £64. This has been a phenomenon that has, of course, propelled the stock up more than 230%, now at a record high. A check on PotMart for you. Here's what else to think about today. 7 a.m. UK time. Inflation data out of the UK for July. As markets fade those bets around additional Bank of England cuts, will the price data today change that narrative? We'll break it down for you, of course. And before the market, target earnings, another gauge on the health of the US consumer. And at 7 p.m. UK time, we'll get those FOMC minutes. So more colour in terms of how Fed officials are thinking about the path ahead as that debate around September remains, and the build-up to Jackson Hole and Jay Powell's speech. You can get a round-up, of course, of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayB Go, or DAYB Go, on the terminal. And front and centre is a focus, of course, on the sell-off around tech and what has triggered that. Coming up, US Treasury Secretary Scott Bessent escalates his criticism of India over its purchases of Russian oil. We will have more on India's response to that pressure. Plus, later in the programme, we will look ahead to the UK inflation data out in just under an hour. I'll be joined by Bank of America's UK economist. Stay with us for that conversation. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. US Treasury Secretary Scott Bessent has indicated that the US is satisfied with the current tariff arrangement with China. When asked in a Fox News interview when progress in negotiations would be seen, Bessent said that, quote, "We're very happy with the tariff situation with China." He added that he thought the status quo is working pretty well. Separately, Besson escalated criticism of India over its purchases of Russian oil, saying India was, quote, profiteering from the oil purchases.
They're doing what I call the Indian arbitrage. They're buying cheap Russian oil, selling petrochemicals back out. Much of that is going to the richest families in India. We already have very high tariffs on China, and now India is going to see what it feels like.
For more, let's bring in Bloomberg's chief North Asia correspondent, Stephen Engel. Steve, it's pretty fascinating to see a Trump administration going a little softer on China, but ramping up the pressure on India. What else stood out to you in terms of what we've been hearing from the U.S. Treasury Secretary?
Yeah, there's a lot to unpack there, and essentially Scott Bessent giving the justification for increasing those tariffs on India from the 25 reciprocal to 50, so an added 25% because of India buying that cheaper Russian oil, which Scott Bessent says, as you just heard, they're taking it, refining it, and on-selling it to the tune of some $16 billion, profiteering, or the words that he used, to the benefit of the big conglomerates. You don't necessarily have to be naming, he doesn't have to be naming one, but obviously Ambani's Reliance Industries is the largest refiner, and they have been buying Russian oil. So that was the justification for adding those tariffs. Now, one would ask, why doesn't China have those tariffs? Because they buy more Russian oil than India does. But Scott Bessent essentially said India, before the invasion, Russia's invasion of Ukraine, was buying about 1% of its oil needs from Russia. Now he says that's 42%. So clearly there's been a massive ramp up of buying cheaper Indian oil, whereas China's numbers have been fairly, consistent. 13% before the invasion, 16% today, and they, according to Scott Bessent, have diversified their oil imports, not just banking on cheaper Russian oil.
And Steve, of course, this all comes as Wang Yi, the foreign minister of China, meets and has met with Modi over in India. What came out of that meeting?
Well, essentially, they're reaffirming that they are trying to build strength upon strength of their relationship, which has had a rocky history. 5 years ago, they had a border clash. They're going to try and, well, they've agreed to work through those differences and try and make sure that any border disputes in the future do not derail bilateral ties. Now, again, this is all against the backdrop, of course, of increasing pressure, like from what we just heard from Scott Bessent, from the Trump administration on the tariff front. You've seen growing cooperation within the BRICS nations, also the SCO, the Shanghai Cooperation Organization, which will be meeting August 31st and September 1st, this time in China, in Tianjin. I will be there bringing you the news. Last time they met was in October, I believe it was, when Modi and Xi last met. So that was right before the election of Donald Trump, but they kind of could tell that the storm clouds of protectionism were potentially going to rise. So they've been trying to build, bridge their differences and build strength in the face of those tariffs coming from the Trump administration. So Wang Yi met with, as you can see here, Modi. He met with the internal and external affairs minister, the national security advisors of India. He has now moved on to Kabul, Afghanistan, where there's a trilateral meeting being hosted by the Taliban, and then on to Pakistan, which is a bit of a tricky one as well, because, of course, that is a historical enemy of India. And so, again, India and China have to reconcile their differences over China's engagement with Pakistan.
Yeah, that long-running relationship, of course, with Islamabad. Bloomberg's chief North Asia correspondent,
Yes.
Stephen Engel, thank you for that update. Appreciate it, Steve. Thank you. Coming up, Tesla and BYD have a new global challenger. Xiaomi is looking to sell its first electric vehicle in Europe by 2027. We'll have more on that next. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast? Iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Welcome back to Bloomberg Daybreak Europe. Now, Xiaomi is looking to sell its first electric vehicle in Europe by 2027. It is a bid to take on Tesla and BYD globally after gaining traction with its Chinese EV business, which is less than 18 months old. Let's not forget that Xiaomi started off as a smartphone maker. Bloomberg's Asia transport reporter Danny Lee joins us with the details from Hong Kong. Danny, what did Xiaomi have to say about these expansion plans then?
Well, Xiaomi is looking to, it's setting its sights on Europe by 2027. This is all part of its global plan to really conquer many parts of the world with its very affordable, smart EV and, potentially take on the likes of Tesla down the road. Same for BYD as well. So really ramping up the competition, the relative success and over a short period of time it has had in China with its very affordable lineup of models. Wants to take that to Europe, and it believes it can do so in the coming years.
And you talk about Tesla there, Danny. How is Tesla trying to ensure that it can continue to hold that market share in China?
Well, Tesla's taking a twofold approach in China, and let's not forget, Tesla has had a real struggle in sales in many parts of the world, including China. And so it's released a new Model Y, six-seater version, slightly longer than the base model, and it's pricing it to perfection in a market where there's a huge amount of competition, trying to price its new Model Y relative to some of the domestic players. And so by doing so, it tries to give itself a bit of a lift in a very competitive marketplace, but it's still waiting for approval for its some of its like full self-driving products to try and get this driver assistance in the game to really uplift itself against some of the intense competition. But we still have to wait and see when the Chinese authorities will approve that.
OK, let's see if they can indeed price to perfection. Bloomberg's Asia transport reporter Danny Lee, thank you, on Xiaomi and Tesla. Meanwhile, thousands of firefighters switching focus right now, aided by soldiers and water-bombing aircraft, are continuing to tackle wildfires across Spain. The fires have killed 4 people and have burned an area more than twice the size of London. Temperatures have begun to drop, but Spain is still confronting one of its most destructive wildfire seasons in recent decades. Coming up with today's UK CPI report expected to show a tick-up in inflation. Is the Bank of England now done with rate cuts for 2025? Shonali Panani, UK economist at Bank of America, joins me next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The global rally stalls as Nvidia leads a tech stock sell-off. Investors look ahead to Jerome Powell's Jackson Hole speech on Friday. Focusing on the future, Europe weighs sending troops to Ukraine as part of a peace agreement, while Switzerland says it will offer Vladimir Putin immunity if it hosts talks on ending the war. Plus, UK inflation in focus, with data today expected to show CPI ticking higher, keeping the Bank of England on edge. Let's get to the markets then. And that sell-off in tech was pronounced yesterday. Nvidia dropping 3.5%. The Nasdaq 100 closing lower by 1.4%. And the futures pointing to further losses today. Nasdaq 100 futures pointing lower by 0.5%. In fact, S&P E-minis pointing lower by 0.3. And here in Europe, after a relatively strong session yesterday with gains of 0.6% by the end of the close, looking to fade that today. Pointing lower on the European Stocks 50 futures by 0.6. Here in the UK, the FTSE 100 futures pointing a little lower as well, down by 0.2%. So risk off across these equity markets, at least for now. Let's flip the board and have a look cross asset. Treasury's relatively stable. The pound in focus ahead of that inflation print in a little under 30 minutes. 29 minutes from now, we'll bring you that data. 134 right now on the pound. Softer versus the US dollar by 0.1%. Brent and oil prices are up 0.3% at $66 a barrel. And gold is getting a modest lift after some pressure on the yellow metal, currently up 0.1%. So to the UK, gilt yields rising to their highest in almost 3 months ahead of today's UK inflation data that could cement the case against the Bank of England cutting interest rates again this year. Joining me now is Shonali Fonhani, UK economist at Bank of America. Shonali, what are you expecting from the inflation story today and looking through towards the end of the year? How is the inflation story evolving in the UK? What is the stickiness around UK inflation at this point?
Yeah, sure. Hi, everyone. We are expecting inflation to tick up slightly, increase from 3.6 to 3.7. That's still going to be 10 basis points lower than what the Bank of England had in their forecast. So a bit of an increase, but maybe not as much as the Bank of England expected. The kind of components that are going to show an increase are going to be the usual suspects. Services inflation has been sticky for quite a while. So we expect it to tick up again from 4.7 to 4.8. And then also food inflation, which is something that has been, fairly sticky over the last few months. So those are the sort of things that we're going to look out for if we're going to see any upside surprises in any of those components. Clearly, that's something that's going to keep the Bank of England worried. And moving into coming months, inflation is likely to continue to rise. We do expect inflation to go up and sort of reach a peak in September. Our peak number is a bit higher than today, so around 3.7, which is lower than where the Bank of England has their peak at 4. But I think, that's where sort of the risk lies. And I think post-September is when we could start seeing potentially some easing of inflation into the Q4.
OK, so 3.7% is potentially the peak for inflation. That is the view for you and the team at Bank of America. Shonali, what breaks the back of services inflation here in the UK?
Yeah, I think what's been interesting is that, one of the components that explains services inflation is wage growth and the labor market. And if you look at that, there actually we are seeing some encouraging signs. We are seeing that the labor market is easing and there has been some encouraging easing in pay awards. Of course, wage growth still remains fairly high. It's not sustainable with a 2% inflation target, but it's moving in the right direction. And if you look at things like the Bank of England's agent survey, they say that wage growth is something that should tick down closer to 3.5% by the end of the year. Again, still high, but better than where we are today. But what's strange is that sort of wage moderation is not really been seen yet in services prices. And I think some of the reasons is also that there have been one-off factors in the budget that still keep services inflation quite elevated. We did see an increase in vehicle excise duty and water bills, the NICs rise. So all of those factors are keeping inflation sticky. So I think, we need to sort of see these components, work its way through the system and, hopefully going into next year as the labor market continues to ease and growth is weak, we could see some of the labor market, wage pressures which are moderating translate to some of the services moderation as well.
OK, but that's more of a 2026 story then. And yes, you and the team still have penciled November, Shonali, for the Bank of England. The Bank of England still goes with another cut in November. That is the forecast from Bank of America. What is your level of confidence in that forecast right now?
Yeah, I mean, I think after the Bank of England meeting that we had in August, we flagged that risk to our November call remains. It's a fairly close call. And I think a lot will depend on, what kind of data comes out in the next few months. I think, the sort of, the message from the Bank of England is that, we've been obviously seeing these quarterly cuts for the last few quarters. Now the path remains much more uncertain, right? It becomes much more data dependent. And what the Bank of England is worried about is this sort of uptick in inflation that we're going to see in coming months having sort of an effect on inflation expectations. So that's something that we have to monitor fairly carefully, though I would say that the bank still thinks that the path of rates is downwards. Their forecasts are based still on 2 more rate cuts. They say that, the rates are still restrictive. So I do think that there are, rate cuts that are, coming. Obviously, the timing of it is more uncertain now. I mean, we still have November as our base case, but, conviction on that is low. And one thing we have to also think about is the fact that we have an autumn budget coming up. We don't really know the date yet, but, most expectations are that there's going to be tax rises involved in order to sort of restore the headroom. And that's something that could be sort of, negative for growth, which is something that can also support a rate cut going into coming months.
Okay, interesting. Well, on that growth piece, and acknowledging the uncertainty, of course, around that upcoming budget, what is your current assessment in terms of how the growth story for the UK changes through 2026, given that Q2 came in a little stronger than some had expected?
Yeah. No, look, I think the Q2 numbers came stronger than expected, as you said. But if you look at the details of that number, I think they're weaker than what the underlying numbers are suggesting. So the majority of the increase in growth came from government spending, which is, what was sort of supported by the fiscal stimulus that was announced in October's budget last year. So a lot of government spending and also inventories. If you look at private domestic demand, consumption, business investment, that remains fairly weak, and as well as sort of goods exports to the US. So I would think that, the overall underlying trend of the economy is still weak. And going forward, we do, think that, we're going to get trend-like growth levels in the sort of rest of the year, because these tailwinds are there of fiscal stimulus. But at the same time, we have some headwinds from, the NIC story, as well as consumers being fairly cautious and businesses being fairly cautious ahead of tariffs, as well as of the budget. So I think it's a fairly kind of unimpressive story for the second half of the year, sort of trend-like growth. And we have sort of a forecast of 1.2% for this year and about 1.3% for next year.
OK, really smart insights ahead of this inflation data later today, with the expectation that inflation in the UK peaks at 3.7%, growth of maybe 1.2% in 2025, and further cuts for the Bank of England, though timing remains uncertain. Shonali Punhani, UK economist at Bank of America, thank you. Staying with central banks, but switching focus to the Federal Reserve, where the Governor, Michelle Bowman, has brushed off speculation that she is in the running to succeed Fed Chair Jerome Powell, saying she's focused on her regulatory portfolio. Bloomberg spoke exclusively with the Vice Chair for Supervision ahead of this week's meetings at Jackson Hole.
Well, right now I'm committed to doing the job that I have, and we've really hit the ground running with our request for information on check fraud and other payments fraud, with the SLR proposal that we just put out, the LFI rating system. We're taking a really hard look at our supervisory components and across our reserve banks, as well as at the board, to ensure that we're focused on material financial risk. So I have a big agenda. We're moving through it quickly. Obviously, we need to get the capital proposals completed in the near future. But, I'm really focused on the job that I'm doing, and I'm grateful to the president for appointing me and the Senate for confirming me to this role. So that's what I'm focused on right now.
Well, some Republicans on Capitol Hill have suggested that we should change this three-headed regulatory system and maybe take regulation away from the Fed. What are you telling them, and what do you think the odds of something like that happening are?
Well, I think the most important part is to remember that we have a banking system that's a dual banking system. So we have national banks and we have state chartered banks. And the FDIC and the Federal Reserve oversee those state chartered banks together with the state banking commissions. So I think it's important that we maintain the ability to oversee both the state chartered banks and the OCC with the national banks, and that we have a rational framework framework that is very similar for all of those banks going forward. So there's not arbitrage between the three regulators. But Congress is obviously responsible for making any changes to that system. So, we'll be working closely with them to ensure that they understand what we're focused on and what we're doing that's supportive of the efforts of all of the agencies together.
So you come out to Jackson, but you also go up to Capitol Hill a lot.
I spent some time on Capitol Hill, absolutely.
Okay, the Fed's Michelle Bowman speaking exclusively with Bloomberg's Michael McKee. To Denmark now. The health of Denmark's economy has been underpinned by Novo Nordisk, its most valuable company. But Novo's recent struggles in the competitive US weight loss market, raising some red flags. Shares of Ørsted, Zealand Pharma and Pandora have also taken fairly large hits as well. All of this then having potential impacts across the economy of Denmark. Let's bring in Bloomberg's Copenhagen bureau chief, Sarah Sjolin, for the details on this. Sarah, Danish GDP then expected to take a hit from falls in Novo and some of the other major listed companies, including Ørsted, the wind turbine maker. How sizable could it be? How much of a drag could these companies prove to be for Denmark?
Well, they're definitely going to be a drag on economic growth this year. Before we had the Novo Nordisk profit warning in July, economists were pretty confident we were going to see Danish growth around 3.5% this year. But after they came out and said that their own sales growth was going to be a lot slower than expected, economists are now saying we could see annual growth around 1% in Denmark, even less. So we're coming from a really high point, at least in European standards, and then we're going to, and then it's slowing down. We did see for the first quarter, we also had negative growth for the first time in a long, long time. So we are in a situation right now that if today we get a negative number, which we don't expect, but if we do, we could see Denmark slide into a technical recession. And that's for a country that last year had one of the highest growth rates in all of Europe.
Yeah, so what the projection for growth is 2.5% in 2025, because that does seem otherwise pretty enviable from where we're sitting at least.
Yeah, but we're used to something different, right? We came from 3.5% last year. We have this growth engine of Novo Nordisk. It's this national pride that brings us a lot of jobs. It brings in a lot of revenue. It also brings in a lot of taxes. So for us, it's been this one company that has been shining above everyone else. And now we're seeing that, well, don't get me wrong, they're still performing well. We're still expecting a lot of growth in the company. It's just that we have to manage expectations and bring those a bit down.
Yeah, and certainly expectations have been managed, haven't they, on Novo, with the stock price down a little over 40% a year to date. How is this tying into consumer confidence? Because, of course, a lot of Danes have exposure, personal exposure to some of these big companies and these major stocks. Is that a factor in terms of consumer confidence and what to expect in terms of the latest data?
Well, it could be. Tomorrow morning, we'll get the consumer confidence for August for Denmark. And all of this stuff with Novo Nordisk, we also had the Ørsted capital raise just last week. It could hit consumer confidence in a way that we're not going to see it in actual data or anyone letting go of their jobs yet. But it's just the feeling that we had Novo shares. They were at a record high, and now they actually pared down 60% from the record high last year. So if you came in on the wrong side of that, you could have potentially lost a lot of maybe unrealized money at this point, but it could hurt people in a way, saying we're not going to go out and buy that new car. We're going to maybe wait until they get a new deck for the house until next year. Because we have seen for a lot of normal Danes, like mom and pop investors, they have used the dividends and the gains from the Novo shares to literally build out their houses.
Yeah, wow, remarkable story. Bloomberg's Copenhagen Bureau Chief, Sarah Sjolin, thank you for the latest on that front. We look ahead to the consumer data then, the linkages between the feelings, the sentiment amongst Danish consumers and some of those mega cap stocks, of course, like Novo. Now, some of the stories making the news this Wednesday. Bloomberg learning that the private equity owners of Stada ArcelorMittal are resuming preparations for a listing of the German drug maker after talks stalled on a potential sale to Capvest partners. Bain Capital and Cinven, which jointly own Stada, have started gearing up to hold an IPO of the business as soon as October. The previous talks were at a valuation of about 10 billion euros, including debt. And Bloomberg understands Intercontinental Exchange, or ICE, will not add EU joint debt to its sovereign bond indexes. It's a blow to the bloc's ambition to attract a larger pool of investors and lower its borrowing costs. It's a notice to clients seen by Bloomberg. The US firm cited a lack of consensus on how best to classify the issuer. The EU is currently treated as a supranational entity by major index compilers, leaving borrowing costs higher than those of governments with similar credit ratings. And Syrian state media is reporting the country's foreign minister, Saad al-Shaibani, has met with an Israeli delegation in Paris. The two sides reportedly held US-mediated talks focusing on stabilizing the situation in southern Syria. Talks also tackled de-escalating tensions as well as stopping intervention in Syria's domestic affairs. Coming up, we're going to look at whether Senegal can secure new funding from the IMF to stabilise its strained public finances. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. An IMF mission is heading to Senegal to discuss concrete steps to address recent financial data issues. Investors are watching to see if President Faye's administration will get closer to securing the new funding needed to stabilise that country's strained public finances. For more, let's bring in Bloomberg's Jennifer Zabasaja joining me from Johannesburg. Jen, why is this IMF mission so important to Senegal then?
Yeah, Tom, good morning to you. This is an important trip, not just for the Senegalese government. It's also for private creditors and for multilateral lenders alike. Now, this is, as you were alluding to there, really sort of the culmination of what we have seen Africa, one of Africa's the fastest growing economies, really taking a downturn after this unreported data, as you were just alluding to there. That unreported data actually leading to the suspension of the country's $1.8 billion IMF program. And also a subsequent ratings downgrade. And so many people are watching for what this trip then means for the fiscal situation for Senegal, especially as they've at least tried to right the ship over the past few weeks. And it's so much so that we actually have heard from city strategist Luis Costa, who says that Senegal is one of the most indebted sovereigns in their space. And so here's the way that we're looking at it, Tom, from our vantage point. It is important that the IMF and that this mission is engaging with the country. We've heard the country say that talks have been constructive, but the real focus will be on whether or not the country is able to convince investors that they're committed to transparency and that a situation like this, as this full screen is just showing, will not happen again, but then also that they are committed to fiscal stability. And in some cases, that means taking some measures that potentially will not be popular with the electorate, like cutting off subsidies. We've seen that go over not so well in countries like Nigeria and Kenya. And so the question will be, is President Faye's government actually committed to this? And then what does that mean for a potential new program and also for a waiver for about $700 million that was already dispersed to the country? Will they be able to get the approval for that waiver? And then talks will start on whether or not a new program will then happen. And so it's very important to a number of us that are watching this very closely, and also for the stability of a country that many people were saying was on the path to massive growth, a major energy producer and oil producing country in West Africa. So a lot to pay attention to in that sense, Tom.
Jen, just briefly then, how did Senegal get into this mess?
It depends who you speak to, especially the people who I'm speaking to. But really, from the Bloomberg perspective, it started from this audit that we saw from the new government, President Faye's government, which then uncovered, as we were mentioning there, $7 billion of unreported debt from the previous Macky Sall administration. That has, again, led to a ratings downgrade and shot up key fiscal metrics like their debt to GDP ratio, which went up above 100% for 2024. So it's really caused a lot of headache for the government. But Tom, before we go, I just want to note some of the positives that we have seen here, because President Faye and his government have unveiled economic programs. They say that there is an opportunity potentially to renegotiate contracts, oil contracts, and also potentially put more taxes on the electorate, cut off some subsidies, and potentially then they're able to get into a better situation. And President Faye ran on this campaign that he wanted to ease the cost of living and cut out corruption. And so we have seen him at least try to take some legal steps with the previous administration. And so it really has been quite a difficult situation for this new administration. The question will be, where do things go from here? And are they actually able to fulfill a lot of the promises that they made in the campaign and also that they're making to investors right now?
OK, watch this space. Bloomberg's Jennifer Zabasajja with the latest on Senegal and that visit by the IMF, that mission by the IMF. Joining us out of Johannesburg, Jen, thank you. There's a lot more coming up. I'm going to preview some of the inflation data expected out of the UK in the next couple of minutes and also give you some colour in terms of the tech sell-off that we saw in the US session yesterday. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So this was the pain trade yesterday. It was focused on Mag 7 and it was focused on Nvidia. The Nvidia market cap weighting, of course, $4 trillion. And that weighed, of course, on the NASDAQ 100 and weighed on the Mag 7 basket of stocks. That sell-off of around 3.5% from Nvidia and the NASDAQ 100 closing lower by around 1.4%. Is this a valuation concern story? Mag 7, they're trading as a basket. In fact, the NASDAQ 100 is trading at about 27 times forward earnings, 12-month forward earnings. So is it concern about evaluations? Is it some profit taking? Is it hedging around Jay Powell's speech on Friday? The Nvidia story, of course, will give more colour on that next week with the earnings story out of that company. Let's flip the board and have a look at what's happening with Intel, because with that injection of capital coming through from SoftBank, potentially a 10% equity stake coming through from the US government, and suddenly you have valuations, talking of valuations, of Intel at the kind of levels we have not seen since 2002, the dot-com era. You've seen the stock up about 28% in the last month. That has added about $24 billion to the market cap of Intel. It's now trading, at about 53 times projected profits over 12 months. Is that a word of caution, a signal of caution around Intel, as its fortunes seem to have turned around, at least in the last month or so? Let's flip the board and have a look at the preview around inflation out of the UK. Headline July, 3.7% is the number. Core, 3.7% as well. On a headline basis, you're expecting a marginal tick up then from June, 3.7%. The Bank of England is projecting that September you peak at 4% here in the UK on inflation. Of course, markets have faded those bets around the Bank of England. Bank of America telling us earlier they still think the Bank of England can go again in November, though they are cautious now on that timing. That inflation dropping in the next few minutes. Bloomberg terminal users can get these, of course, on the terminal. The opening trade is up next. This is Bloomberg.
News when you want it with Bloomberg News Now. I'm Anna Edwards.
And I'm Stephen Carroll.
Analysts are raising concerns over private credit as default warnings begin to pile up in the $1.7 trillion market. Default rates for the market are currently in the 2 to 3% range, but new analysis suggests this doesn't tell the full picture, as Bloomberg's James Woolcock reports.
Money has surged into private credit in recent years, then interest rates shot up. With many businesses unable to pay, private lenders use tools like payment-in-kind loans, where rather than being charged interest, the sum gets added on to your final debt. Analysts call these agreements shadow or selective defaults. They say when you take these private arrangements into account, the rate of defaults in the space doubles to between 5 or 6%. That has spooked many, including regulators who fear it hides stressed firms and could be the prelude to a bubble. In London, James Woolcock, Bloomberg Radio.
Federal Reserve Chair Jerome Powell will deliver his key policy speech in the coming hours, which investors will examine for signs the central bank plans to cut interest rates next month. Rates have been on hold since December as policymakers worry about sticky inflation and the possible impact of tariffs. Speaking to Bloomberg, Chicago Fed President Austin Goolsbee said he's hopeful the latest inflation print was a one-off.
The last inflation report that came in where you saw services inflation, which is probably not driven by the tariffs, really start shooting up is a danger. That's a dangerous data point. I'm hoping that that's a bit of a blip. So I think we still have a fair bit of information that we're going to get before September or the whole fall to determine what path we're going to be on.
Goolsbee's comments come as Jerome Powell faces mounting pressure from US President Donald Trump and other White House officials to resume cutting rates. Meanwhile, reporting from the Wall Street Journal suggests the Fed chief will also use his speech to make changes to the framework the central bank uses to set rates, reversing some of the changes that had focused on risks associated with near zero rates. You can listen to Jerome Powell's speech live here on Bloomberg Radio at 3 p.m. UK time, with full analysis and reaction to follow.
Nvidia is said to have told its component suppliers to halt production of the company's H20 AI chip designed specifically for the Chinese market. According to the information, which cites unidentified sources, Nvidia issued the orders this week after Beijing urged local firms to avoid using the chips. CEO Jensen Huang says his company is in talks with Beijing.
U.S. government, the Trump administration, has approved licenses for us to export H20s to China. Recently, China asked some questions about some security backdoors in our chips. We have made very clear and put to rest that H20 has no security backdoors.
Jensen Huang speaking there in Taipei. The H20 is a less powerful version of the company's cutting-edge AI accelerators and was designed to comply with US export controls. However, any suspension of production would raise fresh questions about underlying demand for the product, and Nvidia stock falling in pre-market, down by 1.7% out of the gates this morning.
The European Union and the United States have agreed more details of their trade pact announced last month. The two issued a joint statement setting out specific benchmarks for the EU to secure tariff discounts on cars, pharmaceuticals and semiconductors. The EU's trade chief, Maroš Šefčovič, says there's more work yet to be done.
This is not the end. It's the beginning. This framework is the first step, one that can grow over time to cover more sectors, improve market access, and strengthen our economic ties even further.
Šefčovič and other EU officials have been criticised for failing to get lower tariffs on wine and spirit exports to the US. One White House official says lower tariffs on EU goods could be in place within weeks.
The British government will buy 6 new air defence systems to deploy near Ukraine. The UK's Ministry of Defence says it is signing a £118 million contract with European arms manufacturer MBDA for the kit. It comes as European and US defence chiefs meet to discuss what security guarantees they can offer Ukraine if a peace deal is reached with Russia.
UK consumers are the most optimistic they've been about their household budgets in a year, according to a closely watched survey. Bloomberg's Chris Pitt has more.
The UK has faced something of a heatwave this summer, and it appears that Brits are also warming to the outlook for their personal finances. GfK's index tracking sentiment for the next 12 months rose to 5 in August, up 3 points from July. The recovery in household confidence suggests the Bank of England's efforts to ease borrowing costs are finally filtering through to the real economy. But it's not all clear skies ahead. GfK's Consumer Insights Director Neil Bellarmine warns improvements in sentiment remain fragile, with, quote, clouds on the horizon in the form of inflation and rising unemployment. In London, Chris Pitt, Bloomberg Radio.
That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Anna Edwards, and this is Bloomberg.
Oh, it's hanging over. It's the exact correct language. There's no question about it. You still have the normal cadence of Jackson Hole. For example, there's 6, 7, 8 papers that come out. Michael McKee prints them out perfectly, and he reads every page of the academic papers. Guess what? I don't do that. I'm talking to the reporters here gathered, and you're right. At the top of the pile of topics here is Lisa Cook.
So I spoke to Mike earlier. He said she's expected to arrive. She hasn't arrived yet. Does it take away from Fed Chair Powell's message tomorrow? Does it distract from what he says about this economy and what he indicates or not about September?
It's a really fair question. I don't think so. I think Michael McKee, who's better at this than I am, would say exactly the same thing. What is different here, and our Simon Flint in Singapore absolutely nails it in an essay today, what's different here is the hard facts of the moment are catching up with the chairman. I don't know if they're rewriting the speech tonight with the stars out above the Tetons, or maybe they're writing it on the airplane. But what is very clear here is the hard facts, as Mr. Flint says, have caught up. You have the economic data today. You got concern about inflation. And Tim, the number one thing I'm watching off the Bloomberg here is the 30-year bond. Once again, we're making a dash up near 5%. That's a kind of inflation whispers that have to change the speech.
Tom, of course, you mentioned the chairman will speak tomorrow at Jackson Hole. Can you just tell us a bit more about what attendees are really looking to hear from him?
It varies every year. There was one year here, I'm going to say 3 years ago, I can't remember, where we were prepared for a 15-minute, 20-minute speech, and I believe he spoke for 8 minutes. So every year is different. I think the pageantry will be here. There'll be an international audience here. Christine Lagarde or Mr. Nagel of Germany is here. Bailey of the Bank of England scheduled as well. But what's interesting is within the pageantry, what do you expect from a speech? And the answer is they'll be looking for certain nuances and certain single sentences that will be different. What you're not going to get a lot of is what's he going to do in September. That would be rude. He's not going to do that here.
You mentioned a lot of those international voices. I mean, the ECB, we've got Bank of Japan, emerging markets. How are they playing a part of the conversation this year in particular?
Nora, you know my theme. You're already stealing my theme as we go to tomorrow with Lisa Abramowitz. To me, the international angle here is the importance point. William Rhodes, Bill Rhodes of Citigroup, iconic at Citibank, it was called Citibank back then, had this great phrase, central banker to the world. He took it from academics. This is a Jackson Hole where Jerome Powell is the central banker to the world, is he defends delicately the way we've done banking for years, pushing against President Trump. The theme internationally here of central bank independence will be key.
I think also the theme of labor, Tom, and it's something that we've spent a lot of time talking about in recent weeks, especially since that shocking report came out earlier this month about those numbers for the month of July. And it's really shifted the conversation about what employment in the United States and what healthy employment numbers look like in the United States, where borders are closed, immigration, legal and illegal, is down, and growth among American families is not what it was a couple generations ago. What does that picture look like in terms of reshaping the American workforce?
Well, and reshaping the speech as well. It's a movable feast right now, Tim. The number one thing is we've seen a trend in the data. The conceit is labor data always lags. Okay, fine. And we've seen this trend, including continuing claims today. Bramo put out on Twitter, I was, stuck in an airport somewhere. Bramo put out on Twitter that great continuing claims chart, which shows this explosion up in the weekly data. That's the kind of tea leaves that gets a Fed to shift. President Trump wants them to shift quicker. And let's remember, we've got that jobs report early September before Mike McKee's in that press conference, September 17th.
Well, I want to just talk about the energy. I mean, you've been to so many of these symposiums. What's the energy like on the ground this year in particular?
Quiet. First thing I noticed when I walked in, there's a whole new quiet tone to it. Mike McKee and I remember August of 07, which was, I think, I'll say 7 days after LIBOR OIS went out 4 standard deviations. This place was chaos. My guess is a lot of people are coming in tomorrow morning, and tomorrow morning here at the Jackson Lake Lodge will not be quiet. There'll be a real turnout for the speech. With that said, it's one part academic, but it is one part about this attack on the central bank by President Trump.
You're in San Francisco, really digesting what seems to be a focus on LLMs, still on the frontier research, but then there's the application of this research and the infrastructure, of course.
No doubt. Yesterday, we were able to obtain a memo that was shared by Alexander Wang, the new chief of Meta Superintelligence Labs. And he's really laying out the new structure for this organization after weeks and weeks of an incredible effort to hire talent. As you might remember, Caroline, this is hundreds of millions of dollars, sometimes nearing $1 billion in total compensation for individual AI researchers. And now they are finding their home within Meta, within these 4 teams.
Yeah, and the home, how are you seeing the perhaps what some have reported behind the scenes of some jostling or discomfort with what had been suddenly incredibly expensive talent coming in and a reorientation of where the focus is? Does this help better align that talent and actually push forward? And ultimately, is it open large language models, for example? Are they going to delve into closed ones potentially?
That is a burning question for all of us. What we do know is that one team will continue to be dedicated to large language models, the Llama product that underpins Meta's AI efforts broadly. And the one team that I really am keeping an eye on is the infrastructure team. Mark Zuckerberg has pledged to spend hundreds of billions of dollars specifically on AI infrastructure. And now we are seeing talent from within the company go and lead that specific effort. We expect more capital to be deployed there this year and then certainly next.
In a world of seismic change, will your business shape the future or be shaped?
For so many years, Oracle was seen as this kind of legacy company like IBM or, these kind of ones that were heroes of a past era. And they've really been trying to reinvent themselves around the cloud, not always successfully. And what really changed it was AI, right? They have managed to make themselves a go-to destination for training these AI models, which requires just, incredible levels of investment, right? Tens of billions of dollars per site. And they've managed to establish themselves as the place where you go to do that, right? Companies like OpenAI, NVIDIA themselves is paying Oracle a lot of money to set up data centers for them. And so they've managed to reinvent themselves and, essentially double their stock price in the process over the last year or so.
I mean, you just said it. They're betting big on the cloud and on AI, spending tens of billions of dollars on these huge data centers. So talk to me about what that means in terms of longevity and margins in their cloud business.
Yeah, the margin question is a big one. We have in our story today that Chief Executive Officer Safra Catz for a long time said, y'all, I'm not sure about these margins, right? I mean, they're used to selling on-premise database software that you pay upfront for. I mean, it's one of the most great cash cow businesses in history.
Sure.
And then now you go to a business model where the margins are very slim, right? And so right now their cash flow has gone negative for the year for the first time since 1990. Wall Street anticipates that this is a spending cycle and then all the revenue starts coming in and, you're able to compound at a pretty incredible degree, but it requires a level of investment that is completely unfamiliar to the average software company.
So just to give you some numbers around that, CapEx for these guys has been, for the last few years, 4, 5, 6 billion.
Yeah.
This year, forecast 25 billion. Next year, 31 billion. I mean, that leads to, as you mentioned, negative free cash flow for the first time since 1990. But it appears that tech investors today, this AI story, it's kind of build, baby, build almost.
Exactly. They want to see growth, right? Oracle, the database is effectively a stagnant business, right? I mean, and they could hold on to that for a long time, likely, but that's a flat business. And so the fact that now they're going to be able to say that in 2029, this cloud is going to be our largest business line, that's a really big reversal of fortune. It requires a ton of money, but the idea is you pass it on right to customers, right? You spend tens of billions of dollars on the chips and energy, but then OpenAI comes around and gives you a deal worth tens of billions of dollars per year. And so the majority of their backlog is in this AI work, and all indications say that it should start flowing.
What a complete shift is this for the gaming industry? Because consumers are going to be able to use it, but what does it mean for the actual studios too?
Yeah, it's massive. It's a big change in the same way that AI was a big change for Hollywood as well. And now it's important to understand and recognize the two parts of how AI is affecting games. On the one end, you have the real-time rendering component of it that we're working towards, which basically means you're going to be able to create pixels in a real-time manner. And the other one is the mechanics, right? So how do games manifest itself? What are the interactions that users will have with them, from consumers to pretty much everyone? And so Game World for us is kind of like an exploration and our first product in the mechanics of non-linear stories with AI, creating these worlds in real time and having players experiment with them.
I mean, I think about the first time that we first started bringing you on the show and hearing from how much you were, disrupting Hollywood, but Hollywood has now come to embrace you, Amazon using it in their latest works that they're doing and creating, Cristobal. How has the gaming studio reaction been? Has it been bristling or has it been accepting?
It's somehow very similar to what I think Hollywood went through a year and a half ago. I think it's totally new. It takes time, but now I think most of them have started to embrace it and understand it. It's a radical technology. It changes how you do your work, and you need to embrace it. You need to understand it. There's things that work really well. There's some things that don't really work really well. But really, it's about using it more. And so I would say that games and the gaming world is where I would say Hollywood was a year ago. And now, as models progress, get better, and become more usable, you start seeing most of those companies now starting to adopt it.
I mean, you can see the impact because it's being used in features by big tech companies and big filmmakers, Cristobal. But how are you measuring impact for those that are about to take it on? Look, we're all talking about this MIT study about whether or not 95% of these pilots for generative AI are failing. How do you prove out that your technology adds value?
Yeah, well, you have to make sure it helps users somehow. And look, there's a challenge, and I think the challenge that I think media and Hollywood recognized over time is these are not tools that will make movies for you. And I think that was a big assumption at the time, where like many people thought you just came into Runway, type movie, and you get a movie out. Unfortunately, that's not yet what the technology is doing. It's much more about you being in control and you spending the right time, but also you need to rewire your brain a little bit. You need to retrain the mental models of how this technology can help you. And that takes time. And so how we manage through that change with our companies and customers and users is we help them. Sometimes we go and work alongside them. We have technical artists that you can think about them as like forward deploy engineers that sit together with our companies and users and enterprises and help them understand how Runway can fit in particular parts of their workflow. Your Aleph, for example, is our latest video generation model that allows you to edit video in ways that you just couldn't do before. And it works completely different from anything you've seen before. And so it's not going to work based on what you know. There's an adjustment period. And that adjustment period is critical. For me, it's very similar to perhaps how the cloud was a big change for companies. Like it requires you to redo and reorganize some of your teams to prepare for this.
I'm talking about reorganizing teams. I mean, Mark Zuckerberg's been busy at that. And we understand that previously he'd perhaps eyed up Runway, wanting to be able to buy that to bring in for the AI prowess. You knocked it back. That's off the table. But how many offers are you getting for Runway? And how are you comforting your employees that you might not jump ship?
Again, I've been working on this for like almost 7-8 years, and I think we're now hitting an interesting inflection point. It's getting too exciting for us to like think about not being independent. Like we want to remain independent. We have the resources we need. We have the best team in the world doing some of the best research in the world. Now is an inflection point in both quality, adoption, penetration. It's a really exciting time to build Runway, and I think there's still a long way to go for us.
You can't talk about Open Door these days without mentioning Eric Jackson, founder of the Toronto-based hedge fund EMJ Capital. He's been making a series of posts on social media encouraging people to buy, and he's taken the posting to a new level. Today, for a second day in a row, standing outside of the Canadian rapper Drake's home, he's got a whiteboard asking him to buy a single share of Open Door. You can actually see on the screen right now the video that he uploaded to Twitter, X, of Eric outside Drake's house. Eric, you got a PhD in management from Columbia Business School. At what point, what was then Urus Hall, did you study trying to get a celebrity to buy a stock?
Ain't too proud to beg, Tim.
Okay, there's the answer.
Wait, tell us who inspired you to do this again?
Was my 16-year-old son, Julian. So I have 4 kids. And Julian, he's my free marketing manager. He hasn't asked me for a dime, or I haven't offered it. And he has great ideas when it comes to, like, the other day somebody sent me a message and saying, I'm a big TikTok star. Can I do a live TikTok interview with you next week or something? And like, I had no idea who this guy was, so I passed it off to Julian. He did a quick, few taps and stuff, and he's like, "Oh yeah, this guy's legit. It's okay to talk to this guy." So yeah, he's my go-to.
So do the people you're speaking to buy your story? Your story is about fundamentals. You do not believe this is a meme stock. We've spoken to you quite a bit over the past 6 weeks or so. Does it seem like your message about this is it's what?
I'm going to say it's a cult stock.
Okay.
And there's only 2 recent cult stocks that I'm familiar with. Maybe you guys can think of some. Palantir and Tesla. And that's now Open Door's taken the mantle from them, and they're too big. They're, basically when whatever they are now, and they're going to run with this. And a cult stock is not a bad thing if you look at the performance of those stocks when they were called cult stocks.
So what is the differentiation between a cult stock versus a meme stock here?
Well, we love memes, Nora. In the community, we call the Open Army now. That's become like the new name for like this a worldwide phenomenon of all these retail investors that have bought open shares. And every day I got a new country. Today was Macedonia and U.S. Virgin Islands, actually. But yesterday was Tuvalu, and then Afghanistan the day before, Antarctica the day before, Greenland has come. It's now getting to the point where like the countries that haven't bought open shares are like more the exception. And so like what does it mean like that we love memes. I think we're hardwired as humans to communicate through stories and narratives. And Anthony Pompliano, who's now an investor in Open Door, he had a great quote a couple of days ago, which is that, the ultimate meme stock is really Berkshire Hathaway, because when Warren Buffett announced that he was stepping down, the stock dropped 10%. Why? Because the narrative around Berkshire changed. So, but like most of the pejorative way that meme stock is used is to talk about AMC, GameStop, BlackBerry, GoPro. I don't know if American Eagle was for a half a second there. Like donut, what was it? Krispy Kreme donuts.
Right.
So like all of these are terrible businesses. You couldn't pay me to buy the stocks in any of these companies.
So we had quite a
Open Door's a legitimate turnaround story, just the way that Carvana was,
So
just like the way that Palantir and Tesla were.
Eric, you talk about legitimacy here, and I know when we've spoken to you previously, you mentioned fundamentals. That's really what the trade is here for you, I understand. And of course, Twitter is great and all, but I want to get back to the fundamentals here. What do you think is going to happen between now and that $82 price target that you are kind of touting for the stock here? What are the fundamentals driving it?
Well, I'll say like the most valuable thing, Nora, about Open Door, and I didn't realize this when I first published my first tweet about the $82 price target on July 14th. But what I've come to realize is the most valuable thing Open Door has going for it is that in the last 12 months, 1.5 million Americans have come to Open Door and asking for a specific bid for their house. And so that's the mother's milk for this business. That's something that Rocket doesn't have. It's something that Zillow doesn't have. They have buyers. Looky-loos is a term I've heard, going to their sites, but they don't have sellers wanting to transact. 1.5 million is enormous, although it could get a lot bigger in the coming years as their market share in the U.S. grows, because of the $20 trillion U.S. residential real estate market, 14 trillion of which is tied to a mortgage. And and you say like, why is that important? Sellers, or it's kind of like saying why are the people that search in Google and the search bar important? Because all the other value, flows from that intent. And so that's what's important. And so like if you look at it that way, and then you sort of back out from that number, how much of that volume can be monetized, what take rate, you get to an enormous number, certainly a lot more than $3.60 or whatever it is today.
So, Eric, I want to quickly give you a chance to talk a bit about what, of course, we know was an interesting moment where Carrie Wheeler, the former CEO of Open Door Technologies, decided to step down. Of course, we know she got a lot of heat and pressure from a lot of retail traders, a lot of investors overall, forcing her and wanting her to do more for the company. What's your reaction to that, and what do you expect moving forward for the company? Quickly.
It's what I called for after the earnings call that I thought was disastrous. I thought she was not up to the task of leading this company. Like maybe she cut some costs and did some good things in the last 2.5 years. Although I think it's inexcusable that she did one media interview in her 2.5 years plus as CEO of this company. It's just like, who does that? Who doesn't do that? And so she just wasn't a good communicator. She's a finance person. They need a product tech person going forward to take this company from, this was a 51-cent stock on June 25th. And it should be an $82 stock today. I mean, it will be, shortly. And so, it was great that she left of her own accord and it didn't try to fight it and, claw her way, stay in the CEO office. Now that they have to turn to finding the right person next. And I hope they bring in Keith Raboy and Eric Liu, both are co-founders, to the board to help select the next CEO.
Eric, we only have 10 seconds. We only have 10 seconds. The stock up 575% since June 1st. Since July 1st, excuse me. Have you sold any?
No.
When will you sell?
I don't think it's 82 yet, Tim. I mean,
right.
if they put some effort into this could be a $500 stock.
Oh wow, $500. Okay, the all-time high was back on February 12th, 2021, 34.59.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Wednesday. These are the stories that set your agenda. The global rally stalls as Nvidia leads a tech stock sell-off. Investors look ahead to Jerome Powell's Jackson Hole speech on Friday. Focusing on the future, Europe weighs sending troops to Ukraine as part of a peace agreement, while Switzerland says it will offer Vladimir Putin immunity if it hosts talks on ending the war. Plus, UK inflation in focus, with data today expected to show CPI ticking higher, keeping the Bank of England on edge. Let's check in on the markets then. The tech sell-off is the market story of the moment. Nvidia central to that, of course, dropping 3.5% in the session yesterday, dragging on the Nasdaq 100, which closed lower by 1.4%. And the futures are suggesting there's going to be further selling pressure in the session today as well. Is this profit taking? Is it positioning ahead of Jay Powell? Or is it a concern about valuations? Or possibly a mix of all of those factors? Nasdaq 100 futures right now pointing lower by 123 points, looking to further sell off by 0.5%. On the S&P 500, you're looking at a drop possibly at 20 points. Before we get there, of course, European futures, after a decent session yesterday, despite the pressure on defence stocks, ending the day up more than 0.6% today, looking to erase those gains, pointing lower by 0.7% on the European stocks 50 futures. Here in the UK, FTSE 100 futures currently pointing lower by around 15 points. The inflation data, of course, will be central in terms of thinking around the BOE, dropping at 7 a.m. UK time. Let's flip the board and have a look cross-asset. The pound then in focus for us today. Markets, of course, have paired all those bets around the BOE and additional cuts coming through in 2025 for the rest of the year. Those have been faded by the market. 134 right now on the pound. We'll see to what extent that adjusts around an inflation print expected to come in. Headline year on year for July, 3.7%. The pound currently a little softer by 0.1%. The dollar, though, 3 straight days of gains. 430 run right now on the benchmark US 10-year, largely unchanged. Stability in the treasury markets in the session today. Brent at $66 a barrel, up 0.3 on oil. And gold also getting a modest lift after a bit of pressure in the last few days on the yellow metal, currently up 0.1%. So the tech sell-off continuing into the Asian session. SoftBank is a big part of that story. Let's get more from Paul Dobson, Bloomberg's executive editor for Asia markets. Bring us up to speed then in terms of the read across from the sell-off on tech in US into the Asian session, Paul.
Yeah, well, obviously, Asia's markets are pretty tech-heavy in terms of the gauges that we have here. And yes, we're starting to feel that follow through, particularly in South Korea, which is having a bit of a miserable week, but also in the Japanese tech sector. And, of course, industry leader TSMC over in Taiwan also taking on the nose, much as NVIDIA did in the US session. I think the SoftBank one is interesting. That's It also has a sort of parallel in the US, right? It's absolutely been flying higher in recent sessions, been on an absolute tear, and, you know, a little bit like a shooting star, it's now starting to fall back out of the sky. A lot like Palantir has been doing in the US, up over 100% year to date. But the last 5 sessions have been negative and starting to get a little bit more heavy as well. So I think that tells you that there is that sense that some of the most favorite stocks people are starting to take some money out of. There are a bunch of reasons to be cautious there. And definitely valuations and momentum are a couple.
Okay, valuations and momentum. Paul, what is the assessment of you and the team in terms of what the catalyst was, if there was one, for the sell-off that we saw yesterday in terms of tech, US mega cap tech, the pressure on companies like NVIDIA, at least the stock, their earnings are out next week. Was there one thing that stood out to you and the team, or is it a collection of factors?
No, I don't think one thing, Tom, but I've been crowdsourcing the best answer to this question all morning, and I figured that there's several different things that are starting to accumulate that are getting people worried. First of all, obviously we have the Powell speech at the end of the week. If he's not as dovish as the market would like to see, that would lift up yields, and that would be negative for the tech sector, for one thing. Plus, if the Fed's not actually going to cut, then that's not great news for equities either. So I think that you have that weighing on people's minds. I think that you definitely have the momentum starting to falter. Volatility had drifted lower and lower and lower, so we were kind of teetering in a search of a new direction. So maybe down makes sense, particularly as this has been such a well-chased rally with the likes of CTAs, momentum following funds jumping on that bandwagon as well. So there's a few reasons there. There's also interesting things like seasonality factor. Retail traders in the US have been very active all the way over the summer period. This is the time of year when they start to drop out of the market a little bit, according to some research that's out there. And that would be interesting, if they're not doing those day options, pushing the market ever higher, then maybe that takes some of the momentum out of there as well. I think there's one other factor as well, which is a better news thing, right? Everybody has been so worried about how concentrated the gains in the S&P have been this year, how it really has been the Magnificent Seven leading the charge. We've seen a bit of better news in the rest of the market recently. So while we had that sell-off in tech, 350 out of the 500 companies in the S&P index were up yesterday. So not all bad news. Maybe we're seeing a little bit of a spread out into some of the weaker and undervalued parts of the market as well.
OK, that's good nuance to that concern about the lack of breadth in the market stateside, in the S&P 500. We're seeing a bit of a change to that narrative yesterday. Paul Dobson, excellent, thank you. Bloomberg's executive editor for Asia Markets. Let's get more market analysis and bring in, of course, Valerie Teitel right now with Jerome Powell and Jackson Hole. That speech on Friday, Val, to what extent could we be seeing some repositioning on possibly caution around what Jay Powell may end up saying at the end of this week?
Yeah, yesterday's tech sell-off could be tagged to the fact that people are just taking off favored positions, crowded positions ahead of the biggest risk event of the week. Amongst these illiquid markets, we could see quite a jolt to the market. The question really is, Tom, what kind of pivot are we going to get from Fed Chair Jerome Powell? Is it going to be the dovish one that the market wants? Is he going to signal that the labor market has weakened, opening the door for a September rate cut and maybe a few more to follow? Or is he going to sound hawkish? This is a very interesting point made by our own U.S. economist Anna Wong overnight. I highly urge you to read her note on the terminal. She thinks that the Powell is going to come out hawkish and drop this framework that's been called the flexible average inflation targeting. Now, this kind of monetary framework allows the Fed to look through inflation being off target because they simply project it falling back to target. It was a very useful framework, Tom, when inflation was consistently missing to the downside, gave them a reason not to continue easing, but it's complicating the matters now with inflation above target. That could be a very subtle hawkish signal from the Fed chair. Or is he going to signal neither hawkish nor dovish? Maybe he could stress data dependence. We do have another NFP and another CPI before the Fed convenes on September 17th. So those are the kind of scenarios the market is penciling through. But take a look at what the market's done ever since that weak payroll print. When it comes to that 2-year yield, that rally has really contained. But since that hot PPI, we have continued to drift up just slightly, putting that September cut in doubt. We're now sitting around an 85% chance of that Fed cut in September. The market, though, is thinking this is a good risk reward and is adding to options in SOFR futures and front-end rates, betting on a major 50 basis point cut in that September meeting. So we are seeing a bit of two-way price action when it comes to how we're positioning. But take a look at what the political pressure has been looking like, Tom. The Fed is under substantial pressure. Still a lot of questions on how it's going to react in this next meeting to the substantial pressure from all over the Trump administration. A recent Truth Social out from the president saying that there is every sign pointing to a major rate cut. So we know where the administration stands. They look like they want a 50 basis point cut in September.
Yeah, brace yourself if we get a hawkish set of lines and a statement from Jay Powell, or a speech at least on Friday then, in terms of what the Trump administration and how President Trump himself may respond to any hawkish tilt from Jay Powell, if indeed that's what we get. The risk event of the week. Bloomberg's Valerie Teitel, thank you very much indeed. To Geopolitics, of course, a focus on what is transpiring around Ukraine and Russia. A package of security guarantees for Ukraine is now taking shape, with European leaders weighing sending troops as part of a potential peace deal. Ukraine's allies are hoping to strengthen Kyiv's position ahead of a potential meeting between Presidents Putin and Zelensky. US Special Envoy Steve Witkoff spoke to Fox News on US efforts to broker that peace deal.
It's our job to bring the parties together, to narrow the issues, and that's what President Trump does better than anybody. He's got a real sense. I mean, he's got a real sense of what it's going to take for Ukraine to meet in the middle and to move the Russians.
For more, let's bring in Bloomberg's Ros Matheson. Ros, do we have more details now in terms of what the shape, the nature of these security guarantees could look like?
What our reporting is showing is that there would be several stages potentially of these.
And Bill, I do want to start off particularly with the investigation, of course, that you brought to light, that Bloomberg reporters brought to light prior to that, and the documents that are at the center of that, and where exactly those mortgage documents originated from and how they got to your desk.
Well, those are public documents. Anybody who, frankly, can do some research with Google and get to county websites can easily find these documents. You know, the media, including yourself, it sounds like, are going to try to make this into some kind of witch hunt or something like that. Quite the contrary. This is self-evident. This is black and white stuff. And frankly, the fact that the media and so many people are asking questions in the elite class about this goes to show that people think that there are rules for some people and rules for other people. Mortgage fraud is prosecuted every day in this country. And I'm sorry to say, not really, though, that a politician or a public official in this case is now the subject of mortgage fraud. Normal people have to deal with this nearly every day in this country. This is nothing new. Defrauding people is nothing new. And now all of a sudden that you have somebody very powerful, now people have to question it. It doesn't make any sense to me. And I believe that she committed mortgage fraud.
When you look at the documents that you have, the publicly available documents, I am curious whether you or anyone at your agency had a chance to actually speak to Lisa Cook, her lawyers, or any representatives about what you found in those documents.
Obviously, while I respect the question, anything that has to do with the federal investigation, I am not going to comment on. However, I would say, well, what is within the confines of the referral letter, of which I'm willing to speak about.
What is your involvement in the investigation, Bill?
Well, as you know, I'm the regulator of Fannie and Freddie, as well as the conservator of Fannie and Freddie, and so this is right in the bullseye of what my job is. I promised before the Senate, before I was confirmed by the Senate, that I would investigate mortgage fraud, and I'm not going to be intimidated by anyone. I'm not going to be intimidated by the media, the politicians. They can say whatever they want. If it's a Republican who's committing mortgage fraud, we're going to look at it. If it's a Democrat, we're going to look at it. If it's a wealthy politician or a lawyer, we're going to look at it. So we're not just looking at everyday people. And I'd say the one thing, Romaine, which is that we refer people almost every day. I refer people every week on a minimum to the Department of Justice for mortgage fraud. This is literally what I am required to do underneath the Housing and Economic Recovery Act of 2008, which is to ensure the safety and soundness of the mortgage market.
When you say you're referring, you're talking about just rank and file people going through your own agency documents. Is that a routine process, or is this something that has been very specifically started over the last few weeks or months?
We look at fraud generally. We say, look, if everybody and anybody who knows about mortgage fraud, they can go to fraud tips at FHFA.gov. We will take in all of the requests and all of the submissions that people have. We've poured through many of these tips. We have seen just an insane amount of tips on mortgage fraud. Mortgage fraud is a huge issue in this country. So we get it from fraud tips at FHFA.gov. We get it through traditional other means, whether it be by mail or what have you. And also there's stuff in the media all the time as it relates to mortgage fraud. So we will take it from anywhere and everywhere. And again, our main focus is on the safety and soundness of the mortgage market.
Okay, that makes sense. So I guess my question to you, Bill, is was there some kind of tip-off to look into Lisa Cook's documentation specifically?
As I have said publicly, there was a tip that we received. I do not comment on the source, identity, or any other means that we use during a federal investigation as it pertains to things that are outside of the referral letter. You can imagine that if we start exposing, whether it be on this investigation or other investigations, where we receive tips from, where we get whistleblowers from, this is a very serious thing. And so when people are trying to, in my view, intimidate whistleblowers, intimidate tipsters, I strongly condemn that. And if people have mortgage fraud, I encourage them to go to fraud tips at FHFA.gov and send us those mortgage tips.
Bill, have you been looking into any other Fed officials or any other government officials on something like this? Have there been any tips to look into those?
Again, I'm not going to comment on any specific investigations other than the ones that either have been made public by other people or that we feel comfortable speaking to, and that pertains to things within the confines of the referral letter.
When we talk about that referral letter, and you know, Bill, you've seen the pushback on this, and we should kind of point out here that part of the concern right now isn't so much whether she or anyone else out there committed fraud, but I think a lot of people would like to know whether there is more of a coordinated effort.
But that is the issue, because that is the issue, because you've been interviewing me now for 2 minutes, and you keep asking me about all of these tangential issues instead of asking about, you know, did she sign these documents? I believe she did sign these documents.
Okay.
Is it mortgage fraud to say that you live in one area and not another area? Yes, it is mortgage fraud. So you're not focusing on the fraud. You're focusing on the investigators for purposes of trying to undermine what it is that she did, allegedly, and what it is that mortgage fraud and the risk that mortgage fraud poses to the system. Well, and we're not going to be intimidated. I mean, we swore an oath, and we are going to continue to prosecute mortgage fraud. It doesn't matter whether it's a Republican, a Democrat, a public official, or Joe Blow on the street.
Absolutely. And we are in agreement for that. But what we are doing here is we are actually focusing on both issues, both the potential for fraud, and we are digging deeper into that. And we should point out that Bloomberg has made concerted efforts to reach out to Lisa Cook and her representatives, to the Fed, as well as to folks in the White House and administration beyond you. At the same time, Bill, we also have raised concern about whether this might be a weaponization of your office, a weaponization of the White House. And I am curious if there has been direct, I don't know, guidance from the White House to pursue this?
We discovered this within the confines of our charter that Congress has given us. We continue to receive tips within the confines that Congress has given us. As I said, people can go and email us. They can send us tips. We encourage that to happen. And that's how this was sourced. And it's going to continue to be sourced. And, you know, just because now, you know, somebody said to me earlier today, they said, you know, mortgage fraud is being controversial by some people in the media because you've really hit on power. And that struck me because I'm like, you know, shouldn't power be against mortgage fraud? It just doesn't make sense to me now that you have somebody who's in this type of position and now it's controversial and maybe now mortgage fraud isn't mortgage fraud. I mean, you saw the Federal Reserve president from Kansas City. That was quite an odd exchange that he had about, you know, blaming the forms and stuff like that. Let's call it what it is. People have a responsibility. And people in power especially have a responsibility to read legal documents before they sign them.
Well, I mean, to that point here, I mean, there's been a lot of talk about a report that the Philadelphia Fed put out, I think back in 2023, specifically on this issue of owner occupancy fraud. Basically, the idea of putting on a mortgage application that you're going to use something at your primary residence and get a lower mortgage rate, which it seems to be at the heart of the documents that you posted with regards to Lisa Cook. It was a pretty high number, something like a third. And in that report, they specifically used the phrase that this type of practice is, quote, broad-based across the U.S. Now, that's back in 2023. I am curious as to what measures the authorities, either your agency or other agencies, can take to actually reduce that trend of owner occupancy discrepancies.
We are working very actively on it. I appreciate the question. If you look at my Twitter feed, if you look at my testimony, we have made mortgage fraud a huge priority since the beginning. I didn't know any of these people were committing mortgage fraud when I, you know, came on the job. I mean, I had heard about, you know, different public reports and stuff like that. But, you know, the amount of referrals, I am shocked now that I'm in office with how much mortgage fraud has gone on. So we have taken, I saw today,
have you actually taken
on another
formal
network.
legal action?
Hold on, let me finish. hold on, let me finish. I heard on another network, they said, well, can't you use AI to do this? That's
AI?
exactly what we did.
Okay.
We did months ago. We went and we partnered with Palantir at Fannie Mae. We held a massive press event, and we said, look, everybody beware. We are looking for mortgage fraud. We brought in Palantir. We have made tremendous efforts globally across the population, across the data set of loans from Fannie Mae.
Yeah.
And it's startling to me that because you have one Fed governor, you try to make an excuse for it instead of saying this is wrong,
Yeah.
and this is prosecuted every day of the week for other people.
How many referrals have you made for some sort of criminal investigation?
A lot. Sometimes I do multiple per day and certainly multiple per week. And my agency, along with the Inspector General in my agency, works hand in hand with the Department of Justice, has done it under the Biden administration, did it under the Obama administration, did it under the first Trump administration. Mortgage fraud is prosecuted every day in this country. And as long as I'm in this seat, we're going to continue to eradicate fraudsters wherever we find them.
So it sounds like mortgage fraud is, I don't want to say common, but it's not uncommon either. Do you think there's a plausible reason for your findings? People do move and they don't always have a chance to update paperwork, and so paperwork gets left behind or is out of date. Do you think that that's a possibility here?
I'm not sure I totally understand the question. I mean, as a general matter, I believe that occupancy fraud is wrong. I believe that when people sign a piece of paper and they go to a bank and they say that they represent to a bank that they're going to do something and then they do something different, I believe that that is bank fraud. I believe that that potentially is wire fraud. And I believe that that is, in the case of mortgages, often mortgage fraud. So, we have rules in this country. And I just say this, what is the point of laws if they're not going to be followed in this country? And if people don't like the laws that are on the books, well, then go and change the law. But if we have laws, and if I promised, which I did promise the Senate, to uphold the laws and follow the law and the statute, we have to follow the law and the statute, always.
Bill, I want to transition now to Fannie Mae and Freddie Mac and the possibility of an IPO of these government-sponsored entities. What assurances, well, first of all, can you give us an update on where things stand with this potential IPO?
Well, the president decided many years ago to not sell this asset. It was one of the best decisions that's ever been done, in my opinion, from the presidency as it relates to assets that the U.S. government has had. Why? Because people wanted to sell it to investors for $100 billion, $150 billion. I think that number is north of $500 billion now that these assets are worth. Since taking office, not just focusing on mortgage fraud and other systemic issues like safety and soundness mandates, like we just spent the last 10 minutes on, but is also focused on driving value and treating Fannie Mae and Freddie Mac as if they're businesses, taking cost out of these businesses that is redundant and unnecessary, and also making sure that we are always thinking about how do we, within the confines of the law and in the best interest of the American people, run these things as businesses. So if people aren't performing, we get rid of them. We don't keep them around for years and years and years and decades just because they're politically connected. And so I think that this has enabled the Fannie Mae and Freddie Mac story to really, with President Trump's help, unlock a lot of value for the American people, and it'll be very interesting to see what the president decides to do in this regard.
Well, with regards to, I was looking at the video that you guys put out. I think it came through the White House's account about the Great American Mortgage Company. So basically, the combination of these two, also what does appear to be a rebranding of your agency and this U.S. financial technology segment, which I guess would sort of help with regards to the securitization. Now, is the idea all of that, Bill, would be under the same umbrella, and I assume that you would be at the helm?
Well, we'll see. I mean, these companies are in conservatorship, as you know, which basically means that the president is in charge of these companies. And there was a Supreme Court ruling which made that very clear. I would say that any and all options are on the table. One of the things that I've been focused on, Romaine, has been, since getting in this seat, is on creating value. Now, what the president ultimately decides to do with that value is entirely up to him. But we had a thing called common securitization solutions. Nobody understood what this thing was, generally out there. And so so we decided to rebrand it as U.S. FinTech and really focus on what it is, which is financial technology. I believe this business is worth billions and billions of dollars. It was previously neglected, in my view. Fannie Mae and Freddie Mac have put almost $1 billion into this platform, and so we're unlocking value there. And then with Fannie and Freddie, we'll see. We'll see if the name has changed. We'll see if these things are there. But we're trying to aspire to a new tomorrow. You know, Fannie Mae and Freddie Mac were these once nearly bankrupt assets, or bankrupt assets, many people would say, and we're trying to revitalize those. These should be great American icons. We are the greatest economy in the world, and we have a great president, and we are going to use these assets to benefit the American people and get the most value out of these assets that we can.
Do you have any sense of a timetable of maybe when that will either get done, or at least we'll get a little bit more guidance, the public will get more guidance on when that will be done?
That'll entirely be up to the president. The only one who knows that it is in his brain, and so I'll let him decide on timing, of course. But I would say that you know, the president's very interested in this issue, and it's very nice to have a president who cares about Fannie Mae and Freddie Mac.
I'm an android designed to resemble a real person.
Hiroshi Ishiguro, often called the father of humanoids, has dedicated his life to making the most realistic and human-like robots in the belief that the lines dividing these machines and humans will someday completely disappear.
We want to use a humanoid robot in daily situations. But for other countries, in the United States and European countries, probably they want to use the robot in the factories. So in Japan, we're going to use in both the factories and daily life. I was in China. I have seen so many humanoid robots there. But the problem is the applications. But I guess within at least 10 years, I think we're going to develop the killer application for the humanoid robots, and people will start to use the humanoid robots in daily life, in factories.
When comparing Japan's progress in robot adoption, Ishiguro says the main issue is practicality, something he sees recent leaps in AI resolving.
I think Japanese people are quickly adapting, to the humanoid robots. So that is the Japanese cultures. We never distinguish human and robots. I think we are doing it differently. Actually, 25 years ago, in Japan, humanoid robot development was very active, right? But we couldn't find the real applications. But once we could find the real applications, of course, we want to start to use the humanoid robots in a daily life, right? So another bottleneck is AI, right? So in order to develop a better AI, the AI is a very, very fundamental technology for the robots, therefore making it more human-like. But of course, the people worry about the autonomies of AI. But I believe, we are not so stupid.
At the Osaka World Expo, Ishiguro's vision is on display, showcasing a futuristic Japanese society in 50 years where humans and robots coexist.
We can deeply study about the human itself. It's better to give the human-like appearance to the robot, so people can naturally talk with the robot, right? So you can have a chat with my robot, right? So, and probably, you can have some feeling to talk with me. And another important merit is we can deeply study about the humanity itself. So the human is animal that have two ways of the evolutions. One is the genes, the other is the technologies. That is the difference from the other animals. So technology is a way of the human evolutions. So by developing the technologies, we can have evolutions, right? So by accepting a robot technology, AI technologies, we can be more advanced humans. And by accepting AI and robots, we can be more better humans.
Sherry-Ann, Bloomberg, Tokyo.
I do want to start off particularly with the investigation, of course, that you brought to light, that Bloomberg reporters brought to light prior to that, and the documents that are at the center of that, and where exactly those mortgage documents originated from and how they got to your desk.
Well, those are public documents. Anybody who, frankly, can do some research with Google and get to county websites can easily find these documents. You know, the media, including yourself, it sounds like, are going to try to make this into some kind of witch hunt or something like that. Quite the contrary. This is self-evident. This is black and white stuff. And frankly, the fact that the media and so many people are asking questions in the elite class about this goes to show that people think that there are rules for some people and rules for other people. Mortgage fraud is prosecuted every day in this country. And I'm sorry to say, not really, though, that a politician or a public official in this case is now the subject of mortgage fraud. Normal people have to deal with this nearly every day in this country. This is nothing new. Defrauding people is nothing new. And now all of a sudden that you have somebody very powerful, now people have to question it. It doesn't make any sense to me. And I believe that she committed mortgage fraud.
When you look at the documents that you have, the publicly available documents, I am curious whether you or anyone at your agency had a chance to actually speak to Lisa Cook, her lawyers, or any representatives about what you found in those documents.
Obviously, while I respect the question, anything that has to do with the federal investigation, I am not going to comment on. However, I would say, well, what is within the confines of the referral letter, of which I'm willing to speak about.
What is your involvement in the investigation, Bill?
Well, as you know, I'm the regulator of Fannie and Freddie, as well as the conservator of Fannie and Freddie, and so this is right in the bullseye of what my job is. I promised before the Senate, before I was confirmed by the Senate, that I would investigate mortgage fraud, and I'm not going to be intimidated by anyone. I'm not going to be intimidated by the media, the politicians. They can say whatever they want. If it's a Republican who's committing mortgage fraud, we're going to look at it. If it's a Democrat, we're going to look at it. If it's a wealthy politician or a lawyer, we're going to look at it. So we're not just looking at everyday people. And I'd say the one thing, Romaine, which is that we refer people almost every day. I refer people every week on a minimum to the Department of Justice for mortgage fraud. This is literally what I am required to do underneath the Housing and Economic Recovery Act of 2008, which is to ensure the safety and soundness of the mortgage market.
When you say you're referring, you're talking about just rank and file people going through your own agency documents. Is that a routine process, or is this something that has been very specifically started over the last few weeks or months?
We look at fraud generally. We say, look, if everybody and anybody who knows about mortgage fraud, they can go to fraud tips at FHFA.gov. We will take in all of the requests and all of the submissions that people have. We've poured through many of these tips. We have seen just an insane amount of tips on mortgage fraud. Mortgage fraud is a huge issue in this country. So we get it from fraud tips at FHFA.gov. We get it through traditional other means, whether it be by mail or what have you. And also there's stuff in the media all the time as it relates to mortgage fraud. So we will take it from anywhere and everywhere. And again, our main focus is on the safety and soundness of the mortgage market.
Bloomberg understands that Russia says it will only agree to security guarantees for Ukraine that give Moscow an effective veto over any future effort to defend Kyiv. For more, Tony Halpin, who leads our Russia economy and government coverage, joins me now. Tony, how can you have a security guarantee for Ukraine that Moscow might veto if Moscow is the aggressor?
Yes, this is one of the many unanswered questions that are being hashed out at the moment, because essentially the idea of security guarantees for Ukraine is, as you say, Tom, against Russia. And if Russia wants some say in that, then there's some question mark over whether it amounts to any kind of security for Ukraine. Europeans are still trying to work out some sort of idea around something called a NATO light assurance, which would give Ukraine some sort of military assistance and military commitment if it were to be attacked again. But the details there are still very vague, and there's a lot of discussion to be had, I think.
What do we understand from listening to the Russian foreign minister with so much experience and so much time in the field, Mr. Lavrov, about Russia's current position, Tony?
Yeah, I mean, essentially, Russia is standing firm on what it wants, partly because it sees that this has been pretty successful so far. If you recall, on Friday's summit, President Trump went quite a long way towards the Russian position, basically accepting that Russia needs to get some Ukrainian territory as part of any settlement, basically accepting that there doesn't need to be a ceasefire before talks begin, and essentially that allows also the US to hold off from applying further sanctions. So Russia sees all of this, and it decides that actually playing hardball produces results, and this is the kind of thing that we end up with, that Russia saying, well, fine, you want to talk about security guarantees, here's what we want from it, you better give it to us.
What about this much-touted meeting between Putin and Zelensky? What have the Russians been saying in terms of their potential willingness or not to have that meeting?
Yeah, they're somewhat lukewarm on this. They have committed, publicly at least, to increasing the level of official taking part in the direct talks between Ukraine and Russia from the current fairly low level on the Russian side. But that's very far from committing to Putin sitting down at a table with Ukraine's Volodymyr Zelensky. The Kremlin's position has always been essentially that Putin will sit down with Zelensky at some point, but that will only be if there's an agreement on the table for them to sign, and both sides are still very far away from that. So it looks like Russia is not very enthusiastic about a bilateral summit, whatever it is that President Trump says was agreed. So far, at least publicly, the Kremlin isn't playing ball there.
Back in 2015, New Rochelle set up what we now call the New Rochelle model, a form-based zone code. Essentially, the city council, in partnership with RXR and working with residents, really sat down and took a look at where can we build and what do we need to do to streamline processes, sort of front-load some of the environmental reviews and processes so that when developers come in, they can be approved in as little as 90 days, break ground, and essentially start leasing out in 3 years.
90 days, I mean, that's like a different language than like a different reality than we're used to if we're talking about development. Just contextualize that for us. How long would it typically take if you weren't able to fast track this?
I mean, it would be, I guess, anywhere from 5 to 10 years, if anything. Okay. I mean, so but within the last 10 years.
This is days and not years.
Wow. Yeah. Exactly.
You mentioned RXR.
Yep.
Talk a little bit about public-private partnerships here and how you view as mayor the need to partner with for-profit companies in order to get this done.
Absolutely. It's been a key to what's allowed it to be successful. Those resources allow us to invest in our community without raising property taxes. We worked with the community here. What do you want to see in New Rochelle? And through our public-private partnership, we've enhanced plazas, we've brought murals, we've increased EV charging stations, we've bought a black box theater right to our main street. We're opening parklets. And so really working together, providing assurances to developers, everybody essentially wins. Never mind that rents are actually holding steady and actually decreased the median rent in 2020 to 2023 at a rate that's unheard of in the region.
So what have been some of the challenges? Of course, this isn't something I imagine had to have been easy to accomplish. So what were some of the challenges that you all experienced as you were trying to deliver a world, an area, a city in which things are a bit more affordable?
Sure. I mean, what's really wonderful is when this started, I wasn't on the city council. I was a mom of 2 kids. So I was the resident sort of being like, I want to see stuff in the downtown. I want to know what's going on. I think change is hard, right? And right now I kind of call it like our teenage years, you know, where 2/3 of our buildings have been approved. We've authorized 11,000 units, 11,000 kitchen table moments, and about 2/3 have been authorized and leasing up. And so there's construction and there's noise, and maybe with the right turn you make for coffee, you have to make a left and wait a few more minutes at the light. But it's staying engaged with the community and reminding them there are little tangible assets in our downtown that did not exist 6 years ago. Never mind, again, contributing to the housing and other investments we've made surrounding the downtown.
What have been the politics of this? Because when we talk about zoning and we talk about the idea of building more dense and affordable housing or just more housing, people, I guess I could rephrase this, people love to complain that housing is too expensive, but then when it comes to actually building that housing, if it's put up to a vote, they strike it down.
Like, not in my neighborhood.
They don't want it.
Understood.
Well, it depends on where you live, because
Fair.
that has to do with zoning, and that
Right.
might not actually be up to you.
Right.
In
That's
certain
very
parts
true.
of New York City, it's not necessarily up to us. And
Right.
Important to know.
we've seen that play out, but
Right.
politically, this stuff can get really charged. What do they think of it?
Absolutely. I mean, it's the form-based zone coding essentially allows the city council, the elected officials, to set the scaffolding and sort of pinpoint where, and then hands off. The professional staff actually close the deal. We have a council manager form of government. So our city manager, our commissioner of development, we have an industrial development agency that really work out the nuances, the financial elements of it, and the projects are authorized. So when you decide to build in New Rochelle, there's assurances. You don't have to worry about a project being voted down the way maybe other regions, municipalities do. If you fit the specs that we have already identified, again, the council working with the staff and the community, you have an assurance that you're going to be able to lease up within 2 to 3 years of breaking ground.
So you mentioned that you spend a lot of time talking to the community, engaging with the community to see what they'd like to see reflected in the area. What are some of the things that they've been interested to see?
Green space, of course, more space for kids to play, dogs are a big hit. And so dog runs and opportunities for dogs to have space to kind of stretch their legs, I guess, leaving the apartments. We are a huge lover of the arts. So as I mentioned, we have a black box theater that's going to open the first half of 2026, and we've added murals to the community. But the downtown development has also served as a catalyst for other parts of development. So we have a project called The Link. We're taking 3 lanes of a Robert Moses kind of project and making it a linear park, connecting parts of our farther out of our downtown to the actual downtown proper. We just approved a project, Pratt Landing is what we call it. It's going to give waterfront access in addition to a community asset in an armory, 99 condos, 100 apartment buildings, and a hotel. And we're revitalizing our train station. In 3 to 5 years, we'll be the only station in Westchester where with one seat, you can go to Grand Central or Penn. And so this development has allowed us to really respond to resident needs, concerns, and what they want to see in a really holistic way.
So we like talking to mayors because, and everybody who listens and watches our program knows that, it's where the rubber meets the road when it comes to actually getting stuff done.
For sure.
And really being accountable each and every day to the people you serve, because you see them out. You are there with them. On that, I'm wondering specifically about transportation.
Yeah.
And in an environment where you talked about, okay, well, if there is more density, if there is more housing, you might have to wait more when you take a right turn to get your coffee because the traffic has increased. Do we live in a world where we can realistically think that we could improve mass transit in small towns? Or have we shown that as a country, we just cannot make those investments? I mean, look at California's high-speed rail and the failure that I think many people would say we saw there.
So New Rochelle already has the privilege of being the second busiest line on the New Haven's lines, second only to Grand Central, believe it or not. And the majority of our buildings are actually being built around this transit-oriented development. We're also a hub to 9 bus lines, county and city bus lines, so you can get to the Bronx or Yonkers right from the same transit center. And our development allowed us to invest in some micro-mobility options. We have something called the Circuit, which is an electric shuttle. You can call it like you call Uber, absolutely free. It takes you to various parts of the city. We're a scooter nation as well, so micro-mobility, and we're investing in bike lanes. The Link will actually add bike lanes and connectivity in another way. So I think based on our foundation, but also the way we've been able to expand, we are addressing transportation in a green way.
That's interesting to hear that, like on a micro-mobility level, in addition to changing the way traffic patterns are. We're speaking with Yadira Ramos-Herbert, the Democratic mayor of New Rochelle, joining us here in the Bloomberg Interactive Brokers studio. As I mentioned, housing is probably one thing that Democrats and Republicans at the national level can agree on needs to be addressed. Their way of doing that doesn't necessarily fall in line with one another. They don't see eye to eye. We heard from J.D. Vance at the vice presidential debate last year talking about opening up federal land, for example, to build more housing. What is your advice to leaders around the country, because you've been able to do this successfully, as ways that other communities can do this?
I mean, I think some of the models that can be borrowed from it, streamlined processes. What are the pain points? Every municipality
You're essentially saying get rid of regulation.
Streamline processes. I'm not saying get rid of regulation.
Well, how do you do that without getting rid of regulation? How do you make sure that environmental review, that you're not going to kill the sea turtles or whatever if you build here?
So we did conduct an environmental review back in 2015 and in partnership with RXR. So it's not that we're getting rid of it. We're just front loading that process so that you have a sense already of if you choose to develop developing this site, what are some of the issues? What's the investment you're going to have to make to meet those kind of codes? So I think that's one. We looked at a lot of underutilized sites. Some of our sites were like old parking lots that were not being used, that were in bad shape, former schools that were closed, but the structure was still there. And so every municipal leader knows their community. They know their corners where they could be a little bit more energy and lights on. And with that in combination with streamlining processes, I think will allow some positive results for this on the housing front.
So I want to go back to your earlier question just about what types of advice. I mean, I know you mentioned like some of the things that you all are working on, but I would say, more logistically, what type of advice would you give to other parts of the nation? Because not everywhere is like New Rochelle, of course. We were talking about LA. We could talk about New York City here in Manhattan, Midtown.
Sure.
What is some advice that people can really take away here?
I still stand by. You know your corners, you know your blocks, you know the underutilized sites, you know where maybe it's like business hasn't grown there. It's been empty, there's lack of density. And I know it's tricky to say Midtown Manhattan, right? If you're going to use that specifically, I appreciate where we are. But every leader knows every corner. I know every corner, every block, and where to think about that. And so really thinking about what can be catalyzed. And again, we all know our own zoning and processes. Really being honest and holistically reviewing that, I think will allow different communities to catalyze and also add housing in a way that helps to address the crisis that we're facing.
You have a law degree.
Yes.
You're a litigator.
Yes.
In a previous life or currently, is this a job that you can do while you're mayor?
Yes, that's a great question. I would not be able to do it at the same pace that I did when I was a new lawyer. I was also an associate dean at Columbia Law School prior to becoming mayor. But I actually am looking to do a little bit of practice on the side.
So it raises the question about your own future and how you think about your own political path forward. What's next for you?
I don't think about my political path forward. Right now, the job is to make sure all 11,000 units, homes, kitchen table moments are catalyzed. It's to make sure the link launches. It's to see the Pratt Landing project, the waterfront project. And we also started something called the Vanguard Initiative. We're investing $2.25 million in small businesses. I want to turn on those lights on every one of those first floors in my downtown. That's my mission. That's the only thing I'm focused on right now.
You don't think at all about a bigger platform?
I love the portfolio that New Rochelle has given me, and that's really one. I want to finish the job, and to think otherwise would take my distraction from
When do you think the job will be finished?
That's a great question. I mean, the link, maybe I think I would argue within 5 to 7, we will see a significant transformative change in the downtown that can be measured through sales tax revenue and other initiatives and incentives coming to life.
It's very likely that human robots are going to be robots that we can deploy into the world relatively easily.
From labs in Shenzhen to workshops in Silicon Valley, humanoids are stepping out of science fiction and into our reality. The race is on to dominate the next era in robotics, with companies in Asia and the US vying to take the lead. China is seen as a frontrunner, with Morgan Stanley saying the country will have the highest number of humanoids in use worldwide by 2050.
It's the result of many years of government support, advancements in AI, and a strong manufacturing base that gives it more than a helping hand.
The market is poised for explosive growth, with the International Federation of Robotics noting 2 primary reasons for its rise: a chronic lack of workers combined with aging labour forces in developed nations. Yet sales channels are fairly limited so far, with universities and research institutions currently some of the biggest buyers.
This might seem like just a gimmick, but the humanoid companies in China, like Unitree, are blending tech and entertainment as seen as a serious path toward commercialization.
Ultimately, the goal is to bring humanoids into households, with varying estimates for how long that might take.
I think maybe 3 or 5 years, the home robots can do the common things in my home.
We are still a bit far from that because, as you can see right now, like the robots cannot perform as in the movies that we are used to see.
It may be decades before humanoids are a common sight in our homes, On the factory floor, though, it's already becoming a reality. Bloomberg Intelligence says improving battery life and efficiency gains in humanoid robots could make them virtually as cost-effective as human workers by 2035. That sort of potential is creating intense competition, particularly in China, where concerns are already growing about overcapacity.
We have a humanoid robot frenzy here. Everybody try to break into the space. I think probably a lot of these companies are not going to exist in the 5 years down the road.
The question is whether this level of interest in humanoids is unhealthy or the right way for the industry to develop. Annabelle Drawlers, Bloomberg News, Hong Kong.
I loved reading your report on this. You said, look, Google avoided any risky moves, so we didn't get the glasses in the here and now. But the prowess you see is that Gemini is just full force within these devices.
Absolutely. It's all about AI. It's about really getting consumers to understand the power that AI can bring in. And as Rick was saying, it's different things to different people. So what was amazing for me yesterday was see the breadth of people that they were able to reach with all the guests that they had, both from an age demographic, but also from what is the hook that you want. It can be editing, it can be taking the best shot, it can be getting fitter.
And it can be photography. Andre D. Wagner they had over there. They had, of course, sports when it came to Steph Curry, or indeed Lando Norris was there. We also thought about the way in which communities are going to use it for camera and for editing. Is that really that important? When do you think the camera is really going to be the standout feature for so many?
Camera is already the standout feature for so many consumers.
But the Pixels had a better camera than anyone for ages. That's what they kept on reminding us, but people are still buying Apples instead.
It is, but it's about what you can do from an editing perspective now. It's not just about taking the best shot and taking the friction away that there is today in getting to that editing. So being able to tell an AI agent, Gemini or something else, how you want the picture to look like.
And what it really compares and contrasts with is Apple's lacking, right? The fact that we're going to be so easily integrating Gemini AI from a spoken word perspective, and that Siri is just so behind the curve. Do you think they're going to eat any market share there?
I think it's always hard from a high-end perspective to see churn from Apple to anywhere else because user-consumer have more device than just their phone. And so you're talking about a difficult choice to make. We also still at the very beginning of the AI shift. Consumers are not walking into a store asking for an AI phone. We talked about this for Apple in June. But I do think that time is ticking for Apple, and we need to see something sooner rather than later.
Instead, this almost helps Google show off the Android ecosystem. You might not get a Google Pixel, but you might get a Samsung. And probably through this demonstration, you can see how well integrated that's going to be as well. How do they navigate this sort of frenemy moment?
Yeah, I think it's definitely first about the best of Google on Pixel. And then you started to see Samsung getting closer to that ecosystem and putting aside their aspirations with Bixby and really building on the power of Gemini. So Motorola has been doing the same thing. So it's definitely about the ecosystem, but also feeling that, in my view, Pixel is the answer to Apple within the Android world.
And they got a foldable phone, which in any way goes head-to-head with the Dochi endorsed Samsung, but Apple has no foldable right now. I thought what was really interesting was when they put them out on the market. Next week we get the phones, but the watches a little bit later. I asked Rick about whether it was a supply chain issue. He said no. Are there any supply chain issues for these companies right now? It gets its chip designed in-house but made by TSMC. How does this whole come together?
I think, to be honest with you, it's a marketing strategy more than a supply issue. It's about getting before Apple and after Apple, right? We know that the expectation is beginning of September usually for Apple. And so getting in with the mass market product before the iPhone is out, and then with something that is more appealing to still a niche market, but very powerful users with the foldable towards holiday season.
I think what really resonated in your note was the confidence that Google had at this event. I mean, it was just celebrity-filled. You felt like you were at a TV event. That was the whole idea and narrative of it. Have they got the right to be this confident right now, do you think?
I think is empowering for them instead of always focusing on chasing Apple to actually feel confidence in the product that they have, which are, iterative from last year, but solid. And I think that finding the confidence in their branding is very important, and broadening the addressable market that they're aiming for. It's not just tech buyers anymore, it's mass market consumers.
Your biggest deal ever at a time when your rivals have kind of been languishing, trying to even get deals done. And when they do, it's kind of in the single-digit billions. So why this size of deal, and why this one now?
Yeah, well, thank you so much, first of all, Danny, for having me. It's a very exciting day, a very exciting transaction for Thoma Bravo. And look, we don't think so much about, the size of the deal. We think a lot more about the fundamentals and what we can do with the company. This company, Dayforce, is an incredibly special company. We have followed it. I met the founder, who's still the CEO of the company, before he even merged his company into Ceridian in 2012. And so we've tracked this company for a very long time. It's a very unique company in a very important space. It's got product leadership in a big market. And so we've followed this. This deal has been in the works for a long time with our firm, and it has all the characteristics and attributes that we look for in Thoma Bravo in terms of the quality of the revenue, in terms of the product leadership that it has, in terms of its AI roadmap, great management team, and so we're just really excited to be able to have this opportunity.
Holden, you've been following this company for a while, but a lot of folks have had their eyes on human capital management companies. Just earlier this year, Paychex, for example, acquired Paycor. A lot of public companies getting bought up in human capital management. What are you seeing, and what are your peers seeing that public markets are not?
Well, that's an interesting question. So Dayforce really fits our profile very well because of its revenue quality characteristics. So, just to go back for the history for a minute, because it's important to realize how unique this company is. When David Ossip founded this company, he coded an original product, and his thesis was, core HR systems and then payroll systems and workforce management systems were all separate systems, separate databases, separate architecture. And David came with a very innovative thought: is why shouldn't all that exist in one database, in one system? It provides a lot more customer value, one basically end-to-end unified platform in the employee life cycle. So he came in and built a product that does all of that, everything from recruiting, performance management, to if I'm an hourly worker, I clock in and I know in real time how much money I've earned, and if I need to get paid, I can get paid immediately. They do the tax withholding for you. So it's a really unique, that value proposition that he built the company on is still unique in this big growing market today. And so, look, and this company has been probably in the 7th or 8th inning of a services to software transformation.
Yeah.
And so what we're really looking to do is just accelerate what they're already doing as a public company in a private context. And just to answer maybe the last part of your question, this company is having a historic year. Right, so a couple weeks ago they announced their earnings. They 40% year-over-year bookings growth for the first half of the year. Recurring revenue is re-accelerating, which is kind of unusual in enterprise software right now. And the market kind of yawned. And we think there's a big disconnect and a big opportunity to basically continue on the path that the company's on, but accelerating it in a private context.
To be fair, analysts hadn't yawned. There's only one sell rating, and they'd liked the earnings in many ways because, as you mentioned, David, who set up this business 30 years ago, has been able to take on the new iteration that is generative AI. And I'm really interested, therefore, Holden, as to how much generative AI can add value at this moment. Is that already baked in? Because we're all questioning valuations of generative AI-related companies right now.
Yeah. So generative AI is a huge part of our investment thesis here, as it is for most of our software companies. But we think, just taking a step back in this human capital management space, every company in the world right now is thinking about how to maybe reorganize themselves, how to infuse AI into their organization, maybe how to change their organizational structure and hierarchies to account for AI. What kind of skills are needed and how much do they need to pay for those skills? These are all people problems. And so we think this space of general human capital management should be is a great opportunity for AI, for those companies that have data, they know how to protect the data, that have customer relationships. And so we think it's a huge opportunity. They have a really ambitious AI roadmap. They're already selling some AI SKUs today, but there's a really ambitious roadmap for next year to roll out a bunch of AI agents. And we think we can just help them accelerate that path to basically an agentic AI human capital management software company.
Holden, just on that point, we would love to get your views on an MIT-related study that seems to have gotten this market maybe a little bit worked up. The study that 95% of companies who took on generative AI pilots, 95% of them saw a zero return on investment. Given your work with these types of companies and incorporating generative AI, 95%, does that number seem right to you?
Look, well, I would tell you, we focus, that's really interesting, by the way, because I do think there has been an issue with people really trying to measure ROI on their projects. Everybody's using it. Everybody knows it's the next big thing. But is ROI really being, measured in it? And are people giving customers things that they may not want? And so we've taken a very measured approach. We think there's a real benefit to these SaaS companies that have incumbency and they have data advantages. But I think at that enterprise level, I think, look, obviously there's been a lot of, the easy ones have been the call center and product development. Those have been the two biggest areas for AI, I'd say, cases that have generated really positive ROI. But I think there's also a lot of sprawl, too. There's a lot of tools being sold that maybe aren't being totally utilized. You see that in some of these earnings announcements. So I think it's just important to be careful to ensure that there's connectivity between the customer's roadmap and your roadmap. So we think it's really important, but we are taking a little bit more measured approach, because if you sell something to a customer that they're not using or don't need, that creates problems down the road.
Sarah really does have to think about the profitability of this business in the longer term.
That's right, if you think about it. So, I was also recently at a media dinner with Sam Altman when he said we plan to spend trillions on infrastructure in the near future, and that economists might call that crazy, but they are marching on. So as OpenAI starts to put this immense, unprecedented amount of capital right toward data center expansion, they're building expertise in that. And I think the long-term play here as well, how could we in the future potentially market and capitalize on that expertise?
And be able to drive up revenues to be getting better financing for the future of their own infrastructure spend. At the moment, they've been funding that spend by raising money in venture. Any nuance there? She really did talk about how they've been able to sort of raise more than they anticipated.
Yes, they were planning on $10 billion in one piece of their kind of tranche funding round. She said that they have actually gotten to $11 billion because of excess investor interest. And more broadly, they're actually looking beyond just equity financing at this point. They're also, as Fryer told us, interested in debt and debt financing. And they have said that banks and private equity firms have approached them about this.
So interesting as we see how Meta has been financing some of its data center needs, getting into the world of private credit with PIMCO and Blue Owl. What more about the growth of the business when we're just coming off the back of GPT-5 and some of the throws around that, and they had to make some difficult choices, particularly when it came to, well, how nice the chatbot is to people and how they bring back other models and the like?
That's right. So it was definitely a bumpy rollout. I think bumpier than they expected, right? Also at that dinner, Altman, said, we messed up on the emotional attachment. I think they did not realize that people fully had to the older version of the chatbot, and they were all a lot of users were angry that OpenAI initially deprecated the older model. However, I think overall, the bigger picture is that ChatGPT is still the market leader, right, on consumer usage, just on chatbot usage overall, and they still have this voracious demand, as Fryer put it, for the use of their products that requires intensive compute.
And there's voracious demand to fund it, as we were talking about. And actually, eventually, retail want to be owning a piece of this company. More people, democratization. Sam's spoken about eventually the need to IPO. But as a CFO, how is she thinking about that, Sarah Fryer?
I mean, for Sarah Friar, her job is both to raise these funds, right, for OpenAI, but also be able to allocate that compute for these customers. Oftentimes, they're having to decide in advance which customers are actually going to get the compute power they need to run all the ChatGPT products. So it's a mix of fundraising, of keeping customers happy, keeping consumers happy, and figuring out all the right the financing and money for it.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The Justice Department confirms its plans to investigate a top Fed official as the White House maintains its pressure campaign on the central bank. Welcome to the Thursday edition of the fastest show in politics. This is Balance of Power alongside Michael Shepard here in Washington. I'm Tyler Kendall. Joe Matthew is off, and it's a fast-moving day here with a lot of developments, including Fed Governor Lisa Cook saying that she will not be bullied until leaving her post after President Trump elevated allegations of mortgage fraud. We'll have the latest here this hour with Bloomberg's Michael McKee. He's at the Kansas City Fed's annual economic symposium, which kicks off today as we gear up for Fed Chair Jerome Powell's highly anticipated speech tomorrow. We'll give you all the latest to expect there. And then later this hour, Bloomberg News reporting doubts are emerging about the future of security guarantees for Ukraine. We'll have a conversation with Republican Congresswoman Nicole Malliotakis from New York. As Michael Shepard just moments ago, actually, we heard from President Trump saying that we will know within the next 2 weeks whether or not peace is feasible in Ukraine.
And we've heard that time frame from President Donald Trump before. It is almost a trope where he is kicking the can down the road, in essence. And it's unclear what will come next, if he will really hold Russian President Vladimir Putin accountable to whatever he may have agreed to during the summit on Friday last week in Anchorage, Alaska. It's unclear. We didn't get much in the way of details about what was promised on either side, other than an effort to try to move ahead. There were, of course, the urgent meetings convened in Washington on Monday that we spent a lot of time discussing and covering. But through it all, there was a shadow of a doubt that is really materializing now about Russia's seriousness to follow through on the next steps in the process. And of course, we're also, Tyler, watching what is happening in the markets as well. We're seeing another day of declines, fifth straight day. And we're going to go to Bloomberg World Headquarters in New York for the voice of Bloomberg Radio and the New York subway, Charlie Pellet, for all the numbers there.
Hi, thank you very much. And here's what's going on. We have got the Dow, the S&P, NASDAQ all declining. As you point out, 5 straight days of declines on the S&P, down 31 right now. That is a drop of just about 0.5%. The Dow lower by 205 now, down 0.5. NASDAQ, the composite index, down 121. That's a drop of 0.6%. NASDAQ 100 index down 0.7. And our Mag 7 index down now by 0.8%. A strong reading on manufacturing in the run-up to Jay Powell's speech, spurring a slide in bonds. Right now we've got the 10-year yielding 4.34% with a 2-year 3.80%. We'll have the latest from Jackson Hole and our Michael McKee coming up in just a moment. Right now, spot gold is down $9 the ounce, down 0.3%, 33.39, and West Texas Intermediate crude up 1.2%, 63.44 for a barrel of WTI. Bitcoin now down by $2,000 a token, down 1.8%. Bitcoin 112,334 on Bitcoin. Again, the S&P 500 index down for a fifth day. Apple is raising the monthly subscription price of its TV Plus streaming platform by 30% to $13, all part of a push to generate more revenue from services. Apple, after the announcement, is trading lower. Right now, we do have Apple shares trading lower by 0.6%. Recapping, S&P down 0.5% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. And back we go to Washington once again, your hosts, Michael Shepard and Tyler Kendall.
All right, Charlie Pellet in World Headquarters for us from New York. Thank you. As always, this is the Thursday edition of Balance of Power on Bloomberg Television and Radio. And it also marks the first day of the Kansas City Fed's annual economic symposium in Jackson Hole, Wyoming. And there is a lot hanging over this year's gathering. Of course, questions about the path of monetary policy and the future of a September rate cut, but also what has been the mounting pressure from this White House on the central bank, as President Trump called yesterday for Fed Governor Lisa Cook to resign over allegations of mortgage fraud. And we did get a statement from Fed Governor Cook yesterday where she said that she will not be bullied into stepping down, adding in part, quote, "I am gathering the accurate information to answer any legitimate questions and provide the facts." And that's where we want to start by bringing in Bloomberg's Michael McKee, senior international economics and policy correspondent, who is already there. He's been there all week in Jackson Hole for us. Mike, we heard from a top DOJ official earlier today saying that he does plan to investigate these allegations. What do we know about the administration's response so far, and what's the latest when it comes to this?
Well, the latest is that Ed Martin, who is the Justice Department official that the president has put in charge essentially of finding dirt or getting revenge on Democrats. He's also charged Senator Adam Schiff and the New York Attorney General Letitia James with mortgage fraud, has said that he is going to investigate the allegations sent to the Justice Department by the FHFA director yesterday, Bill Pulte. Martin went beyond that, though, and put out a statement saying he wants Jerome Powell to get rid of Lisa Cook, to take her off the Fed board right now because Americans are demanding it. Well, that may not be true, but the real issue is Jay Powell has
इस नेचुरल गैस का देखो ये ट्रेड हो चुका है, ठीक है। इसमें प्रॉफिट यहाँ पर बुक कर लेना नेचुरल गैस में। कोई नया ट्रेड बनता है तो देखते हैं। इंडियन मार्केट ऑलरेडी क्लोज हो चुका है, कोई नया यहाँ पर अभी ट्रेड बना नहीं है। नेचुरल गैस में सेलिंग का ही ट्रेड चल रहा है। लेट्स सी कोई अगर सपोर्ट क्रिएट कर देता है प्राइस बाइंग के लिए, अदरवाइज कल का लो ही है सपोर्ट, और कोई सपोर्ट यहाँ पर है नहीं। एनी एंट्री इन क्रूड ऑयल ऊपर लगाया हुआ है। एक्सपायरी भी है नेचुरल गैस की, ध्यान रखना। लास्ट ट्रेडिंग सेशन फॉर दिस वीक, तो ज़्यादा रिस्क भी मत लेना। का टारगेट होने वाला है नेचुरल गैस का।
reduction in hiring and the revisions to previous months. And so there is some concern about what's happening in the labor market, but the unemployment rate barely moved. So if that stays the same and inflation ticks up a little bit, then it's going to be much harder for the Fed to decide to cut rates. And it looks like Schmidt would be in the majority in that case.
Bloomberg's Mike McKee out in Jackson Hole. Thank you so much for all your reporting. We're going to turn now next to Lydia Boussour. She is the EY Parthenon senior economist. Thank you for joining us, Lydia. I want to keep with the Fed for the moment. Lydia, in about 21 hours from now, we're going to be hearing from Fed Chair Jerome Powell. What are you going to be listening for in his keynote address at Jackson Hole? This will be, in a way, a valedictory for him as Fed chair. Are there any messages you will be trying to divine from his comments?
Yeah, so there's a lot of anticipation ahead of the speech. I think, Fed Chair Powell will want to keep the options open when it comes to the September meeting. So there's a lot of talk about that September rate cut. I don't think we're going to get a strong signal as to what the decision in September will be. But Fed Chair Powell will be highlighting some latest developments on the outlook. So he might acknowledge what we've seen in the labor market in terms of softening in labor market conditions. And importantly, he's going to be covering the conclusion of the revision of the Fed's framework. So we're going to hear about that. I think it's interesting that it's happening against a very different backdrop than the last one in 2020. We have an economy that has gone through the pandemic. We've seen a new paradigm when it comes to inflation, with now people concerned about persistently high inflation. So I think the Fed will want to take that into account in their review.
And of course, a large part of this conversation does have to do with tariffs. And it's worth mentioning that we did get some tariff news earlier today. The White House and the European Union putting forth this joint statement, perhaps a step in the right direction towards getting pen to paper when it comes to finalizing that agreement for 15% tariffs on EU exports in place, though not yet in place for those sector-specific tariffs, including autos. Lydia, are we actually getting the sort of clarity that we need around tariffs to have this more precise economic forecast, the sort of precision that policymakers need to have in order to make these types of decisions?
No, I think we have a backdrop in terms of tariffs that remain highly uncertain. So I do believe that, with these higher tariffs and the lingering uncertainty that we are seeing on the policy front, we continue to see a downward pressure on economic activity from all that uncertainty. If you look at tariffs today, the average tariff rate is about 18%. We were at 2% last year, so that's a significant step up. And we are starting to see the impact of these tariffs on the economy. So if you think about the outlook in the second half of the year, I do think that this slower economic momentum that we are seeing in the data, in the labor market, but also if you look at the underlying trend in GDP growth, when you look at real final sales to domestic purchasers, we have a clear indication that the economy is slowing down. And in the second half of the year, I think that's a trend that will be sustained. So we do expect to see below trend growth in the second half and heading into 2026.
Lydia, you talked about a slowdown there, but we're also seeing some flashes of impact on prices, perhaps from the tariffs. What is your read on that, on the inflationary impact of these import levies, and how much more will we see going through the end of the year?
Yeah, I think the inflation picture is quite complicated at the moment. There are a lot of cross currents. If you look at the latest CPI reports, I think that was a clear indication of all these cross currents. We have services prices, which had been a key source of this inflation pressure. They showed some renewed momentum in July. At the same time, on the goods side, we had clear indication of pass-through in June and then more moderate pass-through in July. So there is a lot of noise, and it's really a reflection of this sort of messy and uneven process when it comes to the tariff pass-through. But companies are starting to see some pressure on their margins. higher tariffs are leading to higher cost, and they are leading companies also to start pulling back on hiring as well. So the impact of tariffs is really starting to show up, and I think it will continue to build in the second half of the year.
Can we talk just a little bit more, drill down a little bit more here, including how it pertains to the consumer? I'll add another headline that we got here today, which is Walmart missed profit expectations for the first time in 3 years. Lydia, will slower income growth limit the extent to which firms can pass on these costs of tariffs? What are you watching here when it comes to that dynamic?
Yeah, we are definitely expecting real income growth to slow in the coming months. And that's really driven by both that softening in the labor market, which is the key pillar of consumer spending growth. So that's going to lead to slower labor income growth. And at the same time, you have that renewed reacceleration in inflation. We've seen core inflation, above 3% for the CPI. So that those higher prices, they're also going to be eating into consumers' purchasing power. So if you think about real income growth, you're definitely going to see a slowing trend that's already visible when you look at the data. Consumers have been actually spending above their mean if you look at the annual trend in consumer spending and real disposable income growth. So as you move ahead, you're starting to see some erosion in those fundamentals that are driving the consumer. So yes, for now, consumers are still resilient. I think the retail sales data were encouraging, but there are clear signs that with a softer labor market, with that inflation pressure and also confidence remaining depressed, we're going to see that slower momentum in consumer spending being sustained in the coming months.
Lydia, you talked about a slower labor market. How much more will this influence Fed policymakers? We did hear earlier today from the Kansas City Fed president saying that he was actually more worried about prices than the labor market risk at this moment. But what is your take? Which in the balance weighs more at this point?
Yeah, so yesterday you saw the minutes from the Fed. They did show that you have a majority of policymakers at the Fed that are still seeing the inflation risk, the upside risk to inflation, as being more significant than the labor market risk. Now, that was at the July policy meeting. And since then, what we've seen is that very soft July jobs report. We've seen those massive downward revision to the May and June data. And I do think that when policymakers are looking at labor market conditions today, they are a little bit more concerned about that slowdown that we're seeing. And it's not just the jobs report. If you look at a broad range of labor market indicators, they've been signaling already for a while that labor demand has slowed significantly. The hiring rate is very low. And we are also seeing slower dynamics on the supply side of the labor market as well. So as we get to the September meeting, I do think that the shift will be, the focus will be a little bit more on the labor market side of the Fed's dual mandate. And that's the reason why we do expect to see a rate cut at the September meeting.
All right. Lydia Boussour, senior economist at EY Parthenon, we thank you so much for joining us here on Bloomberg. Stick with us. More Balance of Power is coming up right after the break. I'm Tyler Kendall alongside Michael Shepard, and this is Bloomberg. This is the Thursday edition of Balance of Power on Bloomberg TV.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth and unlock economic and social prosperity through environmental responsibility.
पार्वती साहू जी एनी अपडेट किस चीज का? क्रूड ऑयल का ट्रेड लगाया हुआ है आपके सामने। बाकी न्यूज़ की अपडेट की बात कर रहे हो तो न्यूज़ अभी फ़िलहाल के लिए नहीं है। 5:30 पे अभी न्यूयॉर्क सेशन ओपन होगा, देन 7 PM यूएस मार्केट की ओपनिंग है, एंड देन आवर सेकेंड डे है जैक्सन होल सिंपोजियम का। तो वहाँ पर फेड चेयरमैन की स्पीच है आज 7:30 पर। तो मोस्टली मेरे को लग रहा है मार्केट उसी का वेट कर रहा है, बिकॉज में फेड चेयरमैन क्या बोलते हैं उसके बाद ही मार्केट नॉर्मली मूव करेगा। बाकी नेचुरल गैस मिनी और नेचुरल गैस की एक्सपायरी। क्रूड ऑयल में एक सेलिंग का ट्रेड है, नेचुरल गैस में सेलिंग का ट्रेड ऑलरेडी चल रहा है, इसका टारगेट हो चुका है, बुक कर सकते हैं, इसमें कोई नया ट्रेड नहीं है।
Penalty in the first place. What led to this?
Well, the New York Attorney General sued him for fraud, saying that he overvalued his assets when trying to get loans. So if you remember, there was the Trump triplex that he said was 3 times its value and its size. So that was and it was also against the Trump sons. So it was a judge trial and came back and he said that they were guilty of fraud, and then he imposed this massive penalty. It was an unusual kind of fraud because the so-called victims, the banks, et cetera, weren't really complaining. They didn't even have anyone testify that they had been hurt by this, and that was part of the argument that Trump's lawyers and Trump made over and over again.
Joan, is the issue really in this penalty being set aside just a question of its size, or is there more to it than that?
This was a very confusing 300-page opinion, and it took almost 11 months to come down with it. Normally these opinions come down, maximum a couple of months, and that's because the judges were all over the place. 2 of the judges said they would have ordered a new trial. 2 of the judges said the fraud conviction was justified, but the penalty was too large. 1 of the judges would have dismissed the case entirely. So what does stand, though, is that they said that the fraud conviction was justified and just the penalty was excessive. They said it wasn't a cataclysmic loss, so that it violated the 8th Amendment to the Constitution, which outlaws excessive fines. And, that is the big takeaway from this, because they also said, the majority of them said, that Attorney General Letitia James acted within her authority and she was vindicating the state's interests. You know that Trump has claimed, and in fact the Justice Department is investigating Letitia James, saying that she violated President Trump's civil rights by bringing this action. So it's a very confusing kind of decision, but what stands is that enough of the judges thought that the verdict was excessive. I mean, it was about 355 or something, and then it ballooned to over 500 with the interest penalties.
Bloomberg's June Grasso, thank you so much for your insights on this. I'm sure we'll be talking about it again. We're going to bring back our political panel here on Balance of Power. That's Maura Gillespie from Blue Stack Strategies. She's the founder there and a Republican strategist. And we're also joined by Julie Roginski, who's co-founder of Lift Our Voices and a Democratic strategist. Thank you both for hanging in there. I want to turn the topic now to events happening in Georgia. Vice President J.D. Vance is there with a handful of Republican lawmakers to try to sell to voters the one big, beautiful bill. That is the tax package that was signed into law by President Donald Trump earlier this year, a pillar of his economic policy. But more, I wanted to turn to you to ask about how it is sitting with voters, including Republicans, and why they need to do this sort of sales campaign on the road.
They definitely need to be organized in their messaging, because early polling showed that the American people were not happy with the big, beautiful bill, largely because of the cuts to healthcare programs that have been largely popular. So this effort, I think, is twofold, sending J.D. Vance out there. He is pretty intelligent, and so he can speak to, here's the numbers that they're seeing. The part of it, too, there is that these impacts are not going to be felt directly just yet. So a lot of it is kind of semantics. It's Democrats versus Republicans. Democrats telling you that, you're going to be hurting. Republicans are saying that 85% of earners or the top bottom 85% of earners are going to be benefiting from the tax cuts. So it's basically a messaging war right now. And Republicans feel like they need to get out ahead of it because they're currently losing that messaging war. I also think that sending J.D. Vance out there is to keep him kind of out of what was happening earlier this week with Zelensky coming to D.C., with the conversations regarding Ukraine, just because he has been pretty adamant about America not being involved. And so the switch that Trump has taken, the president has taken on that message, there's that divide. And so rather than show it so glaringly, they're separating the two to have him go tell around the country about the big, beautiful bill, while the president is trying to show his foreign policy chops here in the United States. So I think there's twofold to the tactic of sending J.D. Vance out to Georgia.
And Maura, another aspect here, much to your point, is that a lot of the tax cuts we saw in this tax bill are front-loaded, but still a lot of voters aren't going to feel those impacts until 2026 compared to the spending cuts that are coming a little bit further down the road. But still, Julie, as we see the administration try to explain these benefits, I'm wondering how Democrats are trying to organize around a message when they're going up against big officials like the vice president now on the road.
Well, you only need to see what's happening at the few Republican town halls that are being held during August recess. People are furious, and they're not people living in New York City or San Francisco. They're people living in places like Nebraska and Iowa. They're just appalled at the fact that Republicans have now taken positions that will eventually throw grandma out of the nursing home, that will eventually cut food from food insecure people. And these are not necessarily people who are strangers to the Americans who vote for Republicans. I mean, you know, nursing homes don't care what your party affiliation is when they say to you, sorry, we can't afford to keep you here. Sorry, you don't have Medicaid access, so we can't do anything to help you with home care. All of this is something that affects Americans on a daily basis. It's not, if it's not you, it's your mom. If it's not your mom, it's your grandma. If it's not your grandma, it's your autistic child who needs help. And the help comes largely through these programs that have been cut. And so we're dealing with programs that touch everybody. I mean, everybody is affected by this for the most part, unless you are incredibly wealthy and you can afford to pay for your nursing home or for your child out of pocket. And that's something that I think is a huge mistake for the Republicans. They have backloaded this to take effect after the 26 election, but not after the 28 election. And just wait until that happens in about a year and a half. It's going to be a disaster. Americans understand that now. Maybe they're not feeling it quite yet. But if you're listening to me, America, prepare yourselves, because it is going to happen in the next year and a half to 2 years. And better to be forewarned so you could be armed about what's coming down the pike.
Julie, I wanted to keep with you on this next question. And you're describing a picture of really an angry Democratic base and perhaps a motivated one. And yet we do see findings in the New York Times published yesterday that voter registration for the party is down in as many as 30 states across the country, including some Democratic strongholds like Massachusetts and even California. How do you explain that? And what can the party do to turn that trend around in time for 2026?
The party's got to learn how to fight. And, you know, we are way past the sternly worded letter part of this cycle. We're way past giving floor speeches, and even, floor speeches that are excessive, like 25-hour floor speeches. People are looking for a fight. That's why somebody like Gavin Newsom has really captured the imagination of the Democratic base right now, and not just the Democratic base, but Democrats across, people who are not even affiliated with the Democrats. Look, nobody is thrilled with Donald Trump's performance except for his MAGA base, which is about 35% of the electorate. Everybody else is souring on Trump on every single issue, whether it's the economy, whether it's immigration, whether it's crime. I mean, on every issue, he's now way down, if not underwater. And Democrats have an opportunity, but they have to seize it. And I think the problem is that our leaders in Washington are, still playing by these Roberts Rules of Orders as though it's still the 1990s. As somebody who worked on the Hill in the 90s and the early 2000s, I can tell you it was a magical time. That time is now gone. It does not exist anymore. And yet we still have the same leaders leading the Senate who were there then and believe that this is how things should be now. We are never getting that United States back. And I think Democrats need to understand, like Gavin Newsom understands, like Kathy Hochul in New York is starting to understand with redistricting, that whatever comes next is going to be very different from what's come before. We can't do what Joe Biden did, which is talk about the former guy as though he was a flash in the pan and he wasn't coming back. He's here. Trumpism is here. If Trump is gone tomorrow, it will still be here. And we need to address it, and we need to start leading like we're fighters and not like we're sitting on our heels waiting for him to implode on his own. I think that's why you're seeing disgust of the Democratic Party, including from people like me who's dedicated her entire life to the Democratic Party and to getting Democrats elected for that reason.
All right, and Maura, in just our final 30 seconds here, another headline from that New York Times analysis finds that battleground states are swaying to the right. If what Julie's saying is correct, how do Republicans then maintain momentum against the sort of organizing that she's foreseeing from the Democratic Party?
I think that when you look at the Donald Trump dynamic, he can't currently run again. So Republicans will need to shift their messaging because just as Julie pointed out, yes, MAGA has a stronghold with Donald Trump. However, there are people who have waned on him, but that doesn't mean that they're going to become Democratic voters. So you have to appeal to them as well. And so for Republican leadership and for those who are running for office in the Republican ballots, they need to be thinking, how do I message and how do I convince people who are looking to vote for Republicans, who are more pragmatic, speak to them about what they're doing for their communities, talk more locally, and try and avoid some of the fray that Donald Trump tends to swarm the conversation in. That'll be their best ticket to winning and to fending off the Democratic push.
All right, our political panel today, Maura Gillespie and Julie Roginski. We thank you so much for being with us for both hours of Balance of Power here. We're going to have more coming up after the break, including the redistricting fight playing out in Texas. Stick with us. This is Bloomberg. And there's a story that we've been following closely here. In Washington, though, it's happening pretty far from here, and that's the redistricting story that's taking place and shape in Texas. It has some pretty big implications for the 2026 midterms after the Texas House of Representatives approved a new state congressional map that is backed by President Donald Trump. It caps a weeks-long political standoff and boosts Republicans' chance of keeping hold of the House come the midterms. President Trump posted on Truth Social about it, saying, quote, "Big win for the great state of Texas." For more now, we're joined by Texas Bureau Chief Julie Fine. Julie, thanks for sticking with us. It's always good to see you. Can you just bring us up to speed here? Because President Trump is posting about this being a big win, but is it a done deal yet?
It is not a done deal yet. This is passed in the Texas House. The Senate is just pushing it out of committee. It will now be voted on later today by the full Senate. The full Senate, though, will have no problem getting it through. It was the House that had the real obstacle. So the House passed its bill. The Senate will pass its bill. They may have to rectify a few differences, but then it will go to Governor Abbott. Governor Abbott has made it very clear. He put this on the agenda call that he is going to sign this bill. So it's pretty close to done, but not a done deal.
Julie, this has been a pretty bitter and public spectacle. What sorts of scar tissue has it left among the legislators there in Austin? And is this going to make it hard to get business done in the state capitol going forward?
I mean, it's not going to make it that hard because the Republicans hold the majority in the Senate and in the House. But one thing about the Texas House is most bills are actually passed. 90% of the bills are bipartisan here, 90% or above in most legislative sessions. It is a close group, although there has definitely been this bitter battle. You could definitely see yesterday with the closing arguments some very pointed remarks. However, I saw a walkout in 2021 as well. They came back in 2023 and worked together. Obviously, it's very tense right now. How long that lasts, I think, really depends on the next few weeks.
Bloomberg's Julie Fine from Dallas. Thank you so much for your insight. And we'll keep coming back to you for more on the Texas redistricting fight over the coming days. Now we'd like to turn to Representative Nicole Malliotakis, who is a Republican representing the 11th District of New York. And Congresswoman, we'd like to stick with this topic of redistricting and ask whether this fight might be coming home to you. Do you see this battle actually moving to New York? And are you and your district perhaps vulnerable to moves by Democrats to redraw the map in the Empire State?
I think this certainly does open up the floodgates all around the country now as each state looks to make gains that will benefit their own political party. I've been very clear that whether it's Republicans or Democrats attempting to politically gerrymander, that it's wrong. I believe it's corrupt. And it silences and takes away the voice of the people who are supposed to be the ones who decide our elections. I think it's really important that we have the most competitive seats possible. That is how you hold your representative accountable, and that is how you ensure that they actually come out and speak to you, the voters, about what they're doing, what they're not doing, how they vote, and why. And so I don't support what Texas is doing, and certainly, obviously, there's concern that they may try to do this again in New York. Now, in 2022, Kathy Hochul and the Democrats did gerrymander even after there was a ballot referendum in which New Yorkers made very clear they did not want political gerrymandering. We sued after they egregiously redrew my district, and we were able to get the entire map of the state of New York thrown out. And it was then a court-appointed independent master that drew the lines. And what happened when we actually had fair maps in New York? Republicans made significant gains, and the Democrats lost 2 of their incumbents. So I think that that was a lesson to Kathy Hochul and the Democrats. They tried to do the same thing again in 2024 when they did a switcheroo on the Court of Appeals and tried to remove the chief judge that had sided with us and then backfill that position with somebody who did not side with us. And basically that was very corrupt what Kathy Hochul did. They did win an opportunity to redraw, but because of the public outrage and the scrutiny nationally, they did not change the maps much in 2024. So here we are again, potential redistricting battle, but there would need to be a constitutional amendment, which would mean that it would have to pass this legislative session, next legislative session, and then go to the voters in a referendum. So the earliest they could potentially redraw these maps would be for 2028. But nonetheless, I think we will fight back and we will defeat them once again.
Right, and it's interesting, Congresswoman, because we often said here that the path to taking the House in 2024 did run through New York, because we know that there were a lot of those Republican seats that ultimately helped the GOP get to the majority. But just to put a finer point on this conversation about redistricting, are you confident that if this were to happen again, that same legal pathway would be there for you to protect against the efforts that could be targeting your own district?
Well, again, it would have to go to a public referendum, and I think we would actually win that once again. We did win it the first time around when they tried to do this. And then what they did was they just ignored the will of the people and jammed it through anyway, which is why we were able to sue successfully in court. What I would say to my fellow Republicans is that we have the opportunity here to win on merit, and that's the way elections should be. We've just delivered very significant tax relief for working Americans, for middle-class families, for senior citizens. 88% of seniors across the country are going to see their tax liability on Social Security erased when they do their refunds next year. The economy is doing well. We're seeing trillions of dollars in private investment. We're seeing a lot of good things that have happened, whether it's prices coming down, energy costs coming down, mortgage rates coming down. And I think that we need to make sure that we're going out and talking about these successes, because we're going to win on merit. We don't need to stoop to what the Democrats tried to do in New York, which is they could not win on merit in debate, which is why they redrew our maps or attempted to do so. So, again, I think this opens up a slippery slope. I don't want to see it happening. And aside from that, it shouldn't be happening only once a decade after the census, which means the next redrawing of maps should be in 2032.
Congresswoman, when we talk about the question of winning on merits and on debate and on the issues, today we see, and in fact this hour, Vice President J.D. Vance joining some of your House Republican colleagues in Georgia to try to pitch the benefits of President Donald Trump's tax legislation, which you, of course, had a role in getting through the chamber. Why do you think there is the need to make this sales pitch to the American people? Have you detected any concern among your constituents? And is there an issue with the messaging itself from the party about what may be beneficial in the legislation?
I think there's a lot of misinformation and there's a lot of confusion. The Democrats have said one thing and the Republicans are saying another. And so I think it's important for Republicans to be on the offensive, because we are proud of this piece of legislation. It is the largest tax cut in history. It is making sure that the child tax credit not only gets extended but gets increased. We're helping workers, from tipped restaurant workers to Uber drivers to middle-class families like the ones I represent. State and local tax relief, significant for New York. They're getting hammered by the Democrats, whether it's property taxes or income taxes. This is going to give them relief. I think in some cases in my district, we'll see thousands of dollars in savings for families. And the senior deduction, 51 million seniors across America are going to get relief and keep their Social Security paycheck without the government taking tax dollars from them. So what I would say is that this thing's going to sell on its own. I have confidence that when people do their taxes in 2026, they will see the significant relief for the 2025 tax year. And you'll see the economy, again, continuing to grow. We're seeing GDP growth. We're seeing trillions of investment in private companies, domestic and foreign, expanding operations, expanding manufacturing facilities here. It seems every week, if not every couple of days, that President Trump is announcing a new company that is expanding their operations, particularly in the automotive sector, pharmaceutical, tech sector. This is really all good stuff for our economy. And I think come a year from now, when we're in the midterm elections, people will see the benefits, and they'll see that the fear-mongering that many of the Democrats were committing were simply fear-mongering, right? They'll see that the Medicaid cuts that they said were going to take place did not happen, that seniors, disabled, children with disabilities, all children, pregnant women, people below the federal poverty line will not have any of their benefits touched. They'll see and they're seeing it regularly, how those who are the fraudsters are getting prosecuted. And I think overall we'll be shown to be the truthful ones in this debate.
Well, and Congresswomen, Democrats are saying that they want to have some more say here, even though Republicans do hold both chambers of Congress. And I want to stick on this idea of the work of Congress, because we should say for our radio listeners, you're joining us from world headquarters in New York. But when you get back here to Washington, there are going to be 14 working days before the continuing resolution expires. Are we going to just keep seeing continuing resolutions through the rest of the year, or are we at risk of a shutdown if Democrats say that they're not able to come to the table in a meaningful way?
I've been in Congress for 5 years, and I've been through this a number of times where we avoided a government shutdown, we avoided a debt default, and I think we're going to do that again. But we do need to see some bipartisan cooperation. I'm proud to be a member of the House Problem Solvers Caucus, that is made up of half Republicans, half Democrats, where we come together to work through these types of more difficult things. What makes the appropriations process different than reconciliation is that it needs to be bipartisan, because we need to have the 60 votes in the Senate. And so there's going to have to be Democrats and Republicans coming together to avoid a government shutdown. Now, whether that means we're going to have to do a continuing resolution, I imagine it will probably be a short-term continuing resolution. I don't want to see that. I would like to see the Republicans put forward a budget that reflects the priorities of the administration and the Republican-controlled Congress. That is what the American people voted for. But when we don't have the votes to do so, because you need the 60 votes in the Senate, it makes it more difficult. We'll probably see some changes, some additions it wouldn't be just a plain continuing resolution. There would have to be a little more to get Republicans on board and deliver for our constituents. So I think that we'll see how things play out, but I am confident that we will avert a government shutdown, just like we've always have since I've been there.
And Congresswoman, are you confident in the 30 seconds we have left that all Republicans will fall in line on a continuing resolution when it comes down to it?
I have confidence that they will not all fall in line. That I'm pretty sure of. And that happens with every continuing resolution. There's always a group of the Republicans that do not want to support a continuing resolution, or they've never voted for a continuing resolution and don't intend to do so now, which is all the more reason why this needs to be a bipartisan process. And I think that, I've supported the continuing resolutions. I think there may have been just one that I voted against for border because the border was not secure. And I think that you're going to see a large majority of the Republicans support it and a small minority of the Democrats support it. That's probably how it would play out in my prediction.
All right. Republican Congresswoman Nicole Malliotakis of New York. She represents New York's 11th Congressional District. Thank you so much for joining Bloomberg. And thank you for joining this early edition of Balance of Power. Mike and I will be back at 5 p.m. Eastern for the late edition. Bloomberg Business Week Daily is up next. Stick with us. This is Bloomberg.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Lisa Mateo.
Lisa, we are just hours away from the key event. Wall Street's been awaiting the speech from Fed Chair Jay Powell at Jackson Hole. The White House has been pressuring Powell for months to cut rates amid a weakening labor market, but questions remain about the impact tariffs will have on inflation. Bloomberg's Michael McKee is in Jackson Hole covering Powell and the annual Fed conference.
Last year, Chairman Powell said that he thought it was time that interest rates started to go down, and then he delivered in September when they made a 50 basis point cut. He's not expected to say that here this year. He's expected to talk about the fact that the economy is slowing on the employment side, but there are some worrying signs of inflation. And since those would require two different ways of responding by monetary policy, the Fed would prefer to wait and get as much data and information as possible, which means they'll wait till after the next employment report and the next CPI report before settling on the best course of action.
And Bloomberg's Mike McKee is part of our special Jackson Hole coverage. He will join Tom Keene and Lisa Abramowitz for a special edition of Bloomberg Surveillance at 9 a.m. Eastern Time. They will bring you Fed Chair Powell's speech live. That happens at 10 on Bloomberg Radio, Bloomberg Television, and the Bloomberg Podcast channel on YouTube.
Nathan, several former Fed officials, well, they're weighing in on the Fed's next move. Robert Kaplan is the former Dallas Fed president and vice chairman of Goldman Sachs.
If the job market were stronger, I think it would be clearer to be patient and wait to see how the inflation is going to unfold and be more patient to see it trend further down toward target. But I think with this weakening in the labor market, it's going to push the Fed, I think, to be more forward-leaning and maybe do an adjustment in September. But the caution I would give, if they do move in September, I don't think that's the start of a cycle.
That was former Dallas Fed President Robert Kaplan. The interest rate market shows about a 70% chance of a quarter-point cut at the September meeting and close to 50 basis points of easing for the entire year.
And Lisa, while we wait for Chair Powell's speech today, pressure is building on one of the Fed's board members. Federal Housing Finance Agency Director Bill Pulte says he will make a statement on new evidence against Fed Governor Lisa Cook this morning at 9:30 Wall Street time. Pulte announced that on X overnight, a day after the Justice Department urged Powell to remove Cook from the board as it signals plans to investigate her for alleged mortgage fraud. Pulte tells Bloomberg he referred Cook's case to the DOJ as part of a broader crackdown on the issue.
We refer people almost every day. I refer people every week on a minimum to the Department of Justice for mortgage fraud. This is literally what I am required to do underneath the Housing and Economic Recovery Act of 2008, which is to ensure the safety and soundness of the mortgage market.
You can watch our full conversation with FHFA Director Bill Pulte on the Bloomberg Podcast YouTube page. Now, Bloomberg has reached out to Governor Cook. She's declined our request for an interview. In a statement, though, she says she will not be bullied into stepping down, but intends to take questions about her financial history seriously.
Well, talks continue at the White House, Nathan, on taking a 10% stake in Intel to shore up the struggling U.S. chip maker. Now, Bloomberg News has learned that the Trump administration will not pursue equity stakes in other semiconductor manufacturers that are boosting investment in the U.S., like Micron Technology and Taiwan Semiconductor. This follows moves in the White House to take a cut of NVIDIA chip sales in China and to pursue a so-called golden share in U.S. steel. Former Vice President Mike Pence says President Trump should reconsider the whole strategy.
State-owned enterprise is not the American way. Free enterprise is the American way, and a refereed private sector with less taxes and less regulation has created the most prosperous economy in the history of the world. And if we stay on that path, that'll always be true.
Former Vice President Mike Pence, he was a guest on Bloomberg's Balance of Power. You can also get that full conversation on the Bloomberg Podcast YouTube channel.
Well, staying in the chip sector, Lisa, NVIDIA reportedly told its component suppliers to halt production of the H20 AI chip designed for the Chinese market. According to the information, NVIDIA issued that order this week after Beijing urged local firms to avoid using it. CEO Jensen Huang says his company is in talks with Beijing.
U.S. government, the Trump administration, has approved licenses for us to export H20s to China. Recently, China asked some questions about some security backdoors in our chips. We have made very clear and put to rest that H20 has no security backdoors.
That was NVIDIA CEO Jensen Huang. The H20 is a less powerful version of NVIDIA's cutting-edge AI accelerators. It was designed to comply with U.S. export controls. Time now for our Bloomberg Sports Update, and for that, we bring in John Stashower.
Thanks, Nathan. Tour Championship Golf underway in Atlanta, and of the 30 players going for the $10 million first-place prize, nobody played like Russell Henley. 7 birdies, an eagle, no bogeys, a 9-under 61, and a 2-shot lead on Scotty Scheffler. 5 others trail by 3. Rory McIlroy trails by 5. Dodgers and Padres both won. LA at Colorado. Clayton Kershaw went to 8-2. San Diego beat the Giants. Justin Verlander fell to 1-10. Dodgers lead the NL West by 1 game. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager.
I'm Lisa Mateo, and this is Bloomberg.
Oh, it's hanging over. It's the exact correct language. There's no question about it. You still have the normal cadence of Jackson Hole. For example, there's 6, 7, 8 papers that come out. Michael McKee prints them out perfectly, and he reads every page of the academic papers. Guess what? I don't do that. I'm talking to the reporters here gathered, and you're right. At the top of the pile of topics here is Lisa Cook.
So I spoke to Mike earlier. He said she's expected to arrive. She hasn't arrived yet. Does it take away from Fed Chair Powell's message tomorrow? Does it distract from what he says about this economy and what he indicates or not about September?
It's a really fair question. I don't think so. I think Michael McKee, who's better at this than I am, would say exactly the same thing. What is different here, and our Simon Flint in Singapore absolutely nails it in an essay today, what's different here is the hard facts of the moment are catching up with the chairman. I don't know if they're rewriting the speech tonight with the stars out above the Tetons, or maybe they're writing it on the airplane. But what is very clear here is the hard facts, as Mr. Flint says, have caught up. You have the economic data today. You got concern about inflation. And Tim, the number one thing I'm watching off the Bloomberg here is the 30-year bond. Once again, we're making a dash up near 5%. That's the kind of inflation whispers that have to change the speech.
Tom, of course, you mentioned the chairman will speak tomorrow at Jackson Hole. Can you just tell us a bit more about what attendees are really looking to hear from him?
It varies every year. There was one year here, I'm going to say 3 years ago, I can't remember, where we were prepared for a 15-minute, 20-minute speech, and I believe he spoke for 8 minutes. So every year is different. I think the pageantry will be here. There'll be an international audience here. Christine Lagarde or Mr. Nagel of Germany is here. Bailey of the Bank of England scheduled as well. But what's interesting is within the pageantry, what do you expect from a speech? And the answer is they'll be looking for certain nuances and certain single sentences that will be different. What you're not going to get a lot of is what's he going to do in September. That would be rude. He's not going to do that here.
You mentioned a lot of those international voices. I mean, the ECB, we've got Bank of Japan, emerging markets. How are they playing a part of the conversation this year in particular?
Nora, you know my theme. You're already stealing my theme as we go to tomorrow with Lisa Abramowitz. To me, the international angle here is the importance point. William Rhodes, Bill Rhodes of Citigroup, iconic at Citibank, it was called Citibank back then, had this great phrase, central banker to the world. He took it from academics. This is a Jackson Hole where Jerome Powell is the central banker to the world. Is he defends delicately the way we've done banking for years, pushing against President Trump. The theme internationally here of central bank independence will be key.
I think also the theme of labor, Tom, and it's something that we've spent a lot of time talking about in recent weeks, especially since that shocking report came out earlier this month about those numbers for the month of July. And it's really shifted the conversation about what employment in the United States and what healthy employment numbers look like in the United States, where borders are closed, immigration, legal and illegal, is down, and growth among American families is not what it was a couple generations ago. What does that picture look like in terms of reshaping the American workforce?
Well, and reshaping the speech as well. It's a movable feast right now, Tim. The number one thing is we've seen a trend in the data. The conceit is labor data always lags. Okay, fine. And we've seen this trend, including continuing claims today. Bramo put out on Twitter, I was, stuck in an airport somewhere. Bramo put out on Twitter that great continuing claims chart, which shows this explosion up in the weekly data. That's the kind of tea leaves that gets a Fed to shift. President Trump wants them to shift quicker. And let's remember, we've got that jobs report early September before Mike McKee's in that press conference, September 17th.
Well, I want to just talk about the energy. I mean, you've been to so many of these symposiums. What's the energy like on the ground this year in particular? Quiet.
First thing I noticed when I walked in, there's a whole new quiet tone to it. Mike McKee and I remember August of 07 which was, I think, I'll say 7 days after LIBOR OIS went out 4 standard deviations. This place was chaos. My guess is a lot of people are coming in tomorrow morning, and tomorrow morning here at the Jackson Lake Lodge will not be quiet. There'll be a real turnout for the speech. With that said, it's one part academic, but it is one part about this attack on the central bank by President Trump.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Lisa Mateo.
Lisa, we are just hours away from the key event. Wall Street's been awaiting the speech from Fed Chair Jay Powell at Jackson Hole. The White House has been pressuring Powell for months to cut rates amid a weakening labor market, but questions remain about the impact tariffs will have on inflation. Bloomberg's Michael McKee is in Jackson Hole covering Powell and the annual Fed conference.
Last year, Chairman Powell said that he thought it was time that interest rates started to go down, and then he delivered in September when they made a 50 basis point cut. He's not expected to say that here this year. He's expected to talk about the fact that the economy is slowing on the employment side, but there are some worrying signs of inflation. And since those would require two different ways of responding by monetary policy, the Fed would prefer to wait and get as much data and information as possible, which means they'll wait till after the next employment report and the next CPI report before settling on the best course of action.
And Bloomberg's Mike McKee is part of our special Jackson Hole coverage. He will join Tom Keene and Lisa Abramowitz for a special edition of Bloomberg Surveillance at 9 a.m. Eastern Time. They will bring you Fed Chair Powell's speech live. That happens at 10 on Bloomberg Radio, Bloomberg Television, and the Bloomberg Podcast channel on YouTube.
Nathan, several former Fed officials, well, they're weighing in on the Fed's next move. Robert Kaplan is the former Dallas Fed president and vice chairman of Goldman Sachs.
If the job market were stronger, I think it would be clearer to be patient and wait to see how the inflation is going to unfold, and be more patient to see it trend further down toward target. But I think with this weakening in the labor market, it's going to push the Fed, I think, to be more forward-leaning and maybe do an adjustment in September. But the caution I would give, if they do move in September, I don't think that's the start of a cycle.
That was former Dallas Fed President Robert Kaplan. The interest rate market shows about a 70% chance of a quarter-point cut at the September meeting and close to 50 basis points of easing for the entire year.
And Lisa, while we wait for Chair Powell's speech today, pressure is building on one of the Fed's board members. Federal Housing Finance Agency Director Bill Pulte says he will make a statement on new evidence against Fed Governor Lisa Cook this morning at 9:30 Wall Street time. Pulte announced that on X overnight, a day after the Justice Department urged Powell to remove Cook from the board as it signals plans to investigate her for alleged mortgage fraud. Pulte tells Bloomberg he referred Cook's case to the DOJ as part of a broader crackdown on the issue.
We refer people almost every day. I refer people every week on a minimum to the Department of Justice for mortgage fraud. This is literally what I am required to do underneath the Housing and Economic Recovery Act of 2008, which is to ensure the safety and soundness of the mortgage market.
You can watch our full conversation with FHFA Director Bill Pulte on the Bloomberg Podcast YouTube page. Now, Bloomberg has reached out to Governor Cook. She's declined our request for an interview. In a statement, though, she says she will not be bullied into stepping down, but intends to take questions about her financial history seriously.
Well, talks continue at the White House, Nathan, on taking a 10% stake in Intel to shore up the struggling U.S. chip maker. Now, Bloomberg News has learned that the Trump administration will not pursue equity stakes in other semiconductor manufacturers that are boosting investment in the U.S., like Micron Technology and Taiwan Semiconductor. This follows moves in the White House to take a cut of NVIDIA chip sales in China and to pursue a so-called golden share in U.S. steel. Former Vice President Mike Pence says President Trump should reconsider the whole strategy.
State-owned enterprise is not the American way. Free enterprise is the American way. And a refereed private sector with less taxes and less regulation has created the most prosperous economy in the history of the world. And if we stay on that path, that'll always be true.
Former Vice President Mike Pence, he was a guest on Bloomberg's Balance of Power. You can also get that full conversation on the Bloomberg Podcast YouTube channel.
Well, staying in the chip sector, Lisa, NVIDIA reportedly told its component suppliers to halt production of the H20 AI chip designed for the Chinese market. According to the information, NVIDIA issued that order this week after Beijing urged local firms to avoid using it. CEO Jensen Huang says his company is in talks with Beijing.
U.S. government, the Trump administration, has approved licenses for us to export H20s to China. Recently, China asked some questions about some security backdoors in our chips. We have made very clear and put to rest that H20 has no security backdoors.
That was NVIDIA CEO Jensen Huang. The H20 is a less powerful version of NVIDIA's cutting-edge AI accelerators. It was designed to comply with U.S. export controls. Time now for our Bloomberg Sports Update, and for that, we bring in John Stashower.
Thanks, Nathan. Tour Championship Golf underway in Atlanta, and of the 30 players going for the $10 million first-place prize, nobody played like Russell Henley. 7 birdies, an eagle, no bogeys, a 9-under 61, and a 2-shot lead on Scotty Scheffler. 5 others trail by 3. Rory McIlroy trails by 5. Dodgers and Padres both won. LA at Colorado. Clayton Kershaw went to 8-2. San Diego beat the Giants. Justin Verlander fell to 1-10. Dodgers lead the NL West by 1 game. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager.
I'm Lisa Mateo, and this is Bloomberg.
Are you looking for a new podcast about stuff related to money?
Well, today's your lucky day.
I'm Matt Levine.
And I'm Katie Greifeld.
And we are the hosts of Money Stuff, the podcast. Every Friday, we dive into the top stories about Wall Street, finance, and other stuff.
We have fun, we get weird, and we want you to join us.
You can listen to Money Stuff, the podcast on Apple Podcasts, Spotify, or wherever you get your podcasts. Are you looking for a new podcast about stuff related to money?
Well, today's your lucky day.
I'm Matt Levine.
And I'm Katie Greifeld.
And we are the hosts of Money Stuff, the podcast. Every Friday, we dive into the top stories about Wall Street, finance, and other stuff.
We have fun, we get weird, and we want you to join us.
You can listen to Money Stuff, the podcast on Apple Podcasts, Spotify, or wherever you get your podcasts.
For over a decade, BGRIM has stood with Thailand in its mission to save the tigers. With compassion, businesses can exist in harmony with nature.
The firm hired law firm Paul Weiss to investigate complaints about the behavior of the bank's wealth management chief, Andy Sieg. He was brought on by Jane Fraser and is seen by some as a potential successor, but there have been complaints that led to the head of HR calling Katie for a probe by this law firm.
And we should say that this is according to people with direct knowledge of the matter. Apparently, Sieg has drawn complaints from current and former staff accusing him of intimidating and unfairly sidelining employees since he arrived almost 2 years ago. Those include allegations of expletive-filled rants and sarcastic comments.
And sarcasm, as we know, is the lowest form of wit. It's not entirely clear what the outcome of the investigation was, but it does look like the law firm's inquiry is now complete. The bank declined to comment on the outcome of the probe. Sieg didn't respond to requests for comments either. Let's bring in Bloomberg's banking reporter Todd Gillespie, who helped to break this story. So, Todd, it looks like this guy had a lot of HR complaints, Andy Sieg. HR called in a big law firm, Paul Weiss. They've done an investigation. Their investigation is complete, and now we're just waiting for the outcome.
Well, I'm not sure the outcome will ever become public, Matt, but what we do know is that, at least 6 managing directors at Citigroup complained about Sieg's behavior. We're talking about...
Managing directors?
Managing directors, yeah. Managing directors. In particular, one of the focus of their complaints was his behavior towards senior female executives at the firm, including Ida Liu, one of Citigroup's most prominent executives who suddenly left the firm in January of this year. She was there for 18 years and ran the private bank when Sieg arrived at the firm. She left in January. Another cause for concern is his treatment of Kristen Bitterly, who remains one of his current direct reports and runs one of 3 core businesses in the wealth division. It's important to note that Citi, that the performance of their wealth business has improved under Andy's leadership. They posted record second quarter revenue, and the bank seems to be standing by him and say that they look forward to continued business success under his leadership.
Well, that's the thing. I mean, put the wealth management franchise into context for us. We know that has been a priority for Jane Fraser, and as you report, they're standing by Andy Sieg. It seems to appear that way. But this certainly seems like a setback.
It certainly does seem, yes, like a setback. I mean, I think what this shows is that there were and maybe still are key tensions at the top of this wealth business right now. Wealth is the smallest of Citigroup's 5 businesses, but one of the fastest growing. Jane Fraser has made it a key priority for her big turnaround plan. She's hired big external hires, Viz Raghavan to run banking, Tim Ryan to run, the company's beleaguered technology, and Andy Sieg was really the third other big key hire here. It's been less than 2 years since he arrived at the bank, and you already have, an external investigation into his behavior, despite very strong, initial financial results from the business that he runs.
So, obviously, it's a big problem when that many managing directors or any managing director takes you to HR. Obviously, it's a huge problem if you're seen as belittling, especially singling out your female colleagues. Expletive-filled rants and sarcasm seem like par for the course on Wall Street. Is that not the case anymore?
Well, here, it's more than that as well, right? We have evidence here that his COO of the business instructed a managing director to exclude Ida Liu from key information, from correspondence that was key to her business. Appears to be undermining her and her, her ability in her job. We also note lower down in the story that, he after ranting at a male managing director, reduced him to tears. This seems to be rise to a level that is not just traditional Wall Street. And maybe let's also say now, Matt, we're in 2025. That what's deemed acceptable on Wall Street, this kind of behavior perhaps was more commonplace in the 80s and 90s, and maybe some of the, the older viewers on Bloomberg TV might, know that well. But in today's environment, particularly when you're leading a global wealth management franchise, at a bank that prides itself really, its reputation on being, a little bit better on the HR side of things. Citi is one of the more flexible banks when it comes to, working remotely. Jane Fraser, as Wall Street's first female CEO, has talked a lot about inclusivity. Obviously, like every bank, it's had to roll back some of its DEI initiatives in the wake of the Trump administration. But really, the finance seems to have gone beyond this kind of behavior.
This is Balance of Power, live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power alongside Michael Shepard. I'm Tyler Kendall.
Tonight, the pressure campaign on the Fed reaches a new level, with the DOJ today signaling plans to potentially investigate Federal Reserve Governor Lisa Cook following allegations of wrongdoing, as a top official encourages her removal. The latest from the White House up ahead.
Plus, the president now defending his decision to send National Guard into Washington, D.C., suggesting he may even join troops in their patrolling of the district as early as this evening. We'll discuss that story and more when former Vice President Mike Pence joins us here in just moments.
Also tonight, Texas is now one step closer to redrawing its congressional maps, setting off a redistricting standoff with blue states like California as next year's midterms take shape in real time.
We're We're live from Jackson Hole, one day before Jerome Powell takes the stage at the annual economic symposium. We preview what to expect and have live reaction to the developing news around Fed Governor Lisa Cook when Chicago Fed President Austin Goolsbee joins us up ahead.
But we begin tonight with new developments in the pressure campaign on the Fed. More specifically, Federal Reserve Governor Lisa Cook. The Department of Justice now potentially investigating Cook following accusations of mortgage fraud. A DOJ official signaling earlier today that Jerome Powell should fire Cook, despite the Fed governor denying any wrongdoing and putting out a statement saying that she will remain in office. Federal Housing and Finance Agency Director Bill Pulte spoke to Bloomberg's Romain Bostic a short time ago. Here was his reaction when pressed on the White House's role in the Cook investigation.
At the same time, Bill, we also have raised concern about whether this might be a weaponization of your office, a weaponization of the White House. And I am curious if there has been direct, guidance from the White House to pursue this?
We discovered this within the confines of our charter that Congress has given us. We continue to receive tips within the confines that Congress has given us. As I said, people can go and email us. They can send us tips. We encourage that to happen. And that's how this was sourced.
Joining us now with the latest from the administration is Bloomberg's Kate Sullivan, who joins us live from the White House North Lawn. Kate, thank you for joining us. Kate, give us a sense of the latest. We are also hearing from Bill Pulte that this is part of a widening angle on this question of mortgage fraud.
That's right. So I think what we're seeing is, this is part of a broader pressure campaign. So the DOJ, as you mentioned, today signaled that it was going to start an investigation into Lisa Cook and is also urging Jerome Powell to remove her from the Board of Governors. But importantly, Powell does not actually have the legal authority to do that. The only person who does have that authority is the president. And even if that were to happen, there had to be cause. Trump has has discussed the possibility of firing Cook, as we've reported, but as of right now, that is not his preference. He would like to see her resign instead. This is all over allegations that Cook falsified bank records and property documents in order to get a more favorable loan, so committing mortgage fraud. And Cook, for her part, says, she's not going to be bullied into stepping down and intends to stay at the central bank.
And Kate, another story that we're tracking here in Washington is that President Trump says that he may join police and military here in the district. What should we be watching out for later tonight as this unfolds?
That's right. So Trump called into a radio show earlier today and said that he wanted to join police officers, members of the military, as part of a patrol of the D.C. streets tonight. So we actually just a few minutes ago got a few more details on this. Right now the plan is for the president to motorcade to a law enforcement staging point in the city and then address agents who are part of this D.C. operation. I think the outing is clearly trying to highlight Trump's efforts, his quite stunning federal takeover of the D.C. police and the deployment of the National Guard to D.C. And really as he makes a very aggressive and big show to crack down on crime in D.C.
All right, Bloomberg's Kate Sullivan, we thank you as always for your reporting. Joining us now for a reaction to that and much more, I'm pleased to say, is the former Vice President of the United States, Mike Pence. Vice President Pence, thank you so much for being here.
Thank you both for having me on.
I want to start with one of these top stories that we're following today, which has to do with the pressure campaign from the White House when it comes to the Federal Reserve. And now you told Bloomberg Television last month that the president ought to be able to express himself when it comes to the Fed. But I want to get your thoughts on these latest allegations against Fed Governor Lisa Cook. What's your level of concern now, if at all, when it comes to central bank independence as we see the scrutiny widen?
Well, certainly I think it'd be appropriate for Lisa Cook to respond to the allegations that have been made. I know the president's called on her to resign, but she has a right to defend herself. I did read today that Federal Home Loan has found more than 22,000 Americans that have filed mortgages, claims, and 2 residences at the same time. And so I think she should answer for that, have a chance to answer for it. But what I hope is that the effort to push out another member of the Federal Reserve isn't just simply part and parcel of an effort to get Jerome Powell, who our administration appointed, as Federal Reserve Chair to lower interest rates or otherwise take action that would not otherwise be justified. I understand the president's frustration with Chairman Powell, and he's entitled to speak out about that. But my hope is that these latest allegations are not simply part of that overall pressure campaign and can be given and afforded the due process that they deserve.
Mr. Vice President, we'd like to turn to another topic we've been covering very closely this week. Of course, that is the question of the president's effort to end the war in Ukraine through a settlement between Volodymyr Zelensky, the president of Ukraine, and his Russian counterpart. You have met Vladimir Putin before. Do you believe that President Trump is perhaps putting too much trust in the Russian leader and his willingness to end the war?
Well, first, I have met Vladimir Putin. And it's clear to me that Putin doesn't want peace. Putin wants Ukraine. And I commend President Trump for continuing to pursue peace in Ukraine today. He is, quite frankly, surrounded by a lot of isolationist voices in and outside the administration that, frankly, would have cut Ukraine off a long time ago. And so I'm grateful the president has stayed after it. I'm grateful that he renewed military support. And I commend him for meeting with President Putin and meeting with President Zelensky and our European allies. But, Michael, I think one thing is missing, and that is I believe the time has come for the United States Senate to enact those strong secondary sanctions against Russia and send them to the president's desk. I believe that would strengthen the president's hand. With a waiver authority that are built into those sanctions, the president could implement them or not implement as he saw fit. But my deep conviction, having studied Vladimir Putin and having spoken to him and told him things he didn't want to hear, is Putin's not going to stop until he's stopped. So while the president continues on one hand on a vigorous track of diplomacy, I think the time has come for the U.S. Senate to put on the president's desk those strong secondary sanctions that will make it clear to Vladimir Putin and to the Russians that unless they choose the pathway of peace through diplomacy, we will continue to provide military support and we will pass the kind of secondary sanctions that will literally break their economy.
What about so-called secondary tariffs against China? Would you be in favor of the administration moving towards that against Beijing like we've seen them take against India, even if some of the argument has been that they haven't done that yet because they don't want to risk the trade talks that are happening right now with China?
Well, I have to tell you that the secondary sanctions against China and other countries that are essentially fueling the Russian war machine, sanctions at 500% would have a devastating effect on the Russian economy. Now, I have plenty of reasons to support strong tariffs against China. During our administration, we changed the national consensus on China. We imposed $250 billion in tariffs, and we brought China to the negotiating table for that phase one trade deal in 2020. So I think we have to be really strong on China after years of trade abuses. But otherwise, I believe we ought to be pursuing free trade with free nations. We ought not to be cheering on $150 billion in tariff revenue that's ultimately paid by American consumers and American businesses, but rather we ought to be looking to lower tariffs with free nations around the world, even while we stand firm with places like China.
We do want to get to trade, but I have one other for you when it comes to Russia, because a large part of the discussion this week has been around security guarantees. But we've had reporting here at Bloomberg News that there are doubts growing about what those guarantees can look like because Russia wants to have a say in what those guarantees are going to be. What is feasible in your view? What can the U.S. push for here when it comes to guaranteeing Ukraine's future, particularly when we know that this will likely be led first by Europe, but then with the United States backing?
Well, the president's taken NATO membership off the table, which he's entitled to do. But I don't know why the United States has given the Russians veto authority over who joins NATO. That's our security alliance. But be that as it may, I think the security commitments that we should make should reflect NATO. They should be in a sense, like Article 5, where the United States provides whatever's appropriate, not boots on the ground, but the kind of strategic support that's necessary to ensure that once Vladimir Putin is stopped, that he doesn't go forward at all. And if I can come back, the reason I'm so confident and so adamant about the Senate needing to move these secondary sanctions is because it was back in 2019 that President Erdogan sent the tanks across the border into Syria. They were raging down on top of our Kurdish allies. And President Trump put me on a plane on Air Force Two and sent me to Turkey to negotiate a ceasefire. And what I would tell you and your viewers is, in that negotiation with President Erdogan, what was persuasive to him was the fact that President Trump had given me a series of sanctions that would be imposed on members of Erdogan's government unless he agreed to a ceasefire to allow us to evacuate our allies from the border region. As you remember, we secured that ceasefire. Our Kurdish allies were able to evacuate safely. And that's why I really do believe that it would strengthen President Trump's hand if, when the Senate comes back, one of their first acts would be to send those secondary sanctions, that tough bill, to the president's desk, let him sign it, implement it at his choosing with the waiver authority. But I really do believe that at the end of the day, we've got to have that hand reached out in diplomacy and negotiations, but the other hand reminding Vladimir Putin and the Russians that there will be severe consequences, as the president said there would be, if the path of diplomacy fails.
Mr. Vice President, we wanted to move on to domestic politics and those questions, and that includes redistricting. It's been a big topic this week, of course, with what's happening in Texas and California. As a former Indiana governor, would you support that happening in the Hoosier state? And what will be the long-term implications of this wave to redraw congressional maps?
Well, Michael, as a former Indiana governor, I'll support what the current Indiana governor decides is appropriate with our General Assembly. You know, the Constitution gives the states the authority to set the time, place, and manner of elections, and I respect that. I also understand the frustration that the president and many Republicans have felt. I mean, there were states the president and I, the two times we ran together, won 35, 40% of the vote, and yet the congressional delegation from that state is more like 20% or less. Some states where we enjoyed 35% support, there are no Republicans in Congress. You know, there's an old saying that what you sow, you reap, and the heavy-handedness of many Democrat legislatures and governors over the years has set into motion this pathway. So I'm going to let people in Indiana and other legislatures make those decisions. But at the end of the day, it'll be the American people that decide.
Well, no matter what happens when it comes to 2026, 2028, we know the economy is going to remain a top issue for American voters. And this week, U.S. soybean farmers said that they were near a, quote, trade and financial precipice and cannot survive a prolonged trade war, particularly when it comes to China. I've learned that Indiana is a top 5 soybean producing state. Are you concerned about farmers, and do you think that this administration is planning enough ahead to protect U.S. farmers?
I always believe that trade means jobs. And in our administration, whether it was in negotiations with Canada and Mexico or in the strong stand we took with China imposing tariffs, it was always about lowering trade barriers and ending subsidies and ending trade abuses. Well, my concern about, and I think it's a concern of many farmers in Indiana and all across the heartland, is that what's emerging from this administration are broad-based unilateral tariffs that are being imposed on friend and foe alike. And that's not leverage, that's industrial policy. And I believe, you know, that history shows, and even somebody that knows a little bit about economics knows that American companies and American consumers pay American tariffs. I mean, some of countries around the world that export to us will take a small reduction of their price, but in the main, Americans pay that cost. And it's particularly meaningful for farmers who understand that when there's tariffs that are imposed on imported agricultural goods here, they also always result in retaliation by those markets around the world. So, again, my belief has always been that free trade with free nations. Let's stand strong on trade abusers like China around the world, but let's look to lower tariffs, lower non-tariff barriers, and that way we'll win in the city and on the farm.
Mr. Vice President, you brought up industrial policy, and we wanted to ask you about some headlines that we have seen and broken here at Bloomberg News about some industrial policy moves. This includes the possibility that the U.S. government may take a stake of up to 10% in Intel Corp, the iconic American chip maker, as well as take a 15% cut of sales of NVIDIA AI chips to China. Were those kinds of ideas on the table during your time in the first administration? And do you think these things are a good idea or a good strategy?
This was not a strategy that we employed during the Trump-Pence years. And I have great concerns about having the U.S. government take a position with the golden chairs in Nippon Steel or just the latest discussions about taking a percent of Intel. Now, the NVIDIA agreement is even more problematic. I mean, we have export controls in place to protect our national security. The limitations on the ability of NVIDIA to sell, to chips to China was on the basis of our national security. Simply taking 15% of those sales doesn't serve our national interests or our national security, I would argue. And so I think we need to take a step back on all of this. I'd encourage the administration. And if I was speaking to the president, I'd encourage him to, it's time for us to think twice. State-owned enterprise is not the American way. Free enterprise is the American way. And a refereed private sector with less taxes and less regulation has created the most prosperous economy in the history of the world. And if we stay on that path, that'll always be true.
Mr. Vice President, the last minute that we have with you, we do want to ask you about news of day. I would love your thoughts about President Trump's decision to call in the National Guard to Washington, D.C. Do you think that this was the right move?
I strongly support the president's decision to use his authority under the Constitution, and even consistent with the Home Rule Act, to really bring safety back to the streets of Washington, D.C. I know there's a lot of debate about statistics, but, honestly, if Washington, D.C. was a state, it'd have the highest homicide rate in the country. I mean, 1,600 violent crimes this year alone in a city this size is just astounding. And I think the residents of this city and people around the country appreciate the president taking the steps that he's taken to create safety on the streets of our nation's capital. And I fully support efforts by the president to provide resources for states and local communities to make every city and every town in America safe.
Former Vice President Mike Pence, thank you. We'll be right back. This is Balance of Power on Bloomberg TV and radio. Alongside Tyler Kendall, I'm Michael Shepard. Joining us now with their reaction to our conversation with former Vice President Mike Pence and more is this evening's political panel, Lester Munson, Principal of International Practice at BGR Group and Republican strategist, alongside Democratic strategist Janae Wartell.
ओके गाइस 5:30 हो चुका है लंदन सेशन के बाद न्यूयॉर्क सेशन ओपन नाउ लेट्स सी थोड़ा क्रूड ऑयल मूव करता है मोस्टली अभी मेरे अकॉर्डिंग तो वही जो मैंने पहले बताया था आपको फेड चेयरमैन की स्पीच है उस वजह से थोड़ा साइडवेज ही है दैट इज़ द ओनली रीजन अदरवाइज अभी तक तो मूव कर जाता क्रूड ऑयल भी मॉर्निंग पे देखोगे वही रेजिस्टेंस पे ओपन हुआ था वहीं पर घूम रहा है ऊपर एक रेजिस्टेंस है यहाँ से एक सेलिंग का प्लान जरूर है कोई डेटा वगैरह तो नहीं है तो 5:30 के बाद सीधा 7 PM पे यूएस मार्केट की ओपनिंग और फिर 7:30 पे फेड चेयरमैन की स्पीच क्या बोलते हैं मेजरली इंपैक्ट करेगा गोल्ड सिल्वर क्रूड ऑयल एनी वन नेचुरल गैस को भी। नेचुरल गैस में कल तो बाइंग का ट्रेड था, फिर एक सेलिंग का ट्रेड था, मार्केट वहीं क्लोज हो गया था, फिर वो सेलिंग का ट्रेड मॉर्निंग पे रनिंग था, तो वो एक ट्रेड चल रहा था। उसके बाद और कोई ट्रेड है नहीं, वही सेलिंग का ट्रेड का ही छोटा सा टारगेट मिला था। लेट्स सी कोई फिर से फ्रेश ट्रेड अगर मिलता है तो वी विल सी दैट। अभी और कोई ट्रेड इसमें है नहीं। क्रूड ऑयल में सेल जरूर कर सकते हैं अपर लेवल से। थोड़ा बहुत अगर नेचुरल गैस को भी देखोगे तो इतना कुछ खास मोमेंटम क्या नहीं है, एक रेंज के अंदर ही रहा है आज भी 4 पॉइंट की। एक्सपायरी भी है ऑप्शन की, नेचुरल गैस एंड नेचुरल गैस मिनी ऑप्शन दोनों की। ओके, नेचुरल गैस थोड़ा बहुत मोमेंटम करता हुआ अब लगता है, अब मूव आएगा थोड़ा बहुत नेचुरल गैस में भी। नीचे कोई सपोर्ट बना दे तो बेटर है मेरे अकॉर्डिंग, बिकॉज उस केस में फिर नीचे से बाइंग करना थोड़ा सा सेफ रहेगा। 530 हो गया है, 530 की कैंडल है, थोड़ी वॉलेटाइल दिख रही होगी आप लोगों को। रीजन बिहाइंड दैट वेरी सिंपल, लंदन सेशन ओपन है, लंदन सेशन के बाद न्यूयॉर्क सेशन ओपन है, लंदन सेशन तो ओपन ही है। खैर, लाइक भी करते रहो जिन लोगों ने लाइक नहीं किया। कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हैं। अननेसेसरी रिस्क मत लेना, ठीक है, क्रूड में स्पेशली। ठीक है, डे लो पे वैसे कोई सपोर्ट तो नहीं है, बट स्टिल नेचुरल गैस पता नहीं क्यों रुक रहा है वहाँ पर। सपोर्ट क्रिएट कर दे तो बेटर है, फिर वहाँ से बाइंग आएगी तो ज़्यादा बेटर रहेगा ट्रेड करने के लिए। ऑयल का व्यू फिलहाल तो साइडवेज चल रहा है भाई। क्रूड ऑयल 7:30 पे स्पीच है ना फेड के चेयरमैन की, तो मोस्ट प्रॉब्ली उसकी वजह से। ये जिन लोगों ने नहीं बुक किया था नेचुरल गैस में बुक कर लेना, टारगेट सेलिंग वाले तो पहले ही। देखते हैं फिर से कोई नया ट्रेड अगर वहां पर बनता है तो। 5:30 की कैंडल भी क्लोज हो चुकी है और लंदन सेशन के बाद न्यूयॉर्क सेशन भी ऑलरेडी ओपन है। ठीक है, अब कोई डेटा तो नहीं है, 6 PM भी कोई डेटा नहीं है, 7 PM पे यूएस मार्केट की ओपनिंग रहेगी तो उसी का ध्यान रखना। और फिर जैक्सन होल सिम्पोजियम का सेकेंड डे है, वहाँ पर फेड चेयरमैन की स्पीच होगी तो वो क्या बोलेंगे उसको लाइव सुनने की कोशिश करेंगे। ग्रेट। नेचुरल गैस ठीक ठाक आ गया नीचे अब। लेट्स सी कोई सपोर्ट क्रिएट करता भी है या फिर नहीं। करेक्ट। Okay, still there is no support over here in natural gas. कोशिश कर सकता है सपोर्ट बनाने की। लेट्स सी। कहीं पर अगर पॉसिबिलिटी मिलती है फ्रेश सपोर्ट या फिर कल के लो तक ज़्यादा, क्योंकि कल का जो लो था, कल का लो मतलब ये जो यहाँ से बाइंग आई थी, ये एरिया भी मल्टीपल टाइम टेस्ट हुआ है, ऐसा नहीं कि पहली बार आएगा यहाँ पर भी प्राइस। तो बेटर है कि नया सपोर्ट ही बनाए सो दैट प्रॉब्लम ना हो। नहीं तो प्रॉब्लम क्या आ जाएगी कि अगर ये नीचे डायरेक्टली परसों वाले लेवल पे आएगा तो उसके ब्रेक होने के चांसेस हैं, और फिर इसके नीचे कोई लेवल हमारे पास है नहीं 15 मिनट में, फिर या तो टाइम फ्रेम इंक्रीज करना पड़ेगा या फिर कोई नए सपोर्ट के क्रिएट होने का वेट करेंगे। देयर इज नो अदर ऑप्शन वी हैव। बाकी मोमेंटम तो ठीक ही आ रहा है, लेट्स सी। अभी नहीं, नेचुरल क्रूड में नेचुरल गैस में कोई ट्रेड नहीं है। ये कैंडल भी नहीं बना रही, कुछ कुछ बन ही नहीं रहा सपोर्ट बाई करने के लिए नेचुरल गैस में। बाकी ये बाइंग भी ट्रैप करने के लिए आई थी, ट्रैप करा यहाँ पर। लोगों ने सोचा होगा बहुत सारे बायर्स यहाँ पर चले जाएंगे, देन मूव डाउन। एक्चुअली में ऊपर से देखोगे तो वो एक लो लो फॉर्मेशन पे जा रहा है। ठीक है, अगर ये कैंडल ना थोड़ा सा नीचे आके सपोर्ट ले तो बेटर रहेगा। इसको थोड़ा सा और ही, जब तक सपोर्ट बनेगा नहीं। एक्स श्रीलंकन प्रेसिडेंट विक्रम सिंघे अरेस्टेड ओवर alleged misuse of state funds for London trip। रेजिस्टेंस भी ऐसा कुछ नहीं है, वो कल वाला ही रेजिस्टेंस है डे हाई का, कल जो बना था। उसके अलावा कोई नया रेजिस्टेंस भी क्रिएट नहीं हो रहा है। रेंज बड़ी है तो बढ़िया है हमारे लिए।
And then we can talk about whether there's any daylight between how you think the Fed reads things. What do you think is going on here? So we've obviously had a step down in payrolls growth, and let's just run with the numbers we've got so far, because they might change. I've got no idea, and I imagine you don't either, but let's just run with these numbers. We've seen a step down in payrolls growth. Bruce, do you put more emphasis on the demand side or supply side, a cyclical turn or a structural shift?
Oh, I think labor demand is the key issue here, and I think in an economy that has slowed sharply in the first half of the year, what we're also seeing is a fairly substantial downshift both in the breadth and the magnitude of labor demand. I am concerned that when we see private payroll slow to the pace we've seen in the last few months, that's a warning signal. I call it a stall speed alert. But at the same time, we haven't seen businesses start to retrench. There's nothing suggesting layoffs have picked up. And there's also, I think, importantly, no signs that the slowing in labor demand has really hit labor income, as wages have picked up somewhat in the last few months and hours have held up. So we have an economy that is downshifted. It's sending a risk signal, but it's not by any means breaking. And of course, we do have the flip side on inflation to worry about. I think you have to look at the Fed as responding to these asymmetrically. The recession risk, when it starts to pick up, becomes a dominant factor in their thinking. And as I said, I think it's enough to get you a couple of eases, maybe 3. It's not enough to get you the 130 basis points or so the market's pricing in over the next 18 months.
Bruce, Governor Waller's in your camp, without a doubt. But as you pointed out, the counterpoint to all of this is that measures of slack have been quite stable, and you pointed to wages. Wages are still okay. So you might get a few people on the committee who say this is more about labour supply, and that we've got a real risk here that we might get pushed in one direction when perhaps we should be looking in the other. Bruce, how do you think that debate's going to play out on the committee in September?
You could clearly see that in the minutes this week. And I am very much in Waller's camp in being concerned about labor demand, but I'm not with him. And I think most of the committee is not with him in the way he's reading the inflation data. And that's the tough part of this call, because there is inflation pressure building. I don't think underlying signals are telling us U.S. core inflation is below 3% at this point. If it wasn't for a risk issue, I don't think the Fed would have a case for easing. I do think there's a legitimate risk issue, and I do think it's appropriate to respond to that with modest easing as we go through the next 2 or 3 meetings.
Bruce, how important is it where we've come from? The fact that this has been 4.5 years of inflation consistently above target, the fact that you have scars of 2022 still really fresh, does that in itself push back against some of the Waller thinking that he might be right in normal times, but this time around, the risk of inflation is different?
I think that's right. And I think if we were sitting in a world where you didn't feel there was a heightened risk of a labor market break, you're not supposed to be easing, even as you see growth having slowed. But we do know that recessions are quite disruptive. We do know they're quite disinflationary. We also can see that so far the Fed hasn't lost its anchor on the longer end on inflation credibility. So I think in the balancing act here, if you are concerned about recession risk, you're supposed to respond to it. If I could put another point in here, I do think the Fed is politically vulnerable as an institution.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Nathan Hager. We're watching a developing story just outside Washington, D.C. Multiple news outlets are reporting that the FBI is searching the home of former Trump National Security Advisor John Bolton as part of an investigation into handling of classified documents. The first Trump administration tried and failed to block Bolton from publishing a memoir it said had classified material. President Trump revoked Bolton's security clearance along with more than 24 other former intelligence officials on his first day back in office. Federal Housing Finance Agency Director Bill Pulte says he will make a statement on new evidence against Fed Governor Lisa Cook at 9:30 Wall Street time this morning. Pulte announced that on X a day after the Justice Department urged Fed Chair Jay Powell to remove Cook from the board as it signaled plans to investigate her for alleged mortgage fraud. Pulte says it's part of a broader crackdown.
We refer people almost every day. I refer people every week on a minimum to the Department of Justice for mortgage fraud. This is literally what I am required to do underneath the Housing and Economic Recovery Act of 2008, which is to ensure the safety and soundness of the mortgage market.
Watch our full conversation with FHFA Director Bill Pulte on the Bloomberg Podcast's YouTube page. Bloomberg has reached out to Cook. She's declined our request for an interview. In a statement, she says she won't be bullied into stepping down, but intends to take questions about her financial history seriously. All this comes ahead of Jay Powell's final keynote speech as Fed chair at the Jackson Hole Economic Symposium in Wyoming. Powell has been under pressure for months from President Trump to lower interest rates, but Wells Fargo senior economist Sarah House says she does not expect Powell to show his hand.
This is not like last year where I think there was pretty broad consensus that the Fed was needing to pivot, so the committee still remains very split, as we saw within the minutes, but also just some of the recent Fed speak. And then I think the recent data we had, even since the minutes, it didn't resolve that split.
You can hear my full conversation with Wells Fargo's Sarah House on the Bloomberg Daybreak U.S. Edition podcast. That's ahead of Chairman Powell's speech at 10 a.m. Wall Street time. We will bring that to you live on a special edition of Bloomberg Surveillance with Tom Keene, Lisa Abramowitz, and Michael McKee in Jackson Hole. That starts at 9 on Bloomberg Radio and Television and Bloomberg Podcasts on YouTube. A UN-backed organization has officially declared a famine in Gaza. A report from the Integrated Food Security Phase Classification says about a third of the Palestinian territory's population will face catastrophic levels of food insecurity by the end of next month. That's as Israel's military steps up plans to take over Gaza City in its war against Hamas. Tom Fletcher is the UN's Emergency Relief Coordinator.
It is a famine that hits the most vulnerable first, each with a name, each with a story, that strips people of dignity before it strips them of life, that forces a parent to choose which child to feed.
Tom Fletcher with the UN. Now, Israel is rejecting the body's findings as fabricated. This week, Prime Minister Benjamin Netanyahu authorized new talks with Hamas to release the hostages and end the war. Israel's demanding the group surrender, disarm, and free all 50 hostages it is still thought to be holding in Gaza. Ukrainian President Volodymyr Zelensky says he is not in contact with Russia on potential peace talks, even as dialogue with the U.S. continues. Speaking at a news conference alongside NATO Secretary General Mark Rutte in Kiev, Zelensky said he does not want to set conditions for talks with Vladimir Putin, as he says he could use them as an excuse to continue the war. Back in this country, hitting the beach is going to continue to be a no-go all weekend along the East Coast. The National Hurricane Center says Hurricane Erin is in the first stages of a post-tropical transition, but swimming will still be dangerous for at least a couple more days. Bloomberg meteorologist Craig Allen has more.
The sheer size of Erin continues to batter our coastlines.
with high surf, rough surf. There will definitely be rip currents continuing right through the day on Friday, and it may take until Saturday and Sunday for all of it to calm down.
That's Bloomberg meteorologist Craig Allen. And a federal judge has ordered the immigrant detention camp known as Alligator Alcatraz to wind down and be dismantled in the next 60 days. U.S. District Judge Kathleen Williams has barred immigration authorities from bringing more detainees to the Florida Everglades facility. She says it was built without a proper environmental review. Florida has filed notice of appeal. On Wall Street, futures pointed higher ahead of Chairman Powell's speech. S&P futures are up 0.2%, so are NASDAQ futures. Dow futures up 0.33%. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
Are you looking for a new podcast about stuff related to money?
Well, today's your lucky day.
I'm Matt Levine.
And I'm Katie Greifeld.
And we are the hosts of Money Stuff, the podcast. Every Friday, we dive into the top stories about Wall Street, finance, and other stuff.
We have fun, we get weird, and we want you to join us.
You can listen to Money Stuff, the podcast on Apple Podcasts, Spotify, or wherever you get your podcasts.
The forces shaping markets and
Oh, it's hanging over. It's the exact correct language. There's no question about it. You still have the normal cadence of Jackson Hole. For example, there's 6, 7, 8 papers that come out. Michael McKee prints them out perfectly, and he reads every page of the academic papers. Guess what? I don't do that. I'm talking to the reporters here gathered, and you're right. At the top of the pile of topics here is Lisa Cook.
So I spoke to Mike earlier. He said she's expected to arrive. She hasn't arrived yet. Does it take away from Fed Chair Powell's message tomorrow? Does it distract from what he says about this economy and what he indicates or not about September?
It's a really fair question. I don't think so. I think Michael McKee, who's better at this than I am, would say exactly the same thing. What is different here, and our Simon Flint in Singapore absolutely nails it in an essay today, what's different here is the hard facts of the moment are catching up with the chairman. I don't know if they're rewriting the speech tonight with the stars out above the Tetons, or maybe they're writing it on the airplane. But what is very clear here is the hard facts, as Mr. Flint says, have caught up. You have the economic data today. You got concern about inflation. And Tim, the number one thing I'm watching off the Bloomberg here is the 30-year bond. Once again, we're making a dash up near 5%. That's the kind of inflation whispers that have to change the speech.
Tom, of course you mentioned the chairman will speak tomorrow at Jackson Hole. Can you just tell us a bit more about what attendees are really looking to hear from him?
It varies every year. There was one year here, I'm going to say 3 years ago, I can't remember, where we were prepared for a 15-minute, 20-minute speech, and I believe he spoke for 8 minutes. So every year is different. I think the pageantry will be here. There'll be an international audience here. Christine Lagarde here, Mr. Nagel of Germany is here, Bailey of the Bank of England scheduled as well. But what's interesting is within the pageantry, what do you expect from a speech? And the answer is they'll be looking for certain nuances and certain single sentences that will be different. What you're not going to get a lot of is what's he going to do in September. That would be rude. He's not going to do that here.
You mentioned a lot of those international voices. I mean, the ECB, we've got Bank of Japan, emerging markets. How are they playing a part of the conversation this year in particular?
Nora, you know my theme. You're already stealing my theme as we go to tomorrow with Lisa Abramowitz. To me, the international angle here is the importance point. William Rhodes, Bill Rhodes of Citigroup, iconic at Citibank, it was called Citibank back then, had this great phrase, central banker to the world. He took it from academics. This is a Jackson Hole where Jerome Powell is the central banker to the world, is he defends delicately the way we've done banking for years, pushing against President Trump. The theme internationally here of central bank independence will be key.
I think also the theme of labor, Tom, and it's something that we've spent a lot of time talking about in recent weeks, especially since that shocking report came out earlier this month about those numbers for the month of July. And it's really shifted the conversation about what employment in the United States and what healthy employment numbers look like in the United States, where borders are closed, immigration, legal and illegal, is down, and growth among American families is not what it was a couple generations ago. What does that picture look like in terms of reshaping the American workforce?
Well, and reshaping the speech as well. It's a movable feast right now, Tim. The number one thing is we've seen a trend in the data. The conceit is labor data always lags. Okay, fine. And we've seen this trend, including continuing claims today. Bramo put out on Twitter, I was, stuck in an airport somewhere. Bramo put out on Twitter that great continuing claims chart, which shows this explosion up in the weekly data. That's the kind of tea leaves that gets a Fed to shift. President Trump wants them to shift quicker. And let's remember, we've got that jobs report early September before Mike McKee's in that press conference, September 17th.
Well, I want to just talk about the energy. I mean, you've been to so many of these symposiums. What's the energy like on the ground this year in particular?
Quiet. First thing I noticed when I walked in, there's a whole new quiet tone to it. Mike McKee and I remember August of 07, which was, I think, I'll say 7 days after LIBOR OIS went out 4 standard deviations. This place was chaos. My guess is a lot of people are coming in tomorrow morning, and tomorrow morning here at the Jackson Lake Lodge will not be quiet. There'll be a real turnout for the speech. With that said, it's one part academic, but it is one part about this attack on the central bank by President Trump.
Extraordinary growth, but extraordinary growth in applications of AI that you're currently building and helping with businesses translate their data. How do you accelerate that?
Yeah, that's why we did this investment round. We were looking at the product portfolio, and there's 2 areas we really wanted to invest in, and that's why we did the fundraise. One is lake-based, so agents and AI is also going to revolutionize databases. I know we're thinking about how it's affecting society, but the database market is $105 billion TAM, and what we saw in the data is that 80% of the databases are now being created not by humans, but by AI agents. So that's why we want to invest it in our database product called Lakebase. And the other side is a product we have called Agent Bricks, where we're really investing it in how do we actually help automate tasks with agents at enterprises with high quality and high fidelity without hallucinations. So that's why we're doing this. We're investing it in those 2 areas that we think have huge potential.
Ali, can you kind of translate for our audience how different the technology is needed to cater for an AI agent rather than a human?
Yeah, so the agents move much, much, much faster. We think we're slower. We take our time. These things just go all the time, right? There's no stopping, and they can do it in parallel. So there's many, many of them doing it. So what you need to make sure, for instance, if you're providing infrastructure for them like a database, you have to make sure that the cost of that is low, because they're going to spawn up and try many, many things. It's almost like you can imagine that you have, 100 interns unleashed, running off, trying lots of different things. So you'd like to lower the cost of it. You want to make it super fast, because if they're trying to use a database and the database is slow, now you've slowed down all of the interns. So you don't want to do that. So those are some of the things you have to do differently. Move faster, lower the cost, let them experiment more, because they're going to try lots of stuff and then they're going to pick the best result. That's not how humans operate, because we're more expensive, we take our time, and then we're sort of, measure twice, cut once kind of approach, which is not the case with the agents.
Let's talk about expensive humans, because you've been adding, I think, about 50% by the end of this year, right? Adding 3,000 to your headcount. How expensive are those humans at the moment, Ali, given the talent wars we see?
Yeah, I mean, I thought already that things were very expensive a few years ago, and we pay top of the market. We compete with, say, Google, Meta, and so on. But I would say the last 12 months or 6 months even have been insane. I mean, it just keeps going higher and higher and
200
higher.
million high, Ali? Like, are you having to counteract that?
Yeah, I mean, look, we're seeing insane offers out there. If the talent is really that good, we will pay up. However, there's also the other side of it, which is they're going to work together with their coworkers, and you want to have equity and fairness. If you have two people that have the same background and they're equally good, just because someone started 6 months ago, you don't want to suddenly have them make 1/10 of the person that's sitting right next to them. So if you don't keep that equity in mind, then people get unhappy, they talk, and then they will move around. And that's why we're seeing so much churn in the AI market right now. People are switching jobs, from this company and then back again and so on. So you want to also be a little bit thoughtful about it, but yeah, you have to pay up. Otherwise, that's the price to pay right now.
What about paying up for M&A? Because I know that you've raised funds potentially to do that. What sort of companies?
Yeah, I mean, we're looking at across the board, right? Like this database technology I talked about, right? Lakebase, which is separated compute and storage for Postgres, that's came through an acquisition that we did for $1 billion. So we're continuing to be very, very interested in these, in where there's talent. AI is very interesting because, on the one hand, we hear about these companies that have crazy valuations, right? 100 billion plus.
Like
but
you?
On the other hand, yeah, but on the other hand, there's a lot of startups that started 3 years ago, 2 years ago. And, if the revenue is not there and the business isn't working out, but they have amazing talent and they have great ideas, maybe they didn't just have channel distribution, those are great. And you can actually get them for, I guess in the big scheme of things, you could say cheap. But,
Let's just talk about these so-called crazy valuations, Ali, because I know your phone has been running off the hook in particularly the last few weeks, people wanting to allocate more towards you. Do you think that would happen right here, right now? We suddenly see a slight rectification in valuations in the public markets. Are things cooling down? Are you worried by MIT reports reporting of a lack of impact of AI pilots, for example?
No, I've been pretty vocal about this as well. I'm very bullish on agents being able to do all kinds of tasks, but we're like in the very early innings. And some people are already declaring success as if we were done. We're not. We're at the very beginning. When it comes to agents, for instance, one of the biggest challenges is that, when you unleash these agents, the hundreds of interns that go off, they make errors. And, right out of the box, you might have 30% errors. Would you hire a person that makes 30% of the time completely crazy mistakes? No. So we have to get the quality up. That's what Agent Bricks is focused on. How do we iterate and improve the quality? So I do think we have to pace the investments and the expectations on the ROI. What's timeline? If we're thinking that, these agents are just going to work everywhere right now, that's not the case. It's going to take us years to be able to see the impact of AI across the board in organizations, maybe even 5 years. It's still going to be very impactful. It's still something that's worth investing in, but you have to get that timeline right.
From labs in Shenzhen to workshops in Silicon Valley, humanoids are stepping out of science fiction and into our reality. The race is on to dominate the next era in robotics, with companies in Asia and the US vying to take the lead. China is seen as a frontrunner, with Morgan Stanley saying the country will have the highest number of humanoids in use worldwide by 2050. It's the result of many years of government support, advancements in AI, and a strong manufacturing base that gives it more than a helping hand. The market is poised for explosive growth, with the International Federation of Robotics noting two primary reasons for its rise: a chronic lack of workers combined with ageing labour forces in developed nations. Yet sales channels are fairly limited so far, with universities and research institutions currently some of the biggest buyers. This might seem like just a gimmick, but the humanoid companies in China, like Unitree, are blending tech and entertainment as seen as a serious path toward commercialization. Ultimately, the goal is to bring humanoids into households, with varying estimates for how long that might take.
I think maybe 3 or 5 years, the home robots can do the common things in my home.
We are still a bit far from that because, as you can see right now, like the robots cannot perform as in the movies that we are used to see.
It may be decades before humanoids are a common sight in our homes. On the factory floor, though, it's already becoming a reality. Bloomberg Intelligence says improving battery life and efficiency gains in humanoid robots would make them virtually as cost-effective as human workers by 2035. That sort of potential is creating intense competition, particularly in China, where concerns are already growing about overcapacity.
We have a humanoid robot frenzy here. Everybody try to break into the space. I think probably a lot of these companies are not going to exist in the 5 years down the road.
The question is whether this level of interest in humanoids is unhealthy or the right way for the industry to develop. Well, the humanoid robot frenzy in China may still need to peak before we see any sort of consolidation in the sector. I actually spoke with one of the rising stars in the space, DroidUp. The CEO, Chengdu Li, told us why it's so easy to get into the robotics space right now, but only a handful of companies will survive the next 5 years. Here's what he told me about the negatives and the positives of intense competition.
We can hire people knowing about robots. There's so many engineering in China. You know, in every year, more than 10 million of college students graduate college. So there's a lot of engineering we can use. The second is that there's many company in the supply chain. For us, it is very easier to build up a robot. Also, China is a big country. We have a lot of applications. The government are very open-minded. They can support us, encourage us to use the robot in different scenarios. The bet for us is that more than 100 companies work on humanoid robot. I think finally we are less than I think 20, maybe people can finally survive when the big market coming. So the competition is very high. How to survive the next 5 years is our key problem, I think. So you have to find a scenario the humanoid robot can use in that scenario and can really help our customer to solve their real problems.
In the next 5 years, you see then quite big industry consolidation, maybe from more than 100 companies to 20 companies. Is that the scenario that you see happening?
Yeah, I can see that.
What's different about DroidUp's robots?
It's more like a human. Generally, we can see that for any other robot, there's each joint they put a motor. But in DroidUp, our robot using tendon-driven. That means we use 3 motors together to drive 3 joints. The peak power of each motor is lower. So in this way, the robot is much lighter than the other kind of robot.
What's the advantage then? If you've got a robot that's lighter, for someone who's looking at buying a robot, why would they want that, do you think?
In the movement of a robot, they cut energy. The energy, if you strike the people, maybe hurt the people. So if the robot is very light, it means there's not too much energy in the movement, so it will be safer. it is still a big problem. I think if we cannot save the safety problem, the robot will no way to get in the home. For our company, our robot is very light, so it will be easier to use in the home situation. The weight of our robot is about only 60% of another robot in the same size. So the robot is much safer.
One of your robots has just been accepted into a PhD program in China.
Yeah.
Explain the thinking behind that.
Yeah, that's a very interesting problem. The first application scenario for human and robot is performance. So, the AI is growing very fast each year. The speed is much faster and faster. So we think in the next 4 years, the AI is good enough to support a PhD for robot. So we think maybe we can build a robot, learn how to performance. It can learn in labs, or also can in classes.
You mentioned about price or cost. Unitree, for instance, just cut the price on one of its models to $6,000. How do you fare against that, and what sort of pressure as well do you feel as a business to lower your prices?
Yeah, Unitrees they make the robot a very low price. I think they still have money to earn. They still have a profit. That's because the advantage of a supply chain of China. Maybe in other countries it's not easier to get this. For our situation, we can maybe lower than Unitree because our robot needs less material than Unitree. But I think it's not a good way for us just compete with the price. If the company do not have a profit, the humanoid robot problem will not solved. Low price is not a good way for the health competition for the whole world.
That was the DroidArt founder and CEO Qingju Li there, and we'll have plenty more ahead on Bloomberg Tech Asia. This is Bloomberg. Well, China's been leading the world in humanoid robotics with players like Unitree, UBTech, fast gaining global recognition. Let's get more on the outlook now for the industry with Wei Sun. She's principal analyst for AI at Counterpoint Research. And Wei, talk to us about how you see China competing versus the rest of the world. Where are the strengths of China, and where does it also maybe need to catch up a little bit to the US, for instance?
Sure. So China is leading in a couple of sectors. First of all, the low cost, benefiting from the highly evolving and the manufacturing advantages at scale, and also the design for the hardware, the agility of it, and also how robust it can be right now. So that's how China is leading right now. But I think US is leading in terms of the AI models and end-to-end neural networks that kind of make the human or robot eventually being, autonomy, like a full autonomy in the future. So I think they're quite competing in those two areas, the hardware versus the model side.
Yeah, it's really, you can see that strength in China's hardware in particular. The software side may be a little bit of a ways to catch up. And it's really important as well, to your point, around getting humanoids into more complex situations like households, for instance. When do you see that happening in China? And what's that gap as well, if you can put it maybe down to years, between the US and China on software, on that AI side?
I think in a realistic point of view, China will start to have this robot for homes, for households, within 3 to 5 years. If you're a little bit more optimistic, it's down to within a couple of years. So that's quite exciting to look forward to. Yeah.
What we've learned from the tech rivalry between China and the U.S. is how important supply chains are, right? When it comes to China, for example, actually owning about 90% capacity of the components that go into humanoids, how critical is this for the future development of this sector?
Oh, I think it's extremely crucial in terms of the future development, because as the humanoid robots going to be developed in the learning curve, and then all the components, especially how the optimization between the hardware and the software will be extremely difficult and increasingly important for the performance. So China have owning the most of the supply chains, and having this, ecosystem can hugely, first of all, it can hugely reduce the cost for the overall robot, and secondly, it can further optimize the hardware, software integration for the robots. So I think it's very important.
We briefly mentioned how Japan was faring in this sector, especially after it pioneered humanoid development back in the 1990s. How do other countries other than China and the U.S. sit in this race?
Yeah, I think, in the past, Japan was having this great idea and creativity for developing the humanoid robots, but it fails in the scale and also in the cost. And I think right now, and especially with the ChatGPT, the generative AI being a catalyst for the humanoid robots, the whole landscape is turning very differently. And Asia, especially China and also Korea, have this potential to kind of playing a very important role in the future development for the humanoid robot.
When it comes to artificial intelligence and really taking this to the next stage, we mentioned how, of course, the U.S. and China were dominating. Are there any other countries that also could be a big player?
Yeah, I think Korea might be one. And also, there are a lot of research and R&D in Europe that can be leveraged into, contributing to the global robotic development. So I think at this stage, it's still very early. It's an infancy stage of the humanoid robots. As we see, only 2 years ago or more than 2 years ago, ChatGPT, emerges. So it's really hard to see. Anyone in the world can have this, capability or potential to emerge as an important part of the players. So I'm very open-minded to that landscape evolving.
Yeah, and I guess that way that the race of who really wins this is far from settled just yet. But also at the same time, what's exceptional in China is just the sheer amount of competition. Given that we're still a few years off some of those more mainstream applications, do we face any need for consolidation right now in the industry?
I think so. I think, for humanoid robots, it's very important to think about how beneficial it can be and how the potential risk it can cause, especially when it's implemented in household settings rather than industrial settings. So a lot of discussions and the policy formations will be happening in the next couple of years for consolidation on the landscape, certain rules, certain features and functionalities that can be permitted and not permitted in certain settings. So a lot of things will evolve in the policy set of things. Yeah.
Wei-san, really good to have you with us, Principal Analyst for AI at Counterpoint Research. Coming up next, we turn our attention to Japan and hear from the so-called father of humanoid robots, Professor Hiroshi Ishiguro. This is Bloomberg Tech Asia. Remember this robot. At the start of the millennium, Japan was at the forefront of humanoid development. So why does it seem like all the latest news in this space is coming out of China while Korea tops the world in using them? Is Japan falling behind, or is it just heading in a different direction? Take a look at how the tech race across Asia is shaping up.
It was 1999. As people were going crazy over the Y2K bug, Honda unveiled a piece of tech that gave the world a glimpse of what the new millennium could look like. As the birthplace of Gundam, Voltes 5, and Astro Boy, Japan's humanoid robots have stood as symbols of a tech-driven future. A quarter of a century since Asimo, robots have become pervasive in modern Japanese society, driven by need. Faced with a severe labor shortage and one of the world's fastest aging populations, businesses are investing in robots that can work alongside people instead of replacing them. But while the country has remained a major player in robotics over the decades, momentum has shifted. South Korea is now leading the world in embracing robot workers. Its factories have over 1,000 robots per 10,000 employees, a density more than 6 times the global average. Korea has also gained ground in humanoid development with companies like Naver Labs, Robros, and Rainbow Robotics. China's prowess in the field has also generated a lot of hype for investors, even as real-world applications remain vague. The Morgan Stanley Global Humanoid Model sees the market surpassing $5 trillion by 2050, with more than 1 billion humanoid robots in use. This year, humanoids in China ran a half marathon, competed in a kickboxing tournament, and played football. And even if those events weren't exactly technological triumphs, they showed how Beijing has put humanoids at the center of its national strategy, with billions being poured into creations that show off power, dexterity, and speed.
I'm an android designed to resemble a real person.
Hiroshi Ishiguro, often called the father of humanoids, has dedicated his life to making the most realistic and human-like robots, in the belief that the lines dividing these machines and humans will someday completely disappear.
We want to use a humanoid robot in daily situations. But for other countries, in the United States and European countries, probably they want to use the robot in the factories. So in Japan, we want to use in both the factories and daily life. I was in China. I have seen so many humanoid robots there. But the problem is the applications. But I guess within at least 10 years, I think we're going to develop the killer application for the humanoid robots, and people will start to use the humanoid robots in daily life, in factories.
When comparing Japan's progress in robot adoption, Ishiguro says the main issue is practicality, something he sees recent leaps in AI resolving.
I think Japanese people are quickly adapting to the humanoid robots. So that is the Japanese cultures. We never distinguish human and robots. I think we are doing it differently. Actually, 25 years ago, in Japan, humanoid robot development was very active, right? But we couldn't find the real applications. But once we could find the real applications, of course, we want to start to use the humanoid robots in a daily life, right? So. Another bottleneck is AI, right? So in order to develop a better AI, the AI is a very, very fundamental technology for the robot, therefore making it more human-like. But of course, the people worry about the autonomy of AI. But I believe, we are not so stupid.
At the Osaka World Expo, Ishiguro's vision is on display, showcasing a futuristic Japanese society in 50 years where humans and robots coexist.
We can deeply study about the human itself. It's better to give the human-like appearance to the robot so people can naturally talk with that robot, right? So you can have a chat with my robot, right? So, and probably, you can have some feeling to talk with me. And another important merit is we can deeply study about the humanity itself. So the human is animal that have two ways of the evolutions. One is the genes, the other is the.
सागर पारेख जी नेचुरल गैस में क्या करें? कुछ नहीं है भाई नेचुरल गैस में ना कोई सपोर्ट बन रहा है ना कोई रेजिस्टेंस। वही कल का हाई रेजिस्टेंस है और कल का यहाँ पर लो सपोर्ट बना हुआ है। कोई नया सपोर्ट रेजिस्टेंस बनेगा तो मैं लेवल बना दूंगा। फिलहाल के लिए कोई और ट्रेड ही नहीं है। मॉर्निंग पर एक सेलिंग का ट्रेड बना था, उसका टारगेट हो गया था। वैसे तो यहाँ पर भी कोई सपोर्ट नहीं है। लेट्स सी कोई नया ट्रेड बनता भी है या नहीं। एक्सपायरी भी है, ध्यान रखना। वॉलेटाइल बहुत है मार्केट, ऐसा ना हो अननेसेसरी ट्रैप हो जाओ। बाकी क्रूड ऑयल में यहाँ से सेल कर सकते हैं, इस एरिया से नीचे आएगा तो यहाँ बाइंग का प्लान करेंगे। 7 PM होने वाला है. US market is going to open and 7:30 पे Fed Chairman Powell की speech है. ध्यान रखना, important है. Let's see US market कैसा open होता है.
The line in blue below, but it is that big outperformance, a bit of a lull. It started to climb once again. Hard to say exactly who is going to be emerging as the winner, but this is a major market here. The global humanoids market expected to exceed $5 trillion by 2050, but we'll continue to track it. That's it for this episode of Bloomberg Tech Asia. Stay tuned for more next month.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, central bankers travel to Jackson, Wyoming, and we go with them to the richest county in the country. In Dallas, we take a look at its plans to challenge New York's position on top of the financial world.
Wall Street is great. The future is Dallas.
And we sit down with Chevron CEO Mike Wirth to hear what he's doing to restore some balance after all the ups and downs of fossil fuels. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hordern in Anchorage, Alaska, and this is Bloomberg.
In case you missed it on Bloomberg Tech Asia.
How does Samsung think about competition? Because you have also so many Chinese makers coming out with foldables, with good cameras.
You know, rather than focusing on competition, I think we have been focusing on our consumers. I think healthy competition with other companies, I think will bring more innovations and then bring more benefits to consumers.
Don't miss Bloomberg Tech Asia every month.
Can we break 5 straight days of losses in this August lull? Moments away from the start of trading, I hear Tom saying that this is gloomy. Well, it's less gloomy when you take a look at S&P futures up about 0.3% as we have just seconds. Meanwhile, yields just slightly lower on the long end as people look to potentially a more hawkish message from the Federal Reserve. The Nasdaq trying to bounce back as well, and the Russell 2000 up some 0.6%. We do have an open market at this moment, and we are looking at yields that are lower on the day, at least in the long end. Front end is up just a touch. When you take a look at what's going on, expectations for a Fed rate cut next month have gone from 90% to 70%
come in a little bit
in the past week.
And they wait for the next tea leaf, right? Yeah, well, including a speech.
Well, I mean, we've gotten some data from it. It's not just tea leaves, but yes, we've got a speech coming up.
Can we go to WEI and get rid of the Bramall gloom here and mention that year to date we're in a raging bull market?
Okay,
and
I was
dollar
just giving
adjusted,
a sense of where we were coming from.
The DAX in Germany is a Saturn V moonshot of superiority.
Well, we're going to be talking in just a minute with someone who has watched that all happen with the recovery. I will just say, I have been talking about how the S&P is up 13% since the last time we were here, and that the Nasdaq's up 18%, and this has been absolutely a really strong market pretty much across the board.
It's been a strong market, and of course that's part of the issue of why are we cutting 20. The 50 beep rate cut, that all went away.
Yeah, like that's absolutely not in the market at all.
But again, I would say all in all, it's looking at equities, bonds, currencies, commodities, and we are in an August doldrums, which is going to end at 10:01 Wall Street time.
Well, maybe.
This morning.
We'll see. I mean, we've seen some speeches that have left it in doldrums. I don't think this time around, though, and I think that's going to be important. One thing that's been interesting is the euro versus the dollar has strengthened about 4% since the last time we were here in Jackson Hole, and someone who's been watching that, but also watching their own central bank policy, as someone who has made the 11, 12, 13-hour trek. I'm guessing it's probably somewhat longer than that. Bundesbank President Joachim Nagel, who sits alongside us. Joachim, so great to have you here.
Good morning.
Thank you so much for being here. I want to start with a sort of overlay that makes this Jackson Hole different. It feels like there is the question of central bank independence that no one really wants to talk about, but is something that's very much at the forefront of your mind. How important was that question in your decision to make the trek out to Jackson Hole?
I think, as always, the Jackson Hole conference is a very important conference for central bankers, but maybe this year even more important. And when it comes to central bank independence, this is the DNA of good monetary policy. This is the conditio sine qua non to do what we have to do to fulfill our mandate to achieve price stability. And so central bank independence, we have to fight for it.
Do you have any fear that has already been compromised in some capacity in the Federal Reserve, which people used to call the central bank to the world?
Let me put it like this. I don't want to comment on U.S. politics. I hear one or the other comments I really do not like. But just to point out, to give you maybe a kind of a reminder when it comes to the history of my country, Germany, going back to 1948, and we are grateful to the United States that you gave us an independent central bank. This was the starting point for the famous German Wirtschaftswunder. So central bank independence is key to achieve price stability, to build the basis for economic growth. So we have to take this into account.
This is critically important, and to me, this Jackson Hole is far more international than any other Jackson Hole I've been at. Bill Rhodes' great phrase, central banker to the world. Jerome Powell has to speak today to the developed nation central banks and also fragile EM central banks as well. What's the message you need to hear from Chairman Powell that reaffirms independence at a central bank?
Jay Powell gave many important, relevant speeches here in Jackson Hole. And this year, I guess, for him, it's a very important meeting. It's his last meeting in this role, giving such a speech. And what I expect from him, he is an outstanding, excellent central banker. And what I expect from him to deliver a clear message on price stability and the mandate of central banking, and this is price stability. And so he gives us this certainty we need in a very complicated world.
I want to ask this question. Bill called me up this morning and said, let's get Nagel in trouble. So here we go. I want you to talk
making him nervous.
I want you to talk not about American exceptionalism, but from where we sit. There's Leica exceptionalism, Mercedes exceptionalism, everything of Germany that we know. Tell us now about the future of German exceptionalism that you have to steer forward with monetary policy.
I think Germany, we are in a situation, this is definitely not an easy one. When you take the second quarter numbers for GDP, it was minus 0.3. So this year we expect maybe stagnation or a mild recession. But what I can tell you and what I can promise to you is that Germany has the capability to adapt to different situations. I think the world is changing. We are not happy with the current situation, so the trade conflict and everything is definitely not helpful. But at the end, we showed in the past our, let me say, strengths to come back and have a strong economy.
Post-Trump, can you and France and the other leaders of Europe reaffirm that growth, that spirit of growth that you had?
I guess we do something in the moment. We are going in the direction that you alluded to. We have structural reforms. We will do a lot of spending in new investments over the next year. So I think we do a lot of things in the moment, and I can guarantee you that there is a strong coalition on the European side. Germany, France, this axis is working again, and so I'm really confident that we can achieve a lot.
Given the fact that you could see some sort of mild recession in Germany, are you open to cutting interest rates further? After getting to 2%, which is sort of balanced, is it appropriate to become a little bit more accommodative?
Maybe a mild recession for this year, yes, this is true, but maybe we have also to think about that next year economic growth, there's a high probability that economic growth is coming back. When it comes to interest rate policy, I believe that we are in a kind of equilibrium. We have a 2%. We are on our target. This is good news. Interest rates are at 2%. So this is an equilibrium. So I do not see so many arguments that brings me to the point that we should do that we should do more here. So it's something. So I believe that inflation is not the point anymore.
Inflation is not the point anymore, that now it's potentially growth.
We are on our target.
But this is the issue. If inflation is not the issue, at what point do you see risk of disinflation, given the fact that the euro has been strengthening, right? That's importing disinflation. You have the potential for Chinese goods to be coming into the European region, cheap Chinese cars, that's sort of the cliche, that could lower prices. At what point are you going to be fighting disinflation again?
Well, it's definitely not time for complacency. So taking, for example, service inflation is still very high. It's above 3%. So we have to have this wait-and-see attitude. So this meeting-to-meeting approach is, I guess, the best way to do monetary policy in the euro system. When it comes to our September meeting, we will get new data, new projections, and then we will see. But at the moment, if I take all the numbers that I know, PMI numbers, I think not giving me enough arguments to change change the bars.
How high is the bar to cut
I
again?
think the bar is high. And so it needs a lot to convince me to change monetary policy.
The day after Russia invaded Ukraine, I had the honor of David Folkert's Landau on, and he was absolutely brilliant in predicting the fiscal expansion, the unleashing of a fiscal impulse across Europe. You're providing leadership on that. Is there a new nominal GDP to Germany which makes the business process that the Bundesbank looks over more, you're not going to like this phrase, but more Anglo-American, more modern, more new world? Is there a new nominal GDP permanence because of this fiscal impulse?
I think Folkert's Landau made a great analysis in 2022. But let me take this opportunity first to say, Russia has to stop this war. I think this unprovoked war of aggression against Ukraine did a lot of harm to us. I think, first of all, this war has to be stopped. And then I can give you maybe my interpretation of the current situation. Yes, you can say, well, this was an eye-opener for Germany, for the whole European Union. And we should take every step that is necessary to become more competitive.
This is so important, I have to interrupt. Do you see a new German political regime led by Mr. Merz, where there'll be a new impulse by Germany to say to Russia, stop?
I think Friedrich Merz, the new chancellor, he did it right over the past couple of months since he is in office. So he did a lot of reforms. I think he put the right things into the cupboard and say, well, we have to improve on all the structural issues. And I guess it was the right policy up till now. But now we have to implement all these things. Now this is what I can say from a central bank perspective. Now we have to come into action. We have to do it. The money is there. The funding is there. Now we have
Is the will?
I think there's a political will to do it, definitely.
We're about 20 minutes away from the Jackson Hole speech from Fed Chair Jay Powell at a time where all of these different international issues are very much at the forefront. A big question will be domestically how it sort of has ramifications on rates, and internationally the currency blowback as well. How independent are your policies from what the Fed does? In other words, how susceptible are you to either a more dovish or a more hawkish Federal Reserve?
I think central banking in a globalized world is like family business. So we are looking at each other for sure, but we are doing our own monetary policy. We are checking our data. Yes, we know that there are some spillovers from the US policy to the Euro system, but we are doing our independent own monetary policy.
One real ramification that people have looked at so far this year has been the dollar and how much it's weakened, particularly against the Europe. In the first 6 months, we've seen sort of a plateauing out recently, and I am wondering how much of a concern that is for you. I know that different people have talked about levels at which point it becomes a concern. Is there a point where you start to say, maybe the strength is something we don't really want?
So when it comes to exchange rates, I'm often, let me say, not too outspoken. What I can see when I'm checking the data, if you take the long-term mean of the exchange rate between the US dollar and the euro, so we are pretty much on this mean. So it's not something that is maybe producing too many concerns.
Jakob, I'm Mr. Outdoors, and so I have a question. Do the Tetons compare to the Ibsy Loop?
Oh, yeah, you also have incredible language.
Is this like even close to The Hills Are Alive with the Sound of Music?
I did a lot of hiking here. The Tetons are outstanding. It's so nice to be here. And now I have to go back to the conference. It is a little bit something you are to see the nice scenery, but listening to a great speech that I expect from Governor Powell. But you can be very proud to have this Teton Mountains here in the United States.
Commensurate diplomat to just avoid talking about the Alps and how gorgeous they are, but definitely
but you have to come to Bavaria. It is so nice.
We'd like to do a surveillance remote from there.
I would agree, actually, and we'll sing.
I hope you will. I hope you will invite me. I hope you will invite me.
Absolutely. Look out for that one. Bundesbank President Joachim Nagel.
I'm thinking October.
Thank you so much for being here. And we'll see you in the Alps when we're singing The Hills Are Alive with the Sound of Music. Right now, we are just 18 minutes away from that key Fed speech. Coming up next, don't miss this. Patrick Harker, former Philadelphia Fed president, as we look at a market that's calm, up about 0.5% now on the S&P, and yields just slightly lower on the 10-year, 4.3% on the dot. This is Bloomberg Surveillance on television, on radio.
in case you missed it on Balance of Power.
The president says grocery prices are dropping. Is that what you're seeing?
If you go back to COVID and everything, they've obviously gone up since then. I think you see a pause in grocery prices right now because we don't know what to do as far as buying goes right now. The other big one that hit us today was this. India grows most of the shrimp in the world right now.
Wow.
And now this, what do we do now? This just got 50, is it 50% or 25%? I don't even know.
So how long do you think you can sustain margins here if these tariffs do not change? You mentioned the holidays. Is that when this starts to kick in?
Yeah, we're hanging by our fingernails right now. I mean, we can't do this forever. And I'm hoping all of Trump's tariff deals and everything will work themselves out.
Don't miss Balance of Power live every weekday.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, central bankers travel to Jackson, Wyoming, and we go with them to the richest county in the country. In Dallas, we take a look at its plans to challenge New York's position on top of the financial world.
Wall Street is great. The future is Dallas.
And we sit down with Chevron CEO Mike Wirth to hear what he's doing to restore some balance after all the ups and downs of fossil fuels. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Dura in Alberta, Canada, and this is Bloomberg.
There may be a change because I don't see any chance that there's a nod toward a September cut or any promise of a September cut. I think he's going to focus primarily on the decision framework and not give any indication of where he's leaning for September.
That was former Fed Governor Betsy Duke. As everybody waits for that key speech in about 14 minutes' time, we will hear from Fed Chair Jay Powell here in Wyoming. This is Bloomberg Surveillance on television and radio. As we count you down to that speech, we do see in markets a sense of calm after 5 straight days of losses, after a lot of gains, Tom. We've had a big market gain this year. We did see we saw a pause, an August pause, 5 days of losses, and now we're up about 0.5% on the S&P and seeing yields come in just slightly.
I take umbrage. We've forgotten what a correction is. We've forgotten what a bear market is, and we've forgotten what a 35% drawdown is.
We could still mention that markets were down for 5 straight days
because
in a row.
We're Abramowitz, and that's what we do. We got
even though you did see a 13% increase for the S&P 500. This is going to go in circles.
We're going to be flames, is what we're doing.
Right now. Let's have someone save us. Michael McKee is going to join us, and he's going to try to weigh in on this.
Am I going to save you?
You're going to save us. Absolutely.
I'm going to save you.
But also who's going to save us is former Philadelphia Fed President Patrick Harker, who joins us here on set after a sojourn in Yellowstone. You wonder why everyone knows now. Everybody knows that you are hiking in Yellowstone. We've been talking about this with everyone, that it feels very different this time around. How much behind closed doors do all of the Fed members talk about the importance of central bank independence? Is that something very much at the forefront of their minds?
It's essential. It's absolutely essential. We know history, right? We know when that gets lost, what happens. We know that in this country, and we know it in countries around the world. So it is absolutely critical, the independence of the Fed. That does not mean the Fed is not held accountable. I think this is important. Independence doesn't mean you get to do whatever you want to do. There is still an accountability. There's an accountability to Congress, and there's an accountability to the markets, right? There's an accountability to the American people more generally. So I think you can't lose sight of that.
There is an argument that ultimately, if there is a policy on the Fed, whether it's response to political pressure or not, to ease now, and then inflation picks back up, the markets will be the ultimate arbiter, right? That ultimately you will see some sort of market reaction that will be a natural check on whatever that is. Do you ascribe to that?
Yes, the bond markets. I mean, I look at the bond markets. Equities, they're choppy. They're always choppy. The fixed income folks, they're making longer-term decisions. And so that's what I watch. And I think that's right. They will police the Fed in some ways because monetary policy flows through the markets. That's the implementer of monetary policy, not the Fed. The Fed moves one rate, the overnight rate. It's the markets that make monetary policy work.
So today, Jay Powell gets up with the markets anticipating a rate cut.
Yeah.
What does he say? Does he care what the markets are doing right now? Does he make the point that there's a lot of data? Does he open the door to a rate increase?
Yes.
Cut.
The answer is yes. All those things. I think Jay will be cautious. I think he will try to, my own sense, move things more to neutral. That is, there's a possibility of a September cut. I mean, if I think back these 7 weeks ago when I left the Fed, my last SEP, I had 2 rate cuts in for this year. I think that's still appropriate. There's one other tool, though, that he's not going to signal, which I think is important to put on the table, which is the balance sheet, right? We're talking about the rate cut, but the balance sheet runoff, my own view is I think the Fed should stop the runoff now, right? And that's a signal that we want to sit here and see how things play out, and then maybe in September a cut or later. But I think the balance sheet, we often forget about it. Again, it's small now because we slowed the rate, but it's still there. And I think it's an important signal that we want to sit and wait. We're entering a period I'm worried about. It feels, it's not the 70s, but it does feel like stagflation light, right? It doesn't feel great. When I talk to my contacts, there's something that just doesn't feel right.
Well, what's the balance of risks right now? Because we've heard a lot of your former colleagues say we're worried about the labor market, but it still seems to be solid. We're worried about inflation, although it's only ticked up a little bit. We think it might in the future.
So I'm more worried about inflation in some ways because the labor market numbers are hard to discern right now. You think we're shrinking the labor force in some ways, right? And so we're keeping unemployment steady-ish. It's going to tick up, but steady-ish. So we're not going to see those big numbers of 100,000, 200,000 jobs. Part of it is because the labor market's shrinking.
We are mourning here at this Jackson Hole a wonderful guy, Charlie Plosser, just died. He was head of the Philadelphia Fed before you. I want you to recapitulate here right now, freshwater optimism about the American economic experiment. It was with Finn Kinlan, Ned Prescott, and Charlie Plosser in Real Business Cycle Theory. Explain how that innovation isn't going to go away, even with the political intrusion of the moment.
No, I mean, Charlie was one of my mentors, and I just have tremendous respect for him. I was a director of the Fed when he was president, so I got to know him well. I knew him as a business school dean when I was a business school dean. He made tremendous contributions to education, to economics, and not just in macroeconomics, but economics more broadly. And so he's going to be really missed. And he was an incredibly strong and powerful voice for Fed independence.
Speak about centrist America, centrist Republicans, centrist Democrats that took, within the criticisms of RBC, said, you know what, this is about America and this is about our spirit. Is that at risk right now?
Yeah, so people would ask, what am I, a hawk or a dove? And I say I'm an eagle because I'm from Philadelphia. But now...
I don't get it.
Oh, God.
Ask people from Kansas City. They'll tell you all about it.
Ooh, sick burn.
But I consider myself right now a radical pragmatist, a radical centrist. We've got to get the center to rise up in the spirit of what Charlie and his colleagues did and reaffirm the centrality of markets, reaffirm the centrality of democracy. Those two go hand in hand. Human agency is what it's all about.
So we're about 7 minutes ahead of this speech, and one thing that you talked about a year ago when we were sitting here was something that stuck in my mind for the rest of the year, which is that at this point you are looking at anecdotes with almost more importance than the hard data, that gave you a more real-time view of things. How much is that even more so now, given some of the questions around, forget the politics of the moment, just the collection of data, the surveys that people aren't responding to, things of that nature?
Oh, yeah, just look at employment, right? You have the establishment survey, the household survey. Those two aren't quite adding up. There's a lot of choppiness in that data right now. And so, yeah, you have to take that data seriously. And you have to be careful not to make anecdotes data, right? But you do need to listen to what people are saying. And people right now are sitting on their hands. What I'm hearing from lots of people is, I need to let some of this uncertainty. Now, the only exception to that are data centers, right? It's roaring ahead. The only problem is we don't have enough power to power these data centers. But there are areas of the economy that are growing, but a lot of people are just waiting.
Can I note here, Mike wants to get a question in. The temperature's dropped since we started live.
Oh, it feels warmer
It's gone
than usual.
43
I'm not complaining.
Do we expect snow today?
Oh my gosh, it is actually warmer than usual.
Tom is not an outdoorsman.
Yeah.
42 degrees.
You can see Pat sitting there just in a sport coat.
Yeah,
He's
understatement
fine.
of the
We're
year.
all
Carry
fine.
on.
I want to ask you about the framework review, which is something that Mr. Powell is likely to talk about today. What's the most important change that they are likely to make?
If you read the framework review, it was written in a period where we thought interest rates were going to be zero or low forever, right? And inflation was going to be under 2%. And so there was that color to the previous review. That's all going to be taken out, obviously. And I hope I haven't seen the final, right? But I hope that they then emphasize more a balanced approach and more principles as opposed to tactics. Right? We don't need to get into the details of the tactics. That's what the committee does. They need to reassert the principles of the dual mandate.
Well, going forward, under whatever new framework they have, do you think they can eliminate some of the risk that we saw coming into 2020 when Jay Powell here unveiled the last framework, which less than a year later was being junked because of COVID?
Yeah, you know, I get this question a lot. Like, before I went into every meeting, FOMC meeting, did I review the framework and that guided my decisions? The answer was no, right? You face the situation you have in front of you, and you deal with the cards you're dealt with. And so the framework provides a broad sense of where the committee needs to go, but day to day, meeting by meeting, it does not drive.
Wait, this is too important. This is breaking news. Do you read the Fed minutes?
Yeah.
Wow, redhead.
I was in there, yeah.
Exactly, of course, he actually listens too. I am wondering, though, what the risk reward here is, and just to sort of crystallize the moment, what the harm would be of cutting by 25 or 50 basis points. And you talked about how you penciled that in. It wouldn't be that big of a deal. Are we just making these big, grand pronouncements about the same thing, that essentially it might make sense to cut on the margins, but not necessarily go wholesale to 1%? I mean, is that essentially what everyone seems to be coalescing around?
I don't see how you would go 1%, right? I mean, that's just simply not in the cards. 25 basis points, what matters is not the number, but the signal it sends, right? Because what the Fed is, because is 25 basis points going to move the 10-year? No, not really. The market's going to move the 10-year. It's more the signal of where the Fed thinks the economy is, right, and where it's going. That's why I like the idea of pausing the balance sheet runoff as a signal. These are signals, not actual, they're not going to be reflected in people's mortgage rates or credit card rates.
Before we let you go, how much are people talking about who's going to come in to replace Fed Chair Jay Powell?
Well, all the time. You guys are talking about it all the time.
I mean, among the Fed members.
Yeah, that I don't know. I mean, I haven't really. Part of my deal when you leave the Fed is you have to sort of stay on the sidelines for a while. I mean, obviously people are concerned about that. It's a very important position for this country. And so, yeah, I'm cheering for the team that's making this selection, that they make the right choice.
Patrick Harker, thank you so much for being here. Really appreciate it, and I guess go Eagles. Patrick Harker, former Philadelphia Fed president. We are awaiting that speech from Chair Powell, who is going to be speaking here in Jackson Hole in less than 3 minutes' time. Mike, we have been hearing from a number of people the fear of a 70s type of stagflation light. Not exactly 70s, but that seems to be the emphasis so far in the Fed speak we've heard so far.
Well, it's the data that we're seeing. We're seeing a slowdown in the labor market. We're seeing an increase in inflation, but I think the emphasis at this point would be on the light part of it, because it's nothing like what happened in the 1970s. And this is also very early in the process. We recognize what's going on because of what we went through the last time, so the Fed can react. And in the current framework, and I assume this will stay in the future framework, the Fed will do whatever it needs to do to keep price stability. That's going to be their main focus. And if that's the case, then hopefully they are ahead of any stagflation.
Totally unfair question to you, but I'm going to go with it. With a new framework, whatever it may be, does the Fed become ever more ex post, after the fact waiting for data?
It's going to depend on how you define it, because what the Fed is going to do is take out the idea that we're going to make policy based on what we think is going to happen, and they're going to say we're going to look at all the data that comes in. So it could be ex post, or it could be just consensus.
Do the dots stay?
Look, the dots are, it's all the communication tool, and how do you communicate? Maybe get on Twitter. I will say that we are waiting for Jerome Powell to come out and give his speech. We're less than a minute away. Unclear exactly how he prepped for it. How do you think he prepped?
He had breakfast at the Pioneer Grill.
You saw him?
I said good morning to the chairman this morning, and I did not see if it was, I didn't see if he went healthy or full English.
Oh, yeah.
But,
I can guarantee he didn't go full English ahead
chairman.
of this, but this is going to be a monumental moment for him. His last speech at Jackson Hole as Fed chair, with the whole world watching. Does he address independence? Does he deal with the inflation side of the mandate more than potentially the labor market side of things? And frankly, the international feel here, really notable, as you mentioned.
To me, that's a major theme for me, is the international community's screening.
Yeah. Micah has some headlines.
The headlines are out. The chairman has started speaking, and here is the key phrase. The shifting balance of risks may warrant adjusting policy. That's going to get Wall Street's attention because it's opening the door to a rate cut. Here's the key sentence. With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. The Fed is also announcing its new framework, which is pretty much as we were just talking about with Pat Harker, dropping the reference to the effective lower bound, eliminating the inflation makeup strategy, committing to contain inflation expectations and concern about labor market shortfalls. But the key here is that there are downside risks to employment. The Fed chairman says the inflation outlook is that it will rise, but perhaps at a slower pace. So right now we are looking at Fed that has the door open for a September 17th cut. And I guess, Lisa, we're probably going to see the long end and the short end reacting here.
Well, let's pull that up right now. You do see an absolute catering in yields on the heels of this opening up to the potential for rate cuts coming out. The downside risks to employment are rising. What you can see also rising, the S&P 500 now up 1.3%. Yields down 8 basis points on the long end for the 10-year, even more for the 2-year.
And looking at the inflation-adjusted yield, the 10-year real yield comes in 6 basis points. That is substantial. It's still within the range, but at 1.86%, it's a real reversal towards a presumption of Fed accommodation.
Yeah, and this comes at a time where there is this question of how they are going to message this, given that inflation has remained above that 2% target since 2021. Mike, do we hear anything about why this is a Fed willing to look through that kind of inflation?
They do anticipate that tariffs are going to add to inflation, and they think it will take place over time, but they're still looking, at least as Chairman Powell puts it, they're still looking at these as one-time price adjustments within each sector. So it's likely that inflation is going to go up, but then they think it stabilizes and might go down again.
Well, right now, let's take a listen to Jay Powell, chair of the Federal Reserve.
In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework as captured in the revised Statement on Longer-Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the make-up strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
That was Fed Chair Jerome Powell wrapping up his annual Jackson Hole remarks. What a Jackson Hole speech that was. This is Bloomberg Surveillance on television and radio, live from Jackson Hole, Wyoming. What we heard there is they are prepared to move rates lower on the heels of their dual mandate being in conflict. We see a market reaction. We could see 10-year yields are lower by 10 basis points. 2-year yields are down by 10 basis points. So 10-year yields are down by 7 basis points. What you see is a weaker dollar, stronger euro by some 0.7%, which you can see the dollar just weakening across the board, and you can see that increase on the equity space. We have been getting some other news. President Trump has been tweeting saying that if Lisa Cook, Fed governor, doesn't resign, he will fire her. There also was some drama in the main hall of the Jackson Lake Lodge. Bloomberg's Michael McKee is with us. Mike, can you give us a picture of what's been going on as Jay Powell was speaking? Well,
It was, I guess, shortly before he spoke, Lisa Cook walked into the Jackson Lake Lodge. She was not here last night. I guess she's just arrived. And James Fishback, who runs Zora Capital, he sued the Fed in court trying to get the Fed to open its meetings to the public, and the court threw that out. But he was standing there and started shouting at her, "Why did you commit mortgage fraud?" He was apparently, according to the Bloomberg reporters who were there, escorted out by sheriff's deputies.
Yeah.
I think we have to be clear here that these are allegations at the
Absolutely.
best, that there are no charges, no processes in place at this time, right?
No processes in place at this time. And what we've seen from Bill Pulte from the Federal Housing Finance Administration and from the president are they're trying to say factually that she committed fraud, and there is no evidence of that yet.
We will discuss that at a later point. Right now, we're just still digesting the text of a 40 to 45-minute speech by Jerome Powell. It really compares to the 8-minute speech back in 2022. There will be pain. This is a complicated moment. The market sees it as maybe a little less complicated. And to really digest what we just heard, Citi Wealth Chief Investment Officer Kate Moore, who's on set with us in her beloved Jackson Hole, Wyoming. And Kate, what's your impression? I mean, how much did what we just hear from Fed Chair Jay Powell change your view of what their reaction function is going to be?
So it hasn't really changed my view. What I will say is in the last couple of weeks and talking to other people on the buy side and really getting a sense for investors, people were moving a little bit more towards the 50-50 in September, even if that's not what was getting priced into the market. There was the sense that this tension between the labor market and inflation was going to make the decision really difficult. And I think what we're hearing this morning is that, the Fed is on path to start easing rates again or proceed with the cycle. But I don't think that the rest of the meetings to the end of this year and through 2026 are done deals yet. So much is going to be data dependent. So I see the market price moves, and now with near certainty for September and on through the balance of the year. And I think we just have to watch the data.
Right. In watching the data in the Heritage of Citigroup Economics is Willem Bouter, Catherine Mann out the Bank of England and all. There's a complete international and holistic view. Is this ginormous, that's a fancy word, CFA word, folks, this ginormous investment that we're seeing in AI, is the certitudes of this summer, are they at risk given the tumult?
Well, tell me, point out something. The market's been really crowded. Most investor segments have been crowded around these secular themes. And for good reason, right? These companies are putting up great numbers. Every company across every industry is investing in AI and technology. So if you had uncertainty around policy or economic growth or geopolitical tensions or international relations or, fractures in the U.S. consumer, everyone was crowded in this space. That said, they're not crowded because these are companies with, they're crowded because these companies have great fundamentals and the path forward looks great. But what we'll have to see as we go into the back end of the year, if we get okay growth numbers or if we get inflation that's a little bit too perky, if we get rotations in the market. I think some of the rotations in August into the small cap was unwarranted in my view.
So we are sitting here after digesting that speech, and I'm going to have to go read it about 3 more times to really internalize all of the complicated messages laid out by Jerome Powell in his last speech as Fed Chair. Mike, before we continue, Michael McKee here, our chief economics correspondent, can you just wrap through some of the key headlines once more so that we can really understand just how big of a policy shift in some ways this really was?
Well, it's a policy shift, but one that has been signaled for a little while, which is why the markets have been buying into it. But Powell basically accepted the market's argument that it looks like the labor market is weakening, and that is a threat to the overall economy. And inflation is rising, but it may not rise as quickly as the Fed had feared. And so, therefore, the door is open to a rate cut if we get supportive data from the CPI and the employment report that we get at the beginning of September. Now, the thing about what he said today that I think is important is once you open the door like that as Fed chair, it's almost impossible to close it. It would take a lot in these data points that are coming out to change that view. And the market's going to go overwhelmingly towards the idea of a rate cut. So he's pretty much baked it in at this point. So I think what then happens is it goes to Kate's point about where we go from there. The focus will be on the other two meetings this year and then what you do into 2026. And I think if you asked the chairman, he would say, we don't know yet. That's the data-dependent part. But for right now, we're going to give you what you think you need.
And right now, what you are seeing is almost a certainty priced in for a rate cut next month. But, Kate, one other thing you're seeing is weakness in the dollar on the heels of this.
Yeah.
Do you expect that to be very much an ongoing theme, and it just kind of edifies it, given that this is taking the more dovish approach?
Yeah, we had a pause in terms of the weakening of the dollar after a really vicious weakening in the first part of this year. And I've heard a lot of currency strategists say, we're going to tread water for a little bit. We've made a lot of the adjustment. But if the market really believes with high conviction that we're going to continue on a rate cutting cycle, I think it's fair to assume that the dollar would weaken a little bit. I think most people would say over the longer term, they agree that the dollar has been overvalued for a considerable period of time. And I expect that we'll see a little bit more of that adjustment. On balance, though, I think we're going to see appreciation in some U.S. assets, particularly the U.S. equity space, even as the dollar weakens a little bit. And I'm hedging some of the stuff and some of the concerns I have in the portfolio around uncertainty and perhaps pick up in volatility in September into the beginning of October with a little bit of gold.
Interesting. We'll catch up with Kate Moore. She's going to be sticking with us, Citi Wealth Chief Investment Officer, as we get through all the headlines and get some commentary. Joining us now is someone who is very familiar with these types of speeches, St. Louis Fed President James Bullard, who recently was in the media talking about his preference for 100 basis points of rate cuts this year heading into 2026. Also, potential contender, I should say, to be the next Fed chair. Jim, how much are you seeing what we heard from Fed Chair Jay Powell and seeing anything different that you would really say if you were at that podium?
He used the speech to solidify expectations for 25 basis points in September. I was expecting that anyway. Markets were expecting that. He leaned into the most recent labor market report, which was very soft. And so I think that's a done deal. He didn't say too much about beyond that, what you want to do with the October meeting or the December meeting. I have said 100 basis points, going into 2026. So I think you could adjust as you go forward and eventually get a full 100 basis points, but I would go slowly in order to watch the data. And then on the framework review, I'm sure much earlier in the year, they had targeted that they would have the framework discussion and that they would use the Jackson Hole speech to talk about changes to the framework. I thought those were thoughtful and they were well presented in this speech, and they're about what many have speculated on. So I think they did about as much as they can on the framework side.
Jim Bullard, Tom Keenan, good morning to you. I definitely consider this my conversation of the day. You served a lengthy term at the St. Louis Fed. You have lived the decline of a greater economy decades and decades ago in the effort to provide for a resurgent St. Louis. As the next chairman of the Fed, whoever that may be, do they have to manage for two American economies, a technology-driven, exceptional economy, and another, to use a cliche, America flat on their back? How would a chairman execute those two Americas?
Just everything all the way around.
Yeah, I think income and wealth distribution have become more salient topics for the Fed. It's not that clear how much the Fed can really do. Providing interest rate policy for the whole economy. If you change the rate structure, that affects everyone, not just one particular group that you might be targeting. So I think that's been something we've had to wrestle with, and I've actually done research on it myself to try to understand it better from my point of view. So I think this has been a theme for a while, and that'll be an important theme in macroeconomics going forward.
Mike McKee's got a lot of smarter questions than me on the immediacy of this speech. I'm going to ask one more distant question, Jim Bullard. You're at Purdue executing online technology education every single day. How do you define the new technology productivity that America faces? Is it enough to save us? Is it enough to really add on to our present GDP?
Oh, yeah, I think that the AI boom is, it's a general purpose technology that will diffuse through the economy. I think the key question is how fast does that actually diffuse? And sometimes markets can get ahead of themselves and think it's going to happen sooner. Sometimes they're too late, and it happens faster than markets think. But nevertheless, any way you look at it, it's an important technology. It can drive productivity. And I think in higher education is one of the places where you can really have the biggest impact. We put a AI requirement in at the Danish School here for every single student, and we're trying to expand that to all of Purdue. So I think that just shows you how important this technology is.
Jim, it's Mike McKee. I have a question about sort of the process involved in this speech. The chairman is giving his own speech, but basically when he says it's time to maybe adjust policy, he's speaking for the entire Open Market Committee. Going into a speech like this, would he have polled everybody? Does he think he has the votes for that? Because we've been speaking with Fed officials here in Jackson Hole, and there are still some who are saying, well, we're not sure that we need to do that yet.
Yeah, he's going to report on the center of gravity of the committee, even though there might be people that have misgivings. At the June meeting, the committee had a median dot plot of 2 rate reductions by the end of the year. And I think the minutes, suggested something that was more like 50-50, but then the labor market report came in. I think that tilted the balance. So he could have pushed back a little bit. I think financial markets were expecting him to be a little bit more hawkish here and try to set up a 50-50 meeting where you would wait and see for the rest of the data to come in. But I don't think that's where the center of gravity is on the committee. So he went ahead and leaned in. I thought there was quite a bit of talk about the labor market at the beginning. You could have been a little more, a little more emphasis on the low unemployment rate, for instance. And, he did come out at the end of that discussion saying, well, it's in balance, but we're a little bit nervous. So I think, I think he's accurately describing where the bulk of the committee is.
Well, where would you be on this question? Because we've heard Fed officials for some time now saying, yes, we had poor job creation in recent months, but the unemployment rate, as you just mentioned, has been low. And they've described the labor market as solid. Now, this seems to be sort of a major shift in the way they view the outlook and the sort of balance between the two mandates.
Yeah, what he did at the end of that discussion, he said, well, it's in balance. But I think the committee's nervous. I think it has been slowing. And I think the policy rate is moderately restrictive. It's maybe, 125 basis points above the neutral rate. Is that really where you want to be in this circumstance? I think the answer is no. So you can come down some and still have moderately restrictive monetary policy that puts gentle downward pressure on inflation. And then the other thing I think has happened is that this argument from Chris Waller and others on the committee that you should look through the one-time increase in goods prices coming from tariffs. I think that's carrying the day. And, then he emphasized that inflation expectations remain anchored and so on. And so I think that sets up a modest move downward in September.
Jim, we've been talking with you for years, and you are very focused on the discipline of economics. Right now, I'm looking at the headlines that are crossing from the past hour. The top one, of course, is Jerome Powell, Fed chair, saying that shifting risks may warrant adjusting rates. The second one is that Trump says that he'll fire the Fed's Lisa's Cook if she doesn't resign. As someone who is thought to be a contender to become the next Fed chair, Jim, how much does it concern you that there's this increasing political noise around the seat and exactly what the path of policy forward looks like?
Yeah, I want to see due process around something like this. I want to see, you can make charges against anybody about anything, I guess, and the person can answer the charges and the DOJ can decide what they want to do and so on. So I think this has, should have longer to play out before you took that step. Otherwise, it's just is kind of the Wild West, and she could get reinstated later, I guess, or something if there wasn't a conviction. So it seems messy to me. I think these kinds of charges are made from time to time against various officials around Washington, but I'd like to see due process there.
Jim, there's another question here, and aside from Governor Cook and what happens there, about how the perception of political interference handles the market reaction to Fed policy. There is this perception that could cause the dollar to weaken more because there is more of an emphasis on supporting growth and supporting the labor market than containing inflation. And some people are worried that if the Fed does cut by 50, 75, 100 basis points, as you were talking about this past week, that you could see a move up in long-end yields akin to what we saw last year. If you are on the Fed currently and you did see yields along the long end moving up in response to near-term Fed rate cuts, what would you do?
Well, that would definitely be a concern, and that's the tricky part of this business is that you think you're pursuing a dovish policy at the short end, but the long end goes up because inflation expectations start to rise. Markets start to lose confidence in the Fed and the credibility of the Fed, and that can go very, very badly and unfortunately fairly quickly. So I think you do have to be you do have to be careful here. But I'm saying that I think the committee has room to maneuver if they proceed carefully over the remainder of 25 and the first half of 2026.
I don't want to get out front of the debate here or the moment, Jim Bullard, but what I would say to Chairman Bullard and Mike McKee, I got to turn to you. You and I used to sit and look at the dots and go, which one is Bullard? I mean, you and I have done
that. It's fairly easy after a while to figure out. I know Jim would probably agree with that.
Chairman Bullard, is your first act, if you take over the Fed, is your first act to get rid of the dots?
Yeah, I've threatened to, I was president, I threatened to withdraw from the dot plot. I think this could be done better. This was discussed at the Framework Conference, and former Chair Bernanke gave a very nice presentation and talk about a quarterly monetary policy report, get more organized about it, put out a forecast. I think all of that could be done. I've advocated that for a long time, and so I think that would sort of clear up some of the misconceptions around the dot plot.
Okay, this is really, really important, folks. As Jim Bullard made economic history, I would say a decade ago, with a small, short paper, forceful on regime change. How do we get a new Fed away from the guessing and the certitude and the silly parlor game of it, Jim Bullard? With great respect, how do we get to that more disciplined study around the game of the Fed and regime change?
Yeah, I think regime switching is a great way to think about the global economy and the U.S. economy and how it operates. There are relatively long periods of time where you might have, let's say, slow growth and very low interest rates, and then you might switch to another time with faster growth and higher interest rates. I think understanding that and understanding how that affects policy choices is a great thing to study further and talk about further in the years ahead. So, I think it's very salient for what the committee does.
Jim Bullard, former Fed president of the St. Louis Bank, will be sticking with us right now in markets. You can see a cheering across Wall Street to the opening the door to a potential rate cut next month, potentially more. You could see equities surging higher across the different indexes, led by some of the more interest rate sensitive sectors, the Russell 2000. You can see 10-year yields down now about 6 basis points, even more at the front end, down 10 basis points. As people look to the prospect of the Fed looking through some of the inflation from tariffs. You could see the dollar markedly weaker, 117 on the euro dollar cross, up 0.9% in terms of just the percentage rise, up about a basis point. And there's a real question here about what this means going forward. Citi Wealth Chief Investment Officer Kate Moore is still with us, freezing a little bit because it is a little bit chilly here, nippy in the morning. I am curious, though, about what you're hearing in terms of prospective Fed chairs and the political.
संकेत गायकवाड़ जी, क्रूड ऑयल में पुट ऑप्शन होल्ड है, क्या करें? ऐसा लगाओ सर, और क्या करोगे? मार्केट तो मूव ही नहीं कर रहा है। यूएस स्काई रॉकेट, यूएस मार्केट बिल्कुल स्काई रॉकेट तो नहीं कहेंगे। ठीक है, बाकी नेचुरल गैस भी वही डाउन ट्रेंड में ही है स्टिल। ठीक है, फेड की चेयरमैन की स्पीच एंड देन उसका एक इम्पैक्ट मार्केट में। बाकी स्पीच में उन्होंने इतना ही बोला है कि जॉब्स जो हैं यूएस में वो रिस्क पे हैं, तो वो एक डोर ओपन करती हैं टू कट्स, बट ही डजंट कमिट कि रेट कट करूँगा ही करूँगा। तो मिक्स मैसेज है, मोस्टली तो यही कहा है कि उन्होंने रेट कट करेंगे। लेट्स सी। उसकी वजह से यूएस मार्केट अपसाइड गया है। एंड अगर गोल्ड को फॉरेक्स में देखोगे तो वहाँ पर भी आपको एक इम्पैक्ट पॉजिटिवली होता हुआ दिखाई देगा। काफ़ी बड़ा मोमेंटम गोल्ड में, गोल्ड और सिल्वर दोनों में फॉर द स्पीच। लेट्स सी क्या गोल्ड न्यूज़ की वजह से जाता है ऊपर या फिर क्या और करता है। बाकी जितना एक्सपेक्टेड था अब साइड तक जाएगा, वहाँ तक पहुँच तो चुका है ऑलमोस्ट 1,03,000 के अराउंड आज। नीड टू सी। के ऊपर एक रिटेस्ट जोन था, वहां तक पहुंचता हुआ गोल्ड फॉरेक्स में, सॉरी फ्यूचर में, MCX की अगर मैं बात करूं, नीड टू सी क्या ये लेवल न्यूज़ की वजह से ब्रेक होते हैं या फिर नहीं। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। बाकी एक्सपायरी है नेचुरल गैस की, ध्यान रखना, मार्केट ओवरऑल डाउन ट्रेंड में ही है नेचुरल गैस का। बाकी क्रूड ऑयल साइडवेज कह सकते हो आप, कहीं नहीं जा रहा है। मेजर रीजन उसका यही है कि जो सिग्नल आए थे फ्रॉम यूरोप एंड फ्रॉम यूक्रेन रिगार्डिंग द पीस डील, वो थोड़ा सा वाइड स्प्रेड होते हुए दिखते हैं। Fed Powell announced policy framework tweaks for change economic landscape. Fed Chair Powell at Jackson Hole Fed US sector in spotlight ahead of FX। गिफ्ट निफ्टी को देखोगे, गिफ्ट निफ्टी भी कल ओपन जब होगा, बैंक निफ्टी और निफ्टी तो एक एक्सपेक्ट कर सकते हैं मोमेंटम के साथ हो। नीड टू सी, क्योंकि थोड़ा बहुत इम्पैक्ट गिफ्ट निफ्टी में भी पड़ा है, थोड़ा बहुत मोमेंटम पॉजिटिव साइड कह सकते हो। इंडियन जो मार्केट क्लोज हुआ था वहां से अभी गिफ्ट निफ्टी थोड़ा सा ऊपर ही चल रहा है, अप्रॉक्सीमेटली 80 पॉइंट। तो क्या यहाँ से गेन रिकवर करता है मार्केट या फिर नहीं, नीड टू सी, बड़ा इंपॉर्टेंट लेवल है बिकॉज। हाँ, न्यूज़ तो पॉजिटिव ही है कह सकते हो गोल्ड और सिल्वर के लिए। रेट कट का रीज़न इज़ वेरी इंपॉर्टेंट। गोल्ड में क्या न्यूज़ है, वो गोल्ड में न्यूज़ सभी जगह न्यूज़ है। जो फेड के चेयरमैन है, मैंने बताया था ना आज 7:30 पे आपका फेड चेयरमैन पवेल की स्पीच है जैक्सन होल सिंपोजियम में, वो बोलने वाले हैं। और भी बहुत सारे इकोनॉमिक्स बोलेंगे, बट हमें मेनली उनको ही देखना है क्योंकि रेट कट होगा नहीं होगा वो कुछ ना कुछ जरूर बताएंगे। तो उनकी स्पीच के बाद ही मोमेंटम आया है। उन्होंने नॉर्मली यही कहा है फिलहाल के लिए, जितना अभी तक समझ में आया है, कि यूएस में जो जॉब्स हैं वो रिस्क पर हैं। ठीक है, सो रेट कट पॉसिबिलिटी काफ़ी हाई है, बट मैं सर्टेनली नहीं कह सकता कि मैं रेट कट करूंगा ही करूंगा, ये उनका कहना है। तो ओवरऑल आप कहोगे तो दिस न्यूज़ एक्चुअली इज़ वेरी पॉजिटिव। तो यूएस में अगर एम्प्लॉयमेंट रिस्क बढ़ता है तो फेड को कहीं ना कहीं जो रेट कट हैं वो करने ही पड़ेंगे। अब वो कितने होंगे दैट इज़ अ अलग अलग डिसीजन हो सकते हैं। कुछ लोग 25 बेसिस पॉइंट कहते हैं, कुछ 75 कह सकते हैं, बट उनका जो स्टेटमेंट आया है उसके अकॉर्डिंग आप मान सकते हो 50 या फिर उससे ज़्यादा ही वो पॉइंट्स का रेट कट करेंगे। तो दैट इज़ अ बैड न्यूज़ फॉर यूएस डॉलर। यूएस डॉलर वीक होगा इससे, रेट कट अगर होता है तो उसके वजह से यूएस डॉलर देखोगे तो डाउन गया है। एंड जो बॉन्ड हैं यूएस के और जो इक्विटी मार्केट है, रिटेल मार्केट जिसको हम कहते हैं, दैट इज़ इट इज़ पॉजिटिव फॉर दैट, क्योंकि अगर जो यूएस डॉलर है जब कमज़ोर होता है तो पैसा कहीं ना कहीं निकल के जो इमर्जिंग मार्केट है, क्योंकि इंटरेस्ट रेट यूएस के जो बैंक है वहाँ कम मिलेगा, तो लोग पैसा निकाल के, लोग मतलब बड़े प्लेयर्स की बात कर रहा हूँ, वो इमर्जिंग मार्केट में लगाते हैं, तो या फिर इक्विटी मार्केट में लगाते हैं। तो यूएस का मार्केट हो, इंडिया का मार्केट हो, बाकी भी मार्केट हो, सभी के लिए अच्छी न्यूज़ है। साथ ही साथ गोल्ड और सिल्वर जो बुलिस हैं वो भी उनके लिए भी पॉजिटिव न्यूज़ है। तो नीड टू सी, न्यूज़ तो पॉजिटिव ही है जो उन्होंने कहा है, बट उन्होंने ये नहीं कहा है कि रेट कट करूंगा ही करूंगा। ठीक है, लास्ट में उन्होंने ये भी आगे मेंशन किया है, ही डिडंट कमिट दैट ही इज गोइंग टू कट दैट मच बेसिस पॉइंट। कि यस, जो उनका ये स्टेटमेंट पहला था कि यूएस में जॉब रिस्क बढ़ने वाला है, बढ़ सकता है, तो वो एक विंडो ओपन कर देता है कि रेट कट होना ही चाहिए। ठीक है, विदाउट रेट कट किए यूएस में जॉब्स का जो इशू है वो फिर रिजॉल्व नहीं होगा। तो that is a positive news for gold and silver and all equity markets, but bearish for US डॉलर। बाकी गोल्ड और सिल्वर के लिए भी पॉजिटिव ही है। जिसका एक इम्पैक्ट देखते हैं के लिए मिल रहा है। बाकी कल इंडियन मार्केट भी मोमेंटम जरूर करेगा। ठीक है, तो थोड़ा ध्यान रखना गोल्ड सिल्वर में। नहीं, क्रूड ऑयल पे ऐसा कोई डायरेक्टली इम्पैक्ट नहीं है। क्रूड का उससे कोई डायरेक्ट कनेक्शन नहीं है। लाइक करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम। क्रूड भी लग रहा है आज पूरा साइडवेज ही चला जाएगा। एग्जैक्टली लेवल पे भी नहीं आ रहा है। नीचे सपोर्ट पे आ जाए वहीं बाई कर लें, वो भी नहीं आया ना, ऊपर रेजिस्टेंस पे जा रहा है। कल वाले रेजिस्टेंस के ऊपर भी सस्टेन नहीं कर पा रहा है। बाकी गोल्ड का नहीं, हाँ गोल्ड का फॉरेक्स का अगर चार्ट देखोगे ना, बड़ा इंटरेस्टिंग है। जैसा मैंने बताया, काफ़ी इंपॉर्टेंट लेवल पे चल रहा है फॉरेक्स का चार्ट। क्लोजिंग आती है लेवल के ऊपर तो फिर एक अप ट्रेंड वापस चला जाएगा, स्टार्ट हो जाएगा, या फिर डे हाई ऑल टाइम हाई तक वापस चला जाएगा। अभी के लिए देखोगे तो रेजिस्टेंस पर ही है। क्लोजिंग, एनी क्लोजिंग अबाउ 3380, 485, अगर इसके ऊपर सक्सेसफुली ब्रेकआउट कर जाता है हायर टाइम फ्रेम पे, बता रहा हूँ मैं 4 आवर टाइम फ्रेम के आसपास, अगर 3385 के ऊपर कहीं क्लोजिंग सक्सेसफुली हो जाती है, ब्रेकआउट सक्सेसफुली और रीटेस्ट हो जाता है, तो एक अच्छा मोमेंटम वापस आ सकता है। नहीं तो दिस इज़ अगेन अ गुड लेवल फॉर सेलर्स। देखना पड़ेगा कि कितने सेलर पड़े हुए हैं यहाँ पर, क्योंकि दूसरी बार आ रहा है। एक बार ऑलरेडी यहाँ से सेलिंग आ चुकी है रिसेंटली, 14 से मार्केट इस लेवल पे आया था और वहाँ से कंटिन्यूसली मार्केट ने ऑलमोस्ट 1.5% का लो बना के नीचे रिवर्स दिया था। हाँ, फिर उसके बाद ऑल टाइम हाई का ही रेजिस्टेंस, और कोई रेजिस्टेंस भी नहीं है वहाँ पर एक्चुअली में। तो मार्केट को रुकना है तो यहीं रुक जाना चाहिए। गोल्ड की मैं बात कर रहा हूँ, नहीं तो फिर ऑल टाइम हाई की और एक टर्न अराउंड हो सकता है। बाकी 4 आवर की कैंडल देखोगे तो ओपन इक्वल टू लो बनी है गोल्ड में भी। इंटरेस्टिंग रहेगा सेलर्स के लिए क्या यहाँ पर वॉल्यूम एक्यूमुलेट करते हैं या फिर नहीं। हाँ, अगर ब्रेकआउट हुआ 3385 के ऊपर सक्सेसफुली 4 आवर में तो आप इजीली एक्सपेक्ट कर सकते हो मार्केट 3425 430 के आसपास, मतलब वही ऑल टाइम हाई के आसपास, नॉट एग्जैक्टली ऑल टाइम हाई बट ऑल टाइम हाई के आसपास चला जाएगा। फिर वहाँ पर एक मेजर रेजिस्टेंस है नेक्स्ट इन हायर 4 आवर टाइम फ्रेम, बट अभी वो काफ़ी दूर है। अभी मार्केट को अगर जाना है नीचे तो होल्ड करना चाहिए। क्योंकि उस लेवल से भी एक बार सेलिंग आ गई है, एक बार अभी पेंडिंग है, वहाँ पर काफ़ी अच्छी लिक्विडिटी है। तो अगर ये लेवल होल्ड नहीं करता है 3385 के ऊपर सक्सेसफुली क्लोजिंग आती है तो फिर 3420 25 मेजर रेजिस्टेंस, 25 के आसपास, 25 टू 30 के आसपास मेजर रेजिस्टेंस है। डीजे टू क्रूड ऑयल में कॉल ऑप्शन राइटर एड ऑन हो रहे हैं तो डे लो कटेगा क्या? इस पर मैं कुछ कमेंट नहीं कर सकता सर, मैं ऑप्शन चेन देखता नहीं हूँ नॉर्मली। तो इतना कह सकता हूँ मैं, ऊपर एक रेजिस्टेंस जरूर है मार्केट के पास 5635 से 5645 के बीच में, वहाँ एक सेलिंग जोन जरूर है, वहाँ से एक सेलिंग प्लान जरूर कर सकते हैं। नीचे आता है तो मार्केट के पास 5510 टू 5500 के आसपास यहाँ सपोर्ट जोन रहेगा, यहाँ वापस बाइंग का प्लान करना। अभी तो बिल्कुल साइडवेज है, हो सकता है बस्ट करे रेंज को, काफ़ी देर से रेंज बनी हुई है। डेफिनेटली यहाँ कहीं सेलर बैठे हैं, यहाँ बायर बैठे हैं, तो एक ना एक साइड के एसएल उड़ाए जाएंगे ज़रूर। बाकी अगर कॉल राइटिंग हो रही है तो डेफिनेटली, अब किस लेवल पे कॉल राइटिंग हो रही है मुझे पता नहीं, बट अगर कॉल राइटिंग हो रही है अपर साइड पे तो एक बार डाउन साइड के बायर के असर उड़ा सकता है मार्केट। मैं ऑप्शन चेन देखता नहीं हूँ तो मैं इस पर ज़्यादा कमेंट करूँगा नहीं, सही नहीं रहेगा। नहीं, उसको होल्ड कर लो। बाकी लास्ट नेचुरल गैस में ध्यान रखना, नेचुरल गैस और नेचुरल गैस में नहीं, दोनों की ऑप्शन की एक्सपायरी है, लास्ट ट्रेडिंग सेशन है, फिर सीधा मंडे को ही मार्केट ओपन होगा, तो अननेसेसरी रिस्क मत ले लेना। बाकी नेचुरल गैस में कोई सपोर्ट बन भी नहीं रहा है, कंटिन्यूसली डाउन ट्रेंड में ही है। लेट्स होप बनते बनते रह गया ये भी रेजिस्टेंस। नहीं, यहाँ पे सपोर्ट अभी कोई बना नहीं है, नेचुरल गैस में कोई सपोर्ट नहीं है, अभी भी डाउन ट्रेंड में ही है मार्केट। वो जितने भी पुल बैक आ रहे हैं ना सारे ट्रैपिंग के हैं, मत जाना उनमें, फंस जाओगे नहीं तो। ये सारी ट्रैपिंग हुई है यहाँ पर जानबूझ के, बायर को ट्रैप किया गया बार बार, क्योंकि यहाँ पर एक भी इस तरह की बाइंग आई है, डेफिनेटली किसने सोचा होगा बाइंग है, बाई किया होगा, एसएल चला गया। सेम कहानी यहाँ पर हो रही है ना, सडन मोमेंटम आया, सोच रहे होंगे यहाँ पर बाइंग है, ऐसा उड़ा दिया। तो हर लेवल बाइंग का नहीं होता। ओके गाइस, नेचुरल गैस का भी सेकंड टारगेट आ ही गया। ठीक है, देखो ये सपोर्ट यहाँ पर नेचुरल गैस का नया नहीं है। मार्केट इस लेवल को ऑलरेडी परसों टेस्ट कर चुका है, आप लोगों को पता है। ठीक है, डीपली टेस्ट करके गया है यहाँ से काफ़ी देर तक मार्केट। नीड टू सी क्या इस लेवल को फिर से टेस्ट करेगा एक बार। एक एक रिस्क और ले लेते हैं। देखो इसके नीचे सपोर्ट है भी नहीं, सपोर्ट है नहीं इन द सेंस ऑफ यहाँ पर 15 मिनट में इसके पीछे लेवल शो नहीं हो रहे हैं, इवन पेड वर्जन में भी ट्रेडिंग व्यू के। तो या तो मैं दो चीज़ कर सकता हूँ, 30 मिनट का चार्ट लगा के वहाँ पर लेवल ढूंढ सकता हूँ, या फिर यहाँ पर कोई नया सपोर्ट बनेगा तभी बाइंग करेंगे। अदरवाइज इस लेवल पे बाइंग करना है तो अब रिस्क बहुत ज़्यादा है, तो क्वांटिटी कम ही रखना। यस इट इज़ अ सपोर्ट, बट एज आई सेट ये थोड़ा सा मल्टीपल टाइम टेस्ट होके आया है लेवल, तो ज़्यादा रिस्क मत लेना, वैसी एक्सपायरी है। चाहो तो मिनी ट्राई करना, या फिर ऑप्शन में कम ही क्वांटिटी लेना। इसमें ये सपोर्ट बहुत बार टेस्ट हो गया एक्चुअली, और कोई रीजन नहीं है, लॉजिक भी नहीं है यहाँ पर। बट दिस इज़ द ओनली विजिबल सपोर्ट वी हैव, तो गो विद अ स्मॉल क्वांटिटी। ऐसा जा सकता है इसलिए बोल रहा हूँ। और रीजन उसका सिर्फ इतना ही है कि यहाँ पर मल्टीपल टाइम मार्केट काफ़ी देर होल्ड करके ऊपर गया है, तो इसका मतलब यहाँ पर जितने बायर थे पहले से ही सारे के सारे एग्जॉस्ट हुए हैं पहले ही। ऐसा नहीं है कि अभी अभी बस सपोर्ट बना है, समझ रहे हो ना। तो प्राइस का थोड़ा सा ध्यान रखना। 1:3 टारगेट बड़ा रख सकते हो, कोई इशू नहीं है, बट क्वांटिटी थोड़ी कम ही रखना, इसमें रिस्क है। ये क्या हुआ? ठीक है, इस नेचुरल गैस के रेट में आया सपोर्ट पे जरूर है, बट मल्टीपल टाइम टेस्टेड सपोर्ट एग्जॉस्ट भी हुआ है काफ़ी, तो रिस्क में रहेगा। तो ऑप्शन बाइंग अगर करोगे तो बेस्ट है। इस मंथ की तो मत ही करना, नेक्स्ट मंथ की कर सकते हो थोड़ा सा। एंड बेटर अगर थोड़ा सेफ प्ले करोगे तो मिनी ट्राई करना, रिस्की है थोड़ा सा ट्रेड। नीचे कोई और सपोर्ट होता तो मैं वहाँ पर देखता, नहीं तो नीचे कोई सपोर्ट भी विजिबल नहीं है, तो अगर 15 मिनट पे वेट करोगे तो फिर नीचे कोई सपोर्ट बनने का वेट करना पड़ेगा और उसके बाद ही ट्रेड हो प्लान कर पाएंगे। तो इसलिए थोड़ा सा रिस्की ट्रेड यही है अभी। ठीक है, बाकी रिस्की है थोड़ा सा, तो क्वांटिटी का मैंने एसएल भी छोटा ही रखा है, कि बड़ा नहीं रखा है। फ्यूचर में 1.7 1.6 पॉइंट का ही है। लेट्स सी, थोड़े बहुत बायर बचे होंगे तो एटलीस्ट 237.9 के नीचे क्लोजिंग तो नहीं देगा, क्योंकि इसके नीचे क्लोजिंग आ गई तो फिर ब्रेकडाउन ही है सीधा। बाकी ऊपर भी कोई ऐसा नहीं कि यहाँ तक टारगेट लगाया तो यहाँ पर कोई रेजिस्टेंस है, ऐसा भी नहीं है। रेजिस्टेंस कल का हाई का ही है, बट हो सकता है ऊपर कोई नया रेजिस्टेंस क्रिएट करे, तो उसको हम देखेंगे एंड उसको ही एज अ फर्स्ट डिग्री रेजिस्टेंस के तौर पे कंसिडर करेंगे। टाइमिंग का भी ध्यान रखना, 8:40 ऑलरेडी हो चुका है, तो 2-2.5 घंटे ही बचे हुए हैं। 15 मिनट में अगर मैं कहूँ तो टोटल 4 to 8 कैंडल, 8 कैंडल। वो भी सपोर्ट बनते बनते रहेगा। नेक्स्ट मंथ का ऑप्शन ले सकते हैं भानु। बोलो शर्मा जी हेलो। नेक्स्ट मंथ का बर्लिन जी, हाँ नेक्स्ट मंथ का भी ले सकते हो, वो बेटर ही रहेगा, क्योंकि अब तो इस मंथ की आज एक्सपायरी है। साइडवेज चला गया तो भी कुछ फ़ायदा नहीं होगा, या फिर चाहोगे तो वहाँ पर क्या कर सकते हो, एक ऑप्शन सेलिंग कर रहे हो अगर, तो कॉल शॉर्ट कर सकते हो, वो और है बेटर है थोड़ा। अगर और सेफ जाओगे तो फिर नेचुरल गैस मिनी फ्यूचर में जा सकते हो, वहाँ पर एटलीस्ट थीटा डी के नहीं होगा, तो वो एक बेनिफिट है।
New challenges, significantly higher tariffs across our trading partners, are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. There is significant uncertainty about where all of these policies will eventually settle. While the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with policy in restrictive territory. The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
This has sent markets absolutely surging across the board in the equity space. Let's take a look. S&P up more than 1.5%, and as Tom was saying, as the session grows on, you see those gains just building. In the bond space, you can see two-year yields plunging by 10 basis points, 10-year yields down by 8 basis points. Again, gaining steam, almost a certainty that they are going to cut rates come next month. Then you have the dollar weakening dramatically. You see the euro now 1 117.28 as people look to the potential for an ongoing accommodation, even in the face of inflation that is still above that 2% target. This, to me, Tom, really does speak to the moment that we're in. People were expecting that maybe this was going to set the tone, and certainly right now in markets, it is.
Yeah, I have to wait to see what the action is, and the action this morning was to bring in a more accommodative regime. I'm sorry, we still have data coming up, and they may be sobered by the CPI data. I don't have a strong opinion on this, but I got to look at the data. I think I trust the data.
Well, we have two prospective Fed chairs here joining us now. Tracy Alloway and Joe Weisenthal. They also are the co-hosts of Bloomberg's Odd Lots podcast. And I believe you were actually sitting in the lobby, were you not?
Yes.
When we heard James Azora. So what actually happened? Yeah. I mean, this is really a different kind of Jackson Hole that's fraught with that political question.
There's always someone who jumps into the lobby and says something,
Is that really?
But
this is the tone shift, though, because a year or two ago it was about climate change, and now it's about mortgage fraud.
Yes. No, there is. So now it's like a direct attack of this sort of attempt to maybe like change the composition of the governor. There's always someone who makes a scene, but this time obviously more directed at this impulse coming from the White House about changing the board.
There's also just more security around, which I'm sure you've noticed. Plus, there's more journalists around, which kind of indicates that the story has gotten even bigger.
Yeah, although Tracy, and this is something that I know that we've talked about before, this idea of the economic discussion being so interesting at this moment, whether it's immigration, whether it's what's going on with AI, whether it's the youth unemployment. And based on what we heard from that speech, he really was trying to massage that and talk about his concern there.
Yeah, I know you guys were joking about me and Joe running for Fed chair. I'm just going to say right now, I don't want it. I don't want it. This is one of the most confusing moments in economic history that I can remember, because you could make a strong argument either way for staying the course on rates, for cutting rates, or for even hiking rates. We spoke to Kansas City Fed President Jeff Schmidt, and he was talking about how if you look at the Taylor rule right now, the Taylor rule actually suggests that maybe we should be thinking about a hike. I'm not saying you have to stick to the Taylor rule all the time, but it's something to think about.
Pro tip, if you want a good habit as you go into autumn here, listen to read Joe Weisenthal's newsletter. You had a newsletter within the last 48 hours. You're talking about a set of narratives forward. Which narrative today won within the Weisenthal newsletter?
Well, look, today is about the short-term cyclical, the short-term question of the cycle. And as Tracy pointed out, I think this is a very interesting moment precisely because there are many people, they're not necessarily saying like, oh, we need to hike right now, but they are saying like, look, there are conditions in which when you look at stocks, spreads, unemployment, and inflation, maybe many people, if this were severance, you're just waking up right now, you'd say, no, we need higher rates. And you didn't really hear that from
Is this a one-off
Powell.
cut that we're talking about, or do we still maintain a Greenspanian anchor where we're going to set up a trend here of rate cuts?
I think the only thing I can say, or that I would feel confident saying in response to this, look, the market does not see a deep cutting cycle, right? I defer to the wisdom of the markets, whether it's 1, 2, 3, whatever, like by and large, this is not a market that thinks there's a ton of room to cut.
Joe's still an efficient market hypothesis guy.
That's right.
Right now I'm watching the crowds gather for the walk that we're expecting when Fed Chair Jay Powell comes out. And we are expecting him to be with some of the other international leaders. And we were talking about the international tone here at this particular Federal Reserve confab. How much does that really influence, do you think, the message that we're hearing from the U.S. Central Bank?
I mean, I think Powell has to walk a really fine line here where he's clearly paying attention to the U.S. domestic economy. That's the mandate, the dual mandate, right? But on the other hand, you do have other central bankers here. And as everyone knows, when the U.S. economy coughs, the rest of the world catches a cold and all of that. So it's a fine line. It's, a diplomatic exercise in many ways.
I also think, if there are questions about Fed central bank independence, or central bank independence at the Fed, there's going to be questions everywhere, right? Like the U.S. is you would think sort of the gold standard globally for a good institutional arrangement and so forth, and aspired to by many places elsewhere. If this is an important debate here, it's going to be an important debate everywhere.
This actually was the reason why Joachim Nagel really got emotional actually talking about this, and was focusing on how the United States allowed Germany to follow the mold of an independent central bank, which allowed it to emerge from World War II with a currency and with an economy. I mean, that to me is really this ultimate key question. How much does a loss of independence or even perceived loss of independence in the United States really trickle out into central banking policy around the world?
Well, I think the difficulty is no matter what they do now, there's an optics problem. You know, even if Powell really convincingly feels that he should be cutting rates, there are going to be some people who say, like, well, maybe he felt the pressure from Trump, and so he's sort of doing it because of that reason. Central bank credibility takes a long time to build up, and you could argue the Fed has been building it up basically since the 1980s now, since Volcker. It goes away really, really quickly.
It goes suddenly. Suddenly is the operative adverb. Now, you guys spent August in Alaska, and the rumor is you're heading for Japan. Is it September or October?
No,
we're going to get the walk
we're making stuff up here.
And the guy with the biggest headache at the walk right now is Ueda of Japan, if he makes an appearance. I just looked at the Bloomberg, folks. The magic of the Bloomberg on your cell phone is when you need to look at the 20-year Japanese piece, you can look at it. Tracy, nobody's talking about this. Yields unraveling, price down, yields up in Japan. What does that signal to the international central bank community?
I mean, I'm still kind of surprised that Bessent was jawboning the BOJ recently. Like that to me is like a new angle in politics meets central bank policy. That's all I'm going to say.
I'll just say, look, you look at the last 5 years, there's a global factor to all of this. You know, inflation rose and fell everywhere, and to like varying degrees, et cetera, but almost every, especially developed market government, is essentially dealing with the same set of questions all in unison. There's slight changes at the margin. Inflation peaks a little lower here, a little lower there, but all of these stories are really global stories, the entire like sort of developed world.
Can we talk about investment in America? Give me the wide shot right now, if you would, if anybody's still awake in the tent. Give me a wide shot here. And the most important thing here at Jackson Hole this year, besides Chairman Alloway, is the split rail fence behind us, of which the leaders of central bank world are going to walk up to next. We have an investment in a brand new split rail fence at Jackson Hole. The last one was installed by Lewis and Clark a few years ago.
Thank you for this breaking news, Tom. This is really definitely the way to go.
But this again is the investment of America that you're going to see. We have a spanking new fence.
Yeah, and it's going to generate energy for all of the power centers that we have to try to generate II. That's what
I know this is kind of a joke, but I think this is an important point here, right? Because I was, one of the questions I've been asking, like we've been asking lots of people, it's like, okay, 2025 versus 2019, why is that long-term rate higher? Why did market expect? There's just a lot of investment going on globally. Part of this like reshoring, et cetera. And so I think, I think we should take the split seriously.
There's capacity issues as well, right? And the thing about this Jackson Hole is it resembles the 2021 Jackson Hole quite a bit. I think you were both there at the time. You remember the argument back then was, okay, pandemic supply chain issues were going to be transitory. We don't expect them to feed into services, inflation, just goods. You're hearing something very similar right now when it comes to tariffs, right? Like we think tariffs are going to be a one-time price level change, just isolated in goods, probably not seeping into services. I guess we'll see.
Well, to me, this is the key question. How much were people scarred by transitory? And it seems like maybe not so much.
So inflation is all top of mind for all of us, right? Think back to 2020. We hadn't seen interest rates like much above zero for years and years and years. We all remember inflation now. I'm sure a bunch of companies remember the inflationary playbook now. So
Indeed, which is the reason why potentially they could adjust and adapt and keep prices going higher. Tracy Alloway, Joe Weisenthal of Bloomberg's Odd Lots podcast. Thank you so much, both. And just for the record, Tracy is not in the running for a Fed chair. Well, she just said she doesn't want it. So there we go.
Just rejected
exactly.
it. Go for it,
there we go. So Joe is going to run himself. Right now, let's take a look at markets because it really has been a dramatic move. We have seen equities across the board shooting higher. The Russell 2000, let's just focus on that, up 3 3.9% as people look to the prospect of rate cuts. The S&P up 1.6%. The Y is in the next board, which is bonds. You could see yields plunging, particularly on the front end, with expectations of a Fed that is going to cut next month. What we are seeing is across the board two-digit returns, 2-year yields, 5-year yields lower by 11 and 10 basis points apiece. 10-year yields are lower by 8 basis points. Even the 30-year are responding, but not that much. This is a yield curve steepening that is global, and I think that's interesting.
The 30-year would be a bigger move, and it's just not.
Well, you aren't necessarily seeing yields rise, which is a good thing, but you also aren't seeing them fall as much as people look to growth and potentially inflation. If you play this out in the currency space, it is the story you would expect. Dollar weakness in a significant way, down by 0.9% on the Bloomberg U.S. dollar spot, and we can see that across the different currency pairs with the euro, the yen, as well as the other majors. Right now, I'm really focused on the euro in particular, given the fact that we just talked to a member of the European Central Bank about why they will not cut and why they think they're in a good place at 2%, which I think is notable.
I agree. They're in a good place, but there's a wonderful debate about what's next for the ECB. It's off the U.S. radar, but again, I go back, folks, to animal spirit, to the nominal GDP. They just don't have the technology oomph that we have. So is there right now where it should be? No one, I don't think Christine Lagarde knows the answer to that.
Well, Christine Lagarde, I believe, is here. Also here is Michael McKee, a very similar person in ranking and stature for us here at Bloomberg. And what are we looking for? We are waiting for this walk with global central bank leaders at a time when potentially we could hear more about what this cut really looks like. Is it a hawkish or is it a dovish cut next month?
Well, I don't think they're going to say the things that this may do is add some symbolic support for Jay Powell, because he's going to be walking with the three major central bankers in the world besides himself, who all agree that central bank independence is important. And at a time when Powell's under political pressure, it's a picture that's worth having for the Federal Reserve. They're going to do it a little bit differently this time, walk down a different ramp so we get a nice picture of them with the mountains in the background. But this has become a staple of Jackson Hole, and ordinarily it doesn't mean a whole lot other than it gives the TV networks a chance to have pictures of the Fed chairman here.
Right.
In this case, it may mean a little bit more.
It shows the marking of time. I had the clearest memory of 07 was Stan Fisher, the late Stan Fisher, I should say, on the phone down the walkway here, on the phone for 3 hours as the world fell apart. How does the walk and how do these meetings, how are they different from 15 years ago?
Well, 15 years ago, television was barely getting started here. It wasn't such a big deal. And it has now put a focus on the chairman's speech that was never there before. This is an academic conference. Now that Chairman Powell is done, they're talking about academic papers, discussing them in a way that university professors do, about things that will happen years from now, or trends that are going to extrapolate out. The Fed chairman's speech has now become a focal point for Wall Street because there's not a lot of other news in August. And so that's the major change here, is that we're all here because of that.
And the other change with an aged Alan Greenspan is it used to be the chairman only spoke about monetary policy, never the fiscal space, never ever the dollar. Remember Phil Graham taking Greenspan's head off one day over that. Now everything's fair game, isn't it, for each and every central banker?
Well, you watch Jay Powell. He avoids, very strongly avoids anything that would represent a judgment on fiscal policy. The Fed doesn't have a choice. It has to accept the fact that there's going to be tariffs, and that's going to have an economic effect. So he talks about that. But he will never say whether tariffs are a good thing or a bad thing. He won't even say what I'm saying, whether the tariffs are a tax on you and me. When Alan Greenspan did that, which was basically when we were running a budget surplus and he endorsed a Republican tax cut, every other chairman felt like the Fed got its fingers burned there. And so they're not going near that stove. They want to stay away from fiscal policy. Now the question is, where does the Trump administration go? Because they have talked about giving the fiscal side, the Treasury Secretary, the President, more control over monetary policy.
Right, Lisa, cut me off. We have to go to the walk. This is an important question for both of you. Are we beyond the pandemic at this Jackson Hole?
That's a great question.
I don't know if we are or not.
I guess my question back to you would be, what do you mean by that? The supply chain disruptions marked by the pandemic have continued, but maybe for different reasons, and the labor market has been transformed. And whether that's the pandemic that accelerated it or whether it's the post-pandemic economy, that I think is something that they're grappling with.
Do those academics in that lodge, do they believe we're beyond the pandemic?
I don't know if they believe we're beyond it, but yes, the pandemic, as Lisa said, has had a completely has changed the economy completely for the future, because we've seen a move to work from home and work from wherever, work from Jackson, which Kate Moore is doing, that sort of thing, and it has had an effect on the economy overall. We've seen the baby boomers retire faster than they had been before, and that raises questions about what the size of the labor force is going to be. So it had profound effects on the overall economy that we're going to be dealing with for a long time.
There's something else that has changed materially since 20 years ago, 30 years ago, or even just 5 years ago, which is the type of communication that the Fed has to engage with has changed. And it has changed with some of the political pressure and some of the true social posts that are coming out in real time as Jerome Powell does speak. And it raises a question, how does this Fed message to the American people? We actually want to be true to our dual mandate, and we are not politically motivated in any way. And that was something that Patrick Harker mentioned, that maybe this would be dovish in spite of the political pressure to say, look, we're not going to cut off our nose to spite it too. We are going to stick to the economic data, and we want to prioritize some sort of soft landing above getting inflation very quickly down to 2%.
Well, just there, I mean, what you're saying encapsulates where we are, because the Fed would be reacting to the tariff effects on the economy no matter what. But now people are going to look at all of this through a partisan lens. It becomes a political thing. I was talking with Ben Bernanke last night here, and he was saying it's a good thing that social media wasn't around when we had the great financial crisis, because you can only imagine with the steps they had to take at the time how so many people would have reacted.
Lisa, I'm looking down the alley where you and I played bocce one night drunk when we came out of the grill here. And the press down there, folks, you can't see this on camera right now or radio, but the press is triple what I've ever seen.
And that's the reason why security has also been triple or quadruple, as Tracy Alloway was talking about, because there is this renewed focus for the political reasons, let alone the framework review. I'm sure that all those journalists are very interested in the details of the framework review, but I have a feeling that that might have been another reason why they came here today.
I look at the moment we're in, and yes, we've got the market move. I haven't looked. I don't know where Dow futures are or that, but we're lifting, Mike, and it's sort of a all-clear feel into what you're expert at, which is that next inflation report, that next jobs day. Already, what's the gaming of those two reports?
Well, it's going to take a lot in there to change the Fed's path now, because I said earlier, once you open that door, it's very hard to close it. And the interesting thing is going to be that when we get that CPI report, we will be in the Fed blackout period. So whatever we get out of the jobs report will be what the market sets its expectations on until we get to CPI. The market may move a little bit, but the Fed's not going to have a chance to influence it after that. So we're looking at this rate cut, and then it becomes, and I guarantee you, Lisa and Tom, we're going to be talking on September 17th before the Fed meeting. We're going to be saying, well, so what is he going to say about the next meeting? Because then that's going to be the next question. Do we continue this string of rate cuts, or is this one and we wait for a while?
I mean, a little vignette here, folks. Yesterday, the papers come out. They won't let me see them. I'm a danger to society. McKee gets them all, and he prints them out, and he reads them just like your freshman year in economics. Mike, within the grind that you do, where does this end up for the November meeting, the December meeting, into next year? Or are people like you just completely focused on the 17th of September?
Right now, you have to focus on the 17th of September, but I say that economists are more focused on the 5th of September for the jobs report and the 11th of September for the CPI report, because those are going to inform us as to what the odds are that the Fed is going to do something or need to do something going forward into the rest of the year. If inflation rises faster than Chair Powell suggested today, then they might have to say we're going to pause for a while.
Lisa, is it rude to ask Mike if we can trust the numbers, the jobs report numbers? numbers?
No, I think that that's very much, you could speak it actually not even in a whisper.
Really?
Yeah.
Do you trust the numbers of the jobs report? I'm not kidding.
I trust the numbers of the jobs report as that they are as good as they can be under the circumstances. The people at the BLS are dedicated public servants who don't have a partisan bent to them. They are more interested in statistics than anything else. And yes, there are problems with the surveys, especially declining response rates, but that's not a political effort to manipulate the data. They're doing the best they can. And as we've always said about the Fed, they have to work with the numbers that they have. There will be revisions, but when they're making their decision, they work with the numbers that they have.
We are sitting here in front of the Grand Tetons waiting for the walk with Fed Chair Jay Powell and other luminaries. We understand Christine Lagarde among them as they walk out for a picture with the Grand Tetons as the backdrop, as is the tradition for Jackson Hole and the speech that we get at the symposium of the Fed. We have not necessarily heard that there is any kind of movement yet. We will bring that to you when we see it. What has been notable is that the speech took longer. There was a little bit of a delay with him getting to the speech, and it seems like maybe this has to do with security, maybe it has to do with the sort of import of the moment, but this has definitely been a different type.
I was not in the room, but I understand one of the reasons for the delay was that the audience gave him a standing ovation as he went up to the podium.
Very strong sense of trying to celebrate him in his last speech.
An audible here as we wait for the walk. We have a beautiful shot for Bloomberg Radio. It's of this magnificent international architecture of the Jackson Lake Lodge. Lisa, this was the architect who put the series together of the lodges, and we think of them like North by Northwest, Alfred Hitchcock, these gorgeous traditional Americana lodges. And then 60 years ago, OMG, they made a modern international lodge. This lodge, when it was built, caused an uproar in the West. Yeah. Absolute uproar.
Yeah, and John Rockefeller, very much present here. You can see his name emblazoned on a rock that is up this trail here. I do want to bring you some headlines that we're hearing from other Fed members. Beth Hammack coming out and saying, I heard the chair is open-minded about September. My expectation is we will see inflation continue to rise. She has been out there talking about the importance of keeping focus on inflation. She said we may see unemployment continue to rise as well. And we need to maintain modestly restrictive stance of policy. So not necessarily endorsing this wholesale dovish policy as the market seems to be taking and running with at a time when inflation has actually crept higher from the last time we were here. That said, a one-time price shock, as Jerome Powell described it, isn't something that should derail the labor market. And one thing that I thought was really interesting, Mike, in the speech that he gave was this idea that their dual mandate, when it comes into conflict, they need to weigh them equally. But it does seem like the labor market is taking a front and center focus at a time where inflation is still expected to creep higher over the long term.
The last framework set up what to do in case of tension between the mandates, and they kept this idea in the new framework. Is you look at both of those and you see which one is going to move the fastest in the wrong direction. And in this case, Powell was suggesting that unemployment, that the labor market could deteriorate faster than inflation rises because the tariffs take time to work their way into the economy. And so that's their concern. And that is why he is essentially signing on to the idea of a rate cut, because they want to make sure they get ahead of the labor market weakening. They have time to react to the inflation danger.
Marut, I asked you this before, but I think it's so important we've got to do it again. Do you assume this was stated as a one-off or maybe a two-off rate cut, or do they set a vector here of 3 or 4, whatever number of rate cuts?
Well, I think what it is set up for one rate cut, and he's not endorsing a continuing series of rate cuts.
Is that a radical change from previous
Well, it's a radical change in the sense that the Fed was not committing to September. And now, while he didn't specifically say that we're going to cut, he essentially did that. The markets are going to take it that way. Where they go from there will depend on what happens with the data and the economy. And I would point out that September is a month where they will give us new economic projections and a new dot plot. So we will get an idea of where they think they're going to go from here and how much more they think they're going to have to do when we get to September 17th.
Yeah, we are sitting here as we talk about what potentially will come down the pike. 6 minutes late. This is unusual for Jerome Powell. He is very punctual usually. That's really interesting.
It's not up to him on the walk. They are doing it. As soon as he's done, they start the first session, the first paper. They discussed it, and then they have the discussion of the papers. And I'm told from our reporters inside the meeting, who are sitting in my chair, that the session has wrapped. So we could see this any moment now. They've got to get everybody together and walk out.
Very quickly here, what happens the rest of the day and into Saturday here? The press leaves, I leave, McKee stays. What happens?
Well, you leave, but we don't leave. The rest of the day, we have another paper and we have another discussion. Then there is a luncheon speech today. Ruth Porat from Alphabet is the luncheon speaker today.
Well, right now we do see Jerome Powell walking out with Christine Lagarde in tow. I believe Andrew Bailey also there. They are all walking and talking as they walk down the staircase. Mr. Ueda of Japan, a very long way to walk to fly from there, as they approach the family photo this year in front of the Grand Tetons.
I can state in all the years I've been here, there's never been a photo like this. This is the absolute first, for my comment on this, of the international audience standing up for the central banker of the world.
I think you can read some symbolism into it. I wouldn't read too much, but because they normally walk with a central banker from another country if they happen to be here. But the choice to have all three of them go out there at the same time is sort of an idea that we all support central bank independence. And we probably will hear that from them. Bailey, Ueda, and Christine Lagarde are speaking tomorrow on a panel together, and I think that will be, we've been told from the reporting from our Bloomberg News colleagues in Europe that that's going to be a message that they deliver. Not maybe mentioning Jay Powell by name, but mentioning the idea that central bank independence is very important.
Can we just sit on how historic this moment is? The last time that Jerome Powell will be giving this speech that he just gave at Jackson Hole at the symposium held by the Kansas City Fed in the Grand Tetons, you have the head of the European Central Bank, you have the head of the Bank of England, you have the head of the Bank of Japan standing alongside the head of the Federal Reserve looking out over the mountains at a time of highly complicated economic questions. And really, to me, goes to the question of how they deal with it going forward, how they fend off potential accusations and job ownings from administrations around the world.
In the single tightest, most intense 30 seconds of this show today, folks, from Jackson Hole, was a gentleman from Germany, Joachim Nagel, speaking, Russia must end the war. And for these central bankers, particularly Madame Lagarde, they're distracted by that war.
Mike, can you give a sense of the international presence here this year versus prior years? There typically is an international presence, but does it feel different this time around?
There are more international central bankers here, and one thing that I found unusual in the guest list is there are central bankers who haven't been here before from the Middle East. So there's an expansion in the efforts by the Fed to bring people into this situation who are becoming more and more important. It's not just the big four central banks, but others who are going to play a role in the future. So they're integrating them into the discussions here because certainly from Africa and the Middle East, you're going to have much bigger economies going forward.
Mike McKee, Adam Posen with us earlier saying it is a post-American world. He talks about a new economic geography for the world. For these three central bankers, do they feel less support from the American central bank?
I don't think they feel any less support from the American Central Bank. They may worry that the central bank in the U.S. gets its powers crimped by the administration. One of the big innovations of the Bernanke years was the use of the swap lines. And if the swap lines were to go away, and the president has criticized those, then that would worry them because it's the way you can keep dollars flowing through the global economy at a time when dollars start to disappear. The Fed can can send them overseas. And that's been a very important way of keeping the global system working at times. They used it certainly during COVID.
Am I right that this has been the longest perp walk we've ever had at Jackson Hole? They've restructured it this year. They look, I mean, Powell's cut and chiseled, but, you know, Governor Bailey, I think, looked a little peaked, as they say.
Well, we're up 6,000 feet above sea level here, which is a lot higher than London is. You know, it's interesting. We use the term perp walk. It's the old crime reporters term where the police department would march a suspect out so that the newspaper photographers could get a picture of them. And it's a kind of a shorthand. And the Fed fought us, the press, for years saying it's not a perp walk. That's a terrible term to use. And now they use it too. It's just so convenient way to explain what we're doing.
Well,
here.
It definitely feels that way with all of the cameras flooding. Let's take a look at where markets are after the speech and as they digest some of the language. Yes, maybe Carl Weinberg talking about how an adjustment could mean a hike, but it doesn't seem like the market is taking it that way. What you could see in equities across the board surging higher. If you take a look at the Russell 2000, up almost 4%. The idea that rate cuts will help the smallest companies, the more leveraged companies, most of all. You could see yields plunging more at the front end than at the long end, down double digits, 10 basis points, 11 basis points on the 2 and the 5-year yields as people price in a Fed rate cut next month, and then maybe a sequence of them. And what I think is notable here, before we go to the currency space, Tom, is this idea we are seeing yields down at the long end. Yes, maybe not as much as at the front end, but this is bringing the whole curve lower. This isn't just an issue of front end going lower and then inflation picking up like what we saw necessarily, at least implied in markets last year when there were 100 basis points of rate cuts. I strongly agree with that. We have the 10-year real yield come in, is still within range. Yes, it's a lower yield, but the drama there of yield curve dynamics really wasn't displayed this morning. Which I think is really notable. You are, though, seeing the currency dynamics that so many people had been expecting to be in play. The dollar weaker, the euro stronger, the yen stronger. Across the board, strength in other currencies as people wonder if this is a real decision by the Central Bank of the United States to allow inflation to remain above 2% for that much longer in order to avoid disrupting any type of labor market strength that otherwise could gain some cloud. Mike, if this had been another type of Jackson Hole, we would have been talking about the immigration disruptions. We would have been talking about AI and what that means in terms of job losses or job gains and productivity. And I just wonder how they understand labor market data at a time of such dramatic transformation, not to mention the demographic shifts. We're all getting older. And who is going to really pay for this economy and the debt that's coming?
All our Social Security taxes are going to pay for Tom here. The academic papers that are being presented here are kind of on those issues.
Funny, huh?
I didn't laugh.
They're aimed at looking forward in the challenges that central banks will face with demographics and immigration, et cetera, right now. The problem for the Fed is they have to deal with the immediate, which is the economy and its reaction to the new fiscal policies that have come into place. And in the short run, what we're seeing is a labor market weakening, and the Fed uses that as a proxy, their best proxy for what's happening to the economy. Because if people lose their jobs, then they don't have money to spend, and companies pull back, and the economy starts to really slow down or actually contract. And so that's the marker they're looking at. And as you see, saw Jay Powell suggest today that is the bigger danger. The risks are pretty balanced, but if you had to pick one, it would be that the labor market weakens, and that weakens the whole economy.
Well, let's take a listen. Fed Chair Jerome Powell had just delivered his final speech in his position at Jackson Hole, and we had the perp walk, as you talked about it, with Andrew Bailey, Christine Lagarde, as well as the Bank of Japan's Ueda, as they support their colleague in his swan song at the Federal Reserve. Let's take a listen to some of the outclips from what he had to say.
The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Our policy rate is restrictive, modestly so in my view. The stability of the unemployment rate and other labor market measures allows us to proceed carefully. While the labor market appears to be in balance, it is a curious kind of balance. Longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored. We will not allow a one-time increase in the price level to become an ongoing inflation problem.
That speech has sent off an absolute eruption in markets. You could see stocks surging. You could see particularly the Russell 2000 gaining clout, and you could see yields plunging. We will continue to look at exactly what the significance of this coming up. This is Bloomberg Surveillance.
In case you missed it on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk the line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss the close, live every weekday.
In case you missed it on Bloomberg Tech Asia.
How does Samsung think about competition? Because you have also so many Chinese makers coming out with foldables, with good cameras.
You know, rather than focusing on competition, I think we have been focusing on our consumers. I think healthy competition with other companies, I think will bring more innovations and then bring more benefits to consumers.
Don't miss Bloomberg Tech Asia every month.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach.
That was Fed Chair Jerome Powell in his last speech as the head of the U.S. Central Bank, as he signaled that, yes, next month it would be live. They would be cutting rates. That was the implication, at least, picked up by the markets, and they ran with it. The Russell 2000, I keep focusing on that, up 3.9%. This absolute screaming endorsement of the idea of rate cuts as people really price in what's to come. And in the bond space, yields markedly lower at the front end. Much more tempered move on the long end.
And again, it gets out to the performance of the American economy. I go back to nominal GDP, and you know what? We may get to September 30th, and I'm shocked. Earnings may be okay. The word that Chairman Powell would use is solid. We may get a better Mag 7. But I am going to back at this historic meeting, just as we were to break, waving to the former governor of the Bank of Israel, formerly with J.P. Morgan International, one of the giants of economics, Jacob Frenkel, is here. And what Dr. Frankel would say, with all of his history at the University of Chicago, it's a dynamic space and things adjust over time. And that's what Powell alluded to today.
And certainly currency adjusting as well as you look at the dollar, markedly weaker, although back from some of the earlier weakness from the immediate knee-jerk reaction from the speech. Dollar spot index down about, just about 0.8%. But really the euro-dollar cross, the idea of 117 back again, 120 in sight as people look to a central bank in Europe that really is firm in that 2% level. Yes, they were ahead of the Federal Reserve when it came to their cutting cycle, but nonetheless saying even with concerns about weakness, we really don't want to see inflation picking up again.
It's still the litmus paper of the system, but on Monday, when I get back, you won't. But on Monday, when we get back, I'm sorry, fixed income is becoming the new foreign exchange when you correlate the dynamics between each country to country to country. Just as a complete aside here, to see Italy pricing their yields better than France, has that ever been in any realm of thinking I've ever had?
Yeah, well, this is the reason why, Michael McKee, there is such an international presence here as you chart toward a busy weekend for you, because you are not leaving. You will be here for all of those speeches. What are you focusing in on? What are we missing that we really ought to be picking up on at a time where some people, Carl Weinberg, saying maybe we're running too far with this idea of adjustment, meaning a rate cut?
Well, I'll go back to something Tim Geithner once said when he was Treasury Secretary. What keeps me up at night is what I don't know is keeping me up at night. You don't know what is going to happen going forward with inflation. That's going to be the biggest question. We can talk to companies and get a sense of what they're doing with their employees. The jobless claims numbers will give us an idea. But when the tariff payments hit those companies, what are they going to do? Are they going to absorb some of it, or are they going to pass it all along? And when we see the market reaction like we're seeing today, and you were talking about good earnings for this quarter, what's going through my head is, yes, but what are margins going to do? And what message will that send to investors? If margins start to get squeezed, then how do companies react? Then they start laying off people.
Do we know? Are there hints yet?
Well, you get different answers from different Fed people. When we talked to Austin Goolsbee, he said people are telling him that in the Chicago district, things are getting a little bit better. They're able to live with the prices that they're getting. And then when we talk to Susan Collins, she says it's much more difficult.
Well, this to me is actually something that's really important, which is the region by region and how different United States regions are. You hear some anecdotes from corporations that actually there is still quite a bit of strength in the labor market and confidence. You hear in others not so much, that actually they're worried about the prospects of the labor market going forward. How hard is it to aggregate all of this, the different regions of the United States, the different political persuasions and what that does with sentiment in different regions of the United States, and come up with some sort of cohesive policy at a time where there's a fracturing, even within the United States?
Well, it is difficult. At least we have 50 United States, whereas Christine Lagarde has to deal with 27 separate countries who all will have their own opinions. In this case, all of the people representing the regions of the United States are part of one organization. It was part of the great design of the Fed that you have input from all around the country, and it's not just decisions being made by the bankers in New York. But it is difficult because you do have different situations going on in different parts of the country. If you ask Mary Daly, she's got a tremendous a lot going on in California and that area with the AI growth and that sort of thing. And then you look at Texas, while the president wants to drill, baby, drill, drillers are stopping because oil prices have gone down, because demand has gone down. And so that's going to have a completely different impact in that region.
Right now we are sitting here just to wrap up what we have just heard, because to me this really has been a seminal moment for markets heading into the fall, but also for central banks around the world. This was the swan song for Fed Chair Jay Powell, his last big speech as the head of the biggest and most important central bank of the world, coming out and opening the door to potentially cutting rates as soon as next month, talking about some sort of adjustment that could come, which could be open to interpretation. And markets took that and they ran with that. And what markets are seeing right now is a Federal Reserve that will rather err on the side of inflation remaining higher for longer, even if they could protect the United States labor market.
I continue to watch how everyone reacts to President Trump. The fact is, he's the change agent of the moment, and to see what Canada did with tariffs today, there's going to be 10 more of those tweaks, announcements, adjustments, and as Kate Moore said, maybe that gets us to a better space.
But no tweet from Donald Trump yet on what Jay Powell has said, which surprised me.
Well, maybe that actually is a bonus, because if the less that there could be some interference, maybe, the better for the members here. Thank you so much. That does it for us. This was Bloomberg Surveillance.
In case you missed it on Balance of Power.
The president says grocery prices are dropping. Is that what you're seeing?
If you go back to COVID and everything, they've obviously gone up since then. I think you see a pause in grocery prices right now because we don't know what to do as far as buying goes right now. The other big one that hit us today was this. India grows most of the shrimp in the world right now.
Wow.
And now this, what do we do now? This just got 50, is it 50% or 25%? I don't even know.
So how long do you think you can sustain margins here if these tariffs do not change? You mentioned the holidays. Is that when this starts to kick in?
Yeah, we're hanging by our fingernails right now. I mean, we can't do this forever. And I'm hoping all of Trump's tariff deals and everything will work themselves out.
Don't miss Balance of Power live every weekday.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, central bankers travel to Jackson, Wyoming, and we go with them to the richest county in the country. In Dallas, we take a look at its plans to challenge New York's position on top of the financial world.
Wall Street is great. The future is Dallas.
And we sit down with Chevron CEO Mike Wirth to hear what he's doing to restore some balance after all the ups and downs of fossil fuels. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
We have shown that our business has the ability, and our independent retailers have the ability to compete directly with the chains, and we are now the second biggest supermarket brand in this country.
Premieres August 22nd, only on Bloomberg.
From New York City, for our viewers worldwide, I'm Bonnie Quinn. Bloomberg Real Yield starts right now. Coming up, Fed Chair Powell opens the door to a rate cut in September, sending stocks surging, also bonds. They're on their best day since May in terms of stocks. The two-year yield falling dramatically on that dovish tone from Jackson Hole. And we're going to go live to Jackson Hole in just a moment for a live report. So we begin with the big issue. Fed Chair Jerome Powell signaling a shift in policy.
The stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Joining us now live from Jackson Hole is Bloomberg Surveillance's Lisa Abramowitz. And Lisa, an absolute monster market reaction, not just to equities and Bitcoin and all those traditional risk assets, but bonds rallying strong. We had the two-year yield down almost 12 basis points at one point. Is this what Fed Chair Jerome Powell was intending?
It's clear that he wasn't as focused on the market as maybe going forward, understanding which aspect of the dual mandate to focus on. Originally, there was this feeling that he might be hawkish because a number of central bankers had come out and said they want to focus on inflation. And once again, Beth Hammack of the Cleveland Fed came out after Chair Powell spoke and said, look, this is something I'm more worried about, the fact that inflation has not managed to get down below 2% since 2021 and has actually crept higher since the last time Fed members came to Jackson Hole, to the Grand Tetons. But what Powell said was actually there is going to be a one-time price shock from tariffs. That is what history tends to bear out. And there are signs of cracks in the labor market, while not shocking, are concerning enough to maybe make them err on that side of their mandate, that it may be time to adjust policy. What this meant to markets was opening the door to rate cuts next month. And now the focus is going to be, is it a hawkish or is it a dovish rate cut next month? Is it something that opens the door to many additional rate cuts, or is it going to be a one and done? What we keep seeing is this international presence of central bankers from around the world supporting Fed Chair Jay Powell in his last speech. And this is a real question, how much it will be received in the White House at a time where there has been quite a lot of noise coming from the U.S. administration.
Yeah, fascinating how Powell characterized the labor market situation as a curious kind of balance. We'll be talking about that throughout the day. But you mentioned the White House, and while Fed Chair Powell was speaking, President Trump was also speaking, and he was asked about Fed Governor Cook and why she should step down.
President Trump, you're going to fire Lisa Cook, the Fed governor, over her mortgage fraud?
If she doesn't resign, yeah. What she did was bad, so I'll fire her if she doesn't resign.
What's being said about this at Jackson Hole, Lisa? It's a very sensitive situation, and I understand the governor is actually in attendance now.
Yeah, and not only that, but there was an individual, James Fishback of Azora Capital, who also was in attendance. And when Lisa Cook, Fed governor, walked into the Jackson Lake Lodge, he started to yell, why did you commit mortgage fraud? And then he was escorted out. It raises this question of tension around all the Fed members, but everybody has pretty much been steadfast in supporting her and saying you need to have any kind of accusation get borne out with a judicial system, and before making any judgments, you need to just let that process carry on. There is a feeling, though, behind closed doors that every single one of the people here is being scrutinized, because it is clear that the president would like to have more control over the Board of Governors so that he could get policy adjusted more quickly. Although I will say that Michael McKee, who was just here with us on set, made a really good point, which is we have not heard President Trump comment directly on what we heard from Fed Chair Jay Powell just moments ago, which maybe signals that this is okay, because ultimately it does signal in a more accommodative stance, which is exactly what President Trump has been arguing for.
Exactly. He's been calling him slow, but does this count as slow if it happens in September? Lisa, thank you so much. Bloomberg's Lisa Abramowitz there out in Jackson Hole, Wyoming for the Kansas City Fed Symposium. Well, just before Fed Chair Powell spoke, we caught up with Boston Fed President Susan Collins. Now, she said that the Fed's September meeting is not a done deal.
It's about balancing that commitment to restoring price stability with an understanding that preserving healthy labor markets also really matters for the public. And so doing that balance, I would say it's not a done deal in terms of what we do at the next meeting, but a range of possibilities is on the table, and we're going to get more data between now and then.
All right, joining us now to talk about all of this, Tony Rodriguez, Head of Fixed Income Strategy at Nuveen, and Megan Swiber, Director of U.S. Rates Strategy at Bank of America. So, Tony, let me start with you. Is it a done deal? The market certainly went from about 65% pricing in to just under 90%. Not a full rate cut priced in for September yet, meaning people do still think there might be problems in the inflation or employment data coming up.
Yeah, so we think that it is a done deal. We think they will cut in September. We think that the reason Powell sounded maybe a little bit more dovish than maybe the market was expecting is really around three things. Number one is that they believe they're starting from a restrictive stance. So cutting is not necessarily being stimulative, it's just getting a bit less restrictive. So it's recalibrating. Number two, the market offered him the opportunity because it began to price out a full cut. If you go back about 2 weeks, we were over one cut. So again, he didn't have to counter the market. The market was down at 70% probability. And number three is the fact that they're under a white-hot political spotlight right now. So had he sounded dovish, it really just opened up, I think, the opportunity for, tweets all weekend around the Fed. And this maybe helped to kind of lower the temperature just a bit in terms of that spotlight.
Megan, does this lower the temperature? A 12 basis point drop in the 2-year yield, will we retrace some of that?
Well, Bonnie, this was definitely more dovish than we were expecting at Bank of America. Our call has been that the Fed would not be cutting rates this year. That's largely out of consensus. And a big part of that has been the strength of the inflation data. And if you look at the recent inflation numbers that we saw just a couple weeks ago, this is more consistent with a Fed that has historically been hiking than cutting. Definitely more dovish than what we were expecting, but generally endorses our view that you want to be long duration here, particularly at the 5-year part of the curve.
Look, he's clearly very concerned about the labour market. He called it a curious kind of balance where you're seeing supply and demand soft. And I guess, is he waiting to see which one is going to be more important going forward? And will we see that in the next round of jobs data, Tony?
So we definitely think they're going to still be data dependent. We think what he's saying is that we're going to maybe try to look through the inflationary risk, because we agree inflation is higher than what they'd like, but they're already talking about it being maybe a one-time level adjustment versus necessarily feeding into longer-term expectations. So we think the data will be determinant around the labor market. If we see the unemployment rate rise more quickly, they will then cut more aggressively. Our expectation is to see a modest rise. We'll get 2 cuts this year, all part of this recalibration, but we avoid recession, so we don't need a significant string of cuts from the Fed as we move through 2026.
I mean, Megan, he also did outline several other possibilities, maybe not his base case, but you could have wage dynamics weakening, for example. You could have inflation expectations moving up again. They're by no means completely anchored. I mean, they are for the moment, but there have been times when the Fed has been very worried about that. I mean, what probability do you give to the other outcomes being the case?
Well, one very important, I think, point to make here in terms of the market's response today is that while nominal rates are declining and compressing, inflation compensation is actually on the rise. We like being long break-evens in the U.S. We like being long inflation in the U.S. versus the euro area, because if we do have a Fed that's cutting in this environment where inflation is still a far cry from the Fed's target, we think that the market should be showing more signs of this inflation target moving higher and becoming unanchored from the conviction that the market has historically had in the Fed being able to achieve 2% in the long run.
Tony, do we continue to see this bull steepener then through the rest of the year? I mean, it's right back on in full force today.
Well, we think that the market's already pricing in all of those cuts that we're talking about. So our expectation is it will end.
You think that it is now in the last half hour? We think it is now. Or was it pricing it in before?
Yeah, no, we think now this move has kind of priced in the 2 cuts. So we think the curve will continue to steepen into next year. But in terms of for this year, at a 375 or lower 2-year note, we think that's fully priced in the kind of 1 to 2 cuts we're expecting for this year. So the move to us on the steepener will continue next year. But for this year, we don't see much more of a steepener move left.
What about the idea that we heard from Susan Collins a little earlier? She's a little more on the fence, perhaps, about September than the Fed chair was signaling. Are we going to see more of that pushback, and could that end up changing the committee's mind, Megan?
I think it's a really tough call. When we listen to Powell's reaction function here, as I mentioned, it's more dovish than what we were expecting. Definitely more of weight put on the labor market versus this inflation debate. We had conviction that we thought Powell was going to be overweighting some of this risk around inflation, but now if we're thinking about a shift to a different Fed chair next year that will likely have more of this dovish reaction function, it really supports this argument to want to be long rates, particularly at the front end and belly of the curve. But getting back to this point on curve steepening, we think that's a very important component of high conviction views, because while front end belly rates may be falling on a dovish Fed right now, these more persistent inflation risks could support a cheapening of the back end of the curve and drive a twist steepening of the U.S. rates curve.
All right, Tony, you were looking for a lot more volatility for the rest of the year. You were also saying that we might see defaults rising now. Is that still your case post-conference?
Yes, I mean, we're comfortable with corporate credit. We just think we've been at abnormally low levels, so we still are comfortable around cash flows, debt levels, et cetera, but we expect to see a modest rise in those default rates. So we could see a modest widening in risk spreads and risk premiums in the credit markets, but we don't think it'll be dramatic because we think we avoid recession and we think companies are still at relatively healthy levels with very open capital markets, so ability to refinance debt, extend debt. So a little bit of an increase in defaults, but not a turn in the credit cycle.
I want to get both your targets for the 10-year, say, by year end. You can give a range. Megan?
We're at 425 for the 10-year by year end.
All right. Tony?
We're at exactly the same place for year end.
Exactly the same spot. And the risk that we see that not be the case, is there anything in the economy that's that fragile that it could break in that scenario?
Well, in our minds, it would be around the employment data. If we see that continue, say, 35,000 type of job level, and the labor supply does not remain low, then we could see that unemployment rate tick up a little bit faster. We're expecting 4.5% by the end of the year. If we get there sooner and more quickly, then you could see some more cuts, and then you would see the 10-year in our minds at a lower level.
Megan?
And I'd say the upside risk to 425 would be an environment where the demand backdrop falls out, where we have risks around Fed credibility and independence really challenging the foreign demand investor base and causing the back end to dislocate and see 10-year higher.
Tony, the Fed chair did also talk about GDP growth slowing to around 1.2%. I mean, it may be being characterized as a healthy economy, but there's a lot of fragility out there, isn't there? I mean, we're even seeing it in some of the corporate earnings. And as the Fed chair himself said, there's still a lot of volatility about where tariff rates will end up.
Exactly. And that uncertainty has certainly put a pause on a lot of, say, business investment. For example, we're certainly getting the AI-related data center investment, but other investment has been slowed. And clearly, these higher tariffs really impact the lower-end consumers the most. So there's a softening in demand. But where we had thought there might be a downside to below 1% growth in the second half, we're now expecting 1 to 1.5 for the recovery next year to closer to a 2% growth pace. So again, avoiding recession, there's some softness, but allows the Fed to recalibrate their current policy stance.
I forgot to ask both of you, balance sheet runoff, apparently it should stop immediately, should it?
So it certainly could, Vani. We see reasons why the Fed would want to be ending balance sheet sooner, in part because of some of this upward pressure that we're seeing on funding already. We think Fed should be done by the end of the year.
All right, gotta leave it there. Thanks to both of you. Fantastic panel. Tony Rodriguez of Nuveen and Megan Swiber, Senior U.S. Rates Strategist at Bank of America. Up next, the auction block. August's volume for high grade is heading to $100 billion, even with a little stoppage for Jackson Hole. We talk credit next. This is Real Yield on Bloomberg.
In my opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S. really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
In case you missed it on Bloomberg Brief.
We do see that there are some real inflationary pressures. I mean, one thing is, of course, coming from the tariffs. We are seeing some push from various kind of climate situation, and so that is why we also think that there is a link between climate risk and financial risk. I do think there is for sure a danger that inflation could be quite persistent here.
Don't miss Bloomberg Brief live.
I'm Bonnie Quinn. This is Bloomberg Real Yield. Time now for the auction block, where we took a look at sovereign and corporate issuance for the week. We start with Treasuries, where the standout was the 30-year TIPS auction. $8 billion was sold, with the strongest demand since 2017 and the highest yield since 2001. Over in U.S. high grade, it's on pause today with Powell at Jackson Hole, but the sector did manage to top forecast for the week with more than $25 billion in sales. Notable names included Eli Lilly, Charter and McDonald's. And in high yield, broad momentum for the month slowed as the traditional summer slump takes hold. This follows a robust pace of bond sales. At more than $25 billion, August is still the busiest level for the month since 2021. Speaking of credit, legendary investor Howard Marks of Oaktree Capital Management calls it a defensive option.
This is a time to put a little more defense into your portfolio, and investing in credit as opposed to equities is one way to do it. You can say that the promised contractual return isn't as high as it has been historically, or the increment that it provides over treasuries to compensate for the credit risk isn't as high as it has been historically. But you can't say that they don't promise 7.5%. It has a high probability of doing fine, whereas stocks, if the valuations are elevated, have some reasonable probability of doing less than fine.
Joining us now is Megan Robson, head of U.S. credit strategy at BNP Paribas, and David Rosenberg, head of liquid performing credit at Oaktree. So let me start with you, Megan, for a reaction to what Howard Marks had to say there. And of course, Fed Chair Jay Powell, what surprised you most about the speech this morning?
Yeah, a lot going on today. So I think with Powell, the expectations into Jackson Hole were dovish, and he definitely delivered on that. I think in two ways we were surprised. One, he really suggested the Fed was open to a rate cut in September, and rather than just focusing on the unemployment data, he's also focused on payrolls. So all eyes in the credit market, I think, will be to the September 5th payrolls data. Potentially what was even more surprising is his comments on inflation. So, before there was a question of, is inflation with tariffs going to become entrenched? And Powell made some comments that, potentially it would just be more transitory. So sort of going back to that 2021 transitory comment. So for us, we were constructive heading into the meeting, and we're gaining some conviction around that view following his comments.
And David, let me ask you about the comments too, and particularly the reaction in the bond market. Were you anticipating such a violent move?
Yeah, I think the market was very excited about getting maybe even a 50 basis point rate cut in September. I think that, one of the things coming out of Powell's comments is he's very balanced. There is a dual mandate here, and it seems pretty clear there's a lot more data to assess, and so likely going to take it in a much more measured pace, which seems a lot more prudent.
So the 2-year yield down 10 basis points now. We're at 3.68, the 10-year at 4.25. Are we done for the year? Can we go home?
I don't think, the volatility is, I think, going to be, going to continue through this market. I don't think we definitely can't go home at this point. But I think there's a lot more data to come through. We're going to have to see inflation prints and whether tariffs really are starting to push prices higher for people. We're going to have to look at unemployment data and see where that trends. And so I think there's a lot more to digest before we kind of see where this ends.
Yeah, Megan, there's a lot to worry about even in what the Fed chair said, right? He said, look, changing labor market dynamics, and they're very obvious, and not just just have we got soft numbers on one side, but we also have softer supply. So what will that mean? Is this labour market changing entirely? There are so many questions, tariffs as well, and their impact on inflation. Will it be a one-time shock, or will we genuinely see inflation creeping in week after week to the end of the year, as the CEO of Walmart said earlier this week? What is the base case for you, at least in terms of the labour market and how it's changing?
So our base case is that we see a gradual slowing in GDP growth, but that doesn't mean it's necessarily a negative for credit. So earnings so far has held up really well. So in second quarter earnings, which we just got, we had 5 to 10% EBITDA growth. Margins, which I think is the key question, if we see margin compression, will that feed through to the labor market? So far, margins have held up very well. It's a place we're continuing to look. But I think the key drivers of credit, we still have this secular tailwind of elevated yields. So for us, we think heading into the rest of the year, you have elevated yields that will keep supply relatively lower than it otherwise would have been, and demand from yield buyers will continue to be there. So for us, that will be a key positive driver for credit markets.
David, is there any risk at all that there's some mispricing across credit markets, that we look back and be like, oh, of course, it was obvious, after the event, we didn't see it at the time?
Well, look, I think, you can't paint, the market with all one brush. There are going to be certain individual securities that are certainly mispriced today. There is definitely a grab for risk, and that is pushing a lot of prices higher. But I think, to me, to Megan's point before, I think I go back to the clip you showed from Howard Marks at the beginning, which is when you look at credit versus equities today and think about where the mispricing risk really lies. Equities, with an S&P with the PE multiple in the mid-20s, you need robust growth just for prices to stay where they are. Whereas in credit, and I agree that you're likely to see economy start to slow down. We're starting to see weakness in the consumer and the willingness to spend. But if the economy starts to slow down, we still get to grind out a contractual return in the 7 to 8% range, which I find pretty attractive.
Yeah, and David, we've had guest after guest after guest all year come on and say, look, stay, towards the investment grade side of things. Let's not move down the stack too much. But I imagine you're of a different opinion. Where might we see the best sort of value for our dollars right now?
Yeah, to me, it really comes down to, your ability to avoid defaults. Oaktree, we've made a reputation out of going into high yield and other below investment grade asset classes and keeping our default rate low. I like to say Oaktree is a safe place to invest in riskier assets. But if you can keep your default rate low, then I think a yield of 7 to 8% is quite attractive and, frankly, competitive to what a lot of people were hoping to get out of equities going forward.
It's very hard, though, Megan, to decide I'm going to keep my default rate low, right? How can you be certain that where the industries you're looking in, the geographies you're looking in, you're going to see low default rates?
Well, 3 years now after rate hikes, the high yield default rate is still around 3%. So I think there is some resilience that has really shown. And part of that is a lot of issuers have fixed rate and are not really feeling the impact of higher rates. Leveraged loans is a little bit of a different story. We have had defaults around 6%, but they've come down from the peak, and that includes things like distressed exchanges and restructurings. So I think you do need to look for signs of stress in the private credit markets. We have seen more signs of stress than in the public credit markets. So things like a rising share of PIK deals where issuers are selling debt to pay interest is a signpost we should continue to be very vigilant about. But overall, credit metrics to us have shown some stability.
Now, your proprietary positioning indicator shows neutral, right?
Yes.
That would seem to me that it's possible that things could get tighter from here.
Yes, I think you're exactly right. So positioning that we track for the credit markets suggests that investors are about equal weight or neutral. And so heading into the second half, it's possible that investors still need to add to risk and sort of catch up to the good news that we just got. Good news being a more dovish outcome at Jackson Hole. So there's definitely scope for investors to add to beta.
What, David, does this yield curve say to you right now? If you look across the yield curve, you see the 2-year where it is, the 30-year obviously came down another little bit, but by far maybe less than half the move of the 2-year. What is that saying to you?
I think right now the market is definitely, looking and hoping for rates to successively go down. We'll see. But I think on the long end of the curve, people are being a lot more rational about how much lower can that go. I think people talk about steepening a lot, which is the reality is the Fed can control the short end, the market controls the long end. And when you look at the long end, then you have to start factoring in things like the deficit and other things that we're going to have to fund and, other forces that are likely going to keep rates from aggressively going down.
Well, speaking of other forces, it feels like we have to add, not just the bond vigilantes, but now dollar vigilantes into the mix. Are you looking outside the U.S. and how do dollar dynamics affect your choices?
We are looking. Actually, I find Europe is a very good bargain right now. And it's interesting. A lot of people, talk about the loss of U.S. exceptionalism and they're moving to Europe to kind of hide from a weaker U.S. economy. That's not really the value to me. I don't think you can hide geographically from a recession. If there's a recession in the U.S., the world economy will feel it. But you can hide by credit selection. You can hide by industry. Different credits and industries will do better. But right now, we're finding that Europe is a little bit cheaper than the U.S. And Europe is a smaller, less liquid market, so it should be cheaper, but it's abnormally cheaper, and that creates a pretty good opportunity to buy.
All right, I have to thank you both there for your time today. David Rosenberg of Oaktree, thank you, and Megan Robson of BNP Paribas as well. And I just want to check the markets. We mentioned the weaker dollar. The Canadian dollar is stronger today. I want to reiterate that Canadian Prime Minister Mark Carney has been speaking and he has confirmed Canada's tariffs on US metals will stay, but there will be USMCA exemptions for counter tariffs taking effect September 1st. That was Bloomberg Real Yield.
I want to spend a little bit of time talking about your relationship with autonomous vehicles. It's been it's up and down for Uber over the years, even preceding your tenure. You have stakes in a lot of AV companies. Yes. Talked recently about wanting to monetize some of those. What's the strategy?
So we want to essentially support the AV ecosystem and continue to help that ecosystem develop, and then AVs penetrate into the marketplace. AV, we think, represents a safer way of transportation. Ultimately, we think it'll expand the marketplace as it makes kind of safe transportation in cities available to everybody. So we're big fans of AV. And generally, we're working with multiple partners in the ecosystem. Waymo, for example, in Austin and Atlanta coming up. Wave, Avri, there are probably 18 partnerships that we have in the AV ecosystem. And we want to help these players develop by investing in them in some cases, but really by working with them to bring their product to market. These are technologies that are unbelievably promising, but they've taken billions of dollars to develop and 10 plus years. And it's one of those overnight successes that's kind of taken 20 years of development, but it's finally ready to hit market, and we want to help the ecosystem get there.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome to Bloomberg Markets. I'm Bonnie Quinn. Let's get a quick check on those markets. And boy, have we seen some moves today. The S&P 500 just off its highs now, but up 1.4% after the Fed chair spoke in Jackson Hole and delivered for this market. Look at those small caps. That gauge, the Russell 2000, up 3.7%. The two-year yield, yes, you were looking at it right, down more than 10 basis points, 368.79. The 10-year was down as well. 425 is where it's at. It seems to love that spot. And then I just wanted to point to the Canadian dollar. This is a story of both currencies, in fact, because we're seeing US dollar weakness just in general today, but also some Canadian dollar strength. We had Mark Carney coming out and saying that the Canada and the US will intensify discussions on trade, but also that USMCA exemptions on the part of Canada will go into effect September 1st, although tariffs on US metals will stay. But it does seem to be something to offer the US on tariffs on the part of Canada. So a lot going on today. Let's bring in Bloomberg's Natalia Kniatkevich to highlight what's driving this particular equities rally. Natalia.
Hi, Vanya. So first, let's take a look at some of the biggest movers in the S&P 500 industry group. So we see that gold stocks are higher. This is your inflationary play, by the way. We also saw some heavy options in the heavy buying in the option space for gold-related options. Now, of course, we see some stocks moving up on ground transportation index. This is your cyclical play. And on top of that, I should mention that housing stocks are doing particularly well today, as they are also considered to be as one of the most interest-sensitive stocks. And then on the flip side, in terms of equity index movers, we saw that some defensive names such as tobacco index, healthcare, so these are a typical defensive plays, they are moving down today. The next one, let's take a look at some of the biggest stock movers today. It's not a huge surprise that we see that the biggest tech stocks such as Nvidia, Apple, Tesla, Amazon, they are among the best performers. Those stocks, of course, were under pressure in the past couple of days. And of course, we heard from JP Morgan, Goldman Sachs trading desks saying that that sell-off that we saw yesterday was a deep buying opportunity. I know if some investors followed that, but nevertheless, we see a big rally in technology stocks. So we still see some decliners, Vani, today. One of them is shares of Intuit. They are down. Today, the company provided sales guidance for the current quarter below consensus. The stock is down by 5%. At the same time, we saw that EPS and revenue for the current quarter, for the past quarter, came actually above expectations. And also Morgan Stanley analysts said that they would be buyers of today's weakness in share prices.
Natalia, thank you so much. That is Bloomberg's Natalia Kniatkevich. As Fed Chair Jerome Powell signaled a potential cut in September, he also sounded the alarm on tariffs. Let's take a listen.
The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem.
And let's bring in Bloomberg's Michael McKee now, who is in Jackson Hole. So, Michael, the Fed chair, in what is very likely to be his swan song speech as Fed chair, unless something wild happens, basically delivered for the market and gave us a lot more than perhaps we were anticipating going into this. What was most surprising to you about his remarks?
Well, the surprise obviously was that he has opened the door to a rate cut in September. And of course, once they do that, it's pretty hard to close that door. I don't think that the market is going to take it well if suddenly the Fed changes its mind, unless the data change everyone's mind. But what he did was explain the thinking of what must now be the majority of the members on the committee, while he said the question for the Fed is, will inflation pose a long-term danger? He also said it will take a while to find that out. The two parts of their mandate are in conflict, with the labor market weakening and yet inflation going up. But he said that the labor market odds are that if it's going to go bad, it's going to go bad faster than inflation rises. And therefore, they're going to take a look at that part of the mandate first. And that's why they're thinking about cutting rates in September.
Yeah, he had mentioned the phrase a curious kind of balance when it comes to the labor market, because both sides are softening demand and demand supply. And it reminded me of something that the former Philly Fed president said to you guys earlier, which was that there's something off about this economy. There's something slightly strange. He said maybe stagflation light. Is that the same kind of thinking as we're seeing at the Fed now?
Yes, and on the inflation side of the stagflation, it's a question of how fast the tariffs will feed into inflation. And of course, that process has been delayed by the fact that the president keeps delaying imposing tariffs. And he's got a couple more out there, semiconductors, pharmaceuticals, things like that, that he says are still coming. So until all the tariffs are on and until the companies out there know exactly what those tariffs are going to be, we're not going to really have a good feel for how fast inflation is going to get into the economy. That's going to be the problem going forward for the Fed. On the employment side, right now we are not seeing anybody getting hired, but we're not seeing anybody getting fired. And the question is, if those tariffs are going to come through and inflation's going to go up and margins are going to compress, then companies are going to look to save money somehow. And that usually means laying off people. And that's what the Fed is afraid would happen faster than the inflation numbers would go up.
All of that, and we didn't even get to all of the content about the monetary policy framework. That'll be for another time. Michael, thank you so much. That's Bloomberg's Michael McKee. For more now, let's bring in Bloomberg opinion columnist and the founder of the asset management firm Unison Advisors, Nir Kesar, joins us from Rhode Island. So Nir, Michael there was talking about inflation. The Fed chair literally said a reasonable base case is that the effects will be relatively short-lived. But of course, that doesn't mean all at once. And also, it's possible that lasting damage could stick around. Where is the Fed on inflation and where can it be? How much do we know?
Hi, Bonnie. I think probably the most important thing the Fed said, or at least Powell said this morning, is that there's a lot of uncertainty, and he himself and the Fed itself does not know ultimately where the drivers of his dual mandate are going to go. And so I had a slightly different takeaway from the motivation. It now appears clear to everyone that a rate cut is coming. You saw the 2-year shave off 10 bips almost immediately after his speech. I think it's more a question of where are the economic indicators now, and where are they positioned relative to the neutral rate. He mentioned the neutral rate in terms of the framework, which I'll get to in a second. But I think ultimately you look at the Fed funds rate now. It's about 1 to 2%. 1.5 to 2% higher than the inflation rate, depending on what your reference point is for inflation. And if you look at that and you consider that unemployment is low, the break-evens are only modestly above their 2% target, and inflation, despite the fact that inflation did tick up a bit higher than anyone wanted last month, if you just zoom out a bit, it has been trending nicely to the 2% target. It seems like they're well above the neutral rate and should probably start moving toward it, which is what the 2-year has been telling us for a while now. 3.7 is pricing in 2 to 3 25 basis point cuts. And I think that's ultimately going to be the motivation for the Fed, is to move closer to their neutral, unless we get different economic data in the next month or 3-6 months ahead.
Yeah, I just want to show you this chart. Thanks to Ira Jersey, of course, of Bloomberg. It shows us the 10-year yield and the terminal rate floor and just how much that has been moving just in the last few hours. And there is a big move. But where is neutral now, Nir?
Yeah, I mean, this is the part of the speech that really jumped out at me, which, he mentioned in passing very quickly that the neutral rate may be higher than it was during the post-financial crisis period. And I think that's a very important statement. It could turn out to be important for monetary policy going forward, because, if the Fed target is 2% for inflation, the neutral rate, I think, is generally understood to be somewhere in the range of 50 to 100 basis points above that. However, if Powell is now telling us that the neutral rate could be higher than that, so now let's extend the range. Let's say it's 50 basis points to 100 basis points. 150 basis points higher than that. Then really what you're talking about is the neutral could be somewhere in the range of 3 to 3.5, maybe even closer to 4. The reason that's important is because the 2-year now at 3.7 is already close to what I think Powell might be hinting is the neutral rate, meaning that the interest rate environment is as accommodative as he might want it to be. in which case the Fed really does not have a whole lot more work to do. So while on the one hand, we're talking about rate cuts coming, on the other hand, this may not be as dovish as some people are reading the Fed to be ultimately.
Is this rally in equities warranted? Will we see it continue? Where are we now in this bull market, given today's reaction near? I mean, we've had this 5-day sell-off. It's the end of August and so on. But, you know, we've got indices rallying almost 2%.
Yeah, I mean, I think, you know, with the U.S. stock market, I think we continue to have the problem that we have with the U.S. stock market is there's really a bifurcation in the valuations inside the market. You know, on the one hand, you continue to have the big tech names, the larger, highly profitable, somewhat growthy names. They continue to command very high valuations. On a forward basis, you have valuations really only higher in the last 30 years during .com and before the 2022 tech wreck. On the other hand, when you look down further into the names, you have very low multiples, particularly the small caps, which have rallied today. And I think I would expect at some point that you're going to get some meeting of those two ends, some valuation contraction on the high end and some valuation expansion on the front end. On the lower valuation names in the small caps. And so that's just I think a longer term retrenchment that I expect to see in the market. Whether this is the beginning of it, I think is harder to say, though.
Nir, thank you so much for all your time today. That is Nir Kaysar of Bloomberg Opinion. Coming up, we're going to further break down all of this with Bloomberg Intelligence and get Ira Jersey's take on Jay Powell's speech. Of course, tariffs, inflation, risks, all of that was in there today. And what does the Fed do from here? Stick with us. This is Bloomberg.
You missed it on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What do you see?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss the close, live every weekday.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee at the Economic Policy Symposium in Jackson Hole, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, central bankers travel to Jackson, Wyoming, and we go with them to the richest county in the country. In Dallas, we take a look at its plans to challenge New York's position on top of the financial world.
Wall Street is great. The future is Dallas.
And we sit down with Chevron CEO Mike Wirth to hear what he's doing to restore some balance after all the ups and downs of fossil fuels. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
This is Bloomberg Markets. I'm Bonnie Quinn. As markets digest Chair Powell's latest remarks from Jackson Hole, we want to bring in now Bloomberg Intelligence's Ira Jersey. Ira, want to get your immediate thoughts after this morning's speech?
Yeah, so a lot of interesting details within the speech, particularly about the framework. And, I think it was kind of missed because we focused on the speech initially, but they did come out with some statements around the framework, which it doesn't seem like it's that big of a deal. But the Federal Reserve, in switching the framework the way that they did, they were probably a little bit more dovish in that they would potentially allow inflation to be a little bit higher in cutting interest rates to support the job market. So I think that's one of the reasons why you've seen this big reaction with the bull steepening of the Treasury yield curve that you saw, especially in the immediate minutes following the release of the speech.
Yeah, Jim Bullard actually told us that the changes were thoughtful and were very much, on subject about what many people thought, the changes would be made on. So that was interesting in itself. But you mentioned the labour market and how that's all in there. The Fed chair, is he more concerned than he's letting on in some ways about the labour market? And he's letting on a lot of concern, right? He's saying it's fragile. He's saying that it's a strange labour market. There's supply issues and demand issues. And also, when it goes, it could go very fast.
Yeah, well, that's always the worry, I think, from the Fed. And that's why that shift in the policy framework, I think, has gotten a lot of attention, because there was a fear that the emphasis was going to be a little bit more on the inflation side. So therefore, people were expecting a more hawkish sounding tone from the release and from Powell's statement. But we didn't get that, right? We got a much more balanced view of things. I think the Federal Reserve they're going to cut interest rates, and I do suspect that they'll start in September at this point, unless we get some kind of crazy, absolutely crazy strong jobs number, which doesn't seem likely. I think what the market's kind of getting wrong and has to start getting behind is how far do they go and how fast do they go? So, you noted in the last segment that we have something that we call the Fed, the short-term interest rate terminal rate. So how low will the Fed cut to? And that was hovering right around 3.25% to 3.1%. That's come down now to 3%, and I think will continue to go lower, and that's one reason why you see two-year yields rallying as much as they are. Because look, there is policy momentum. Once the Fed starts to cut, I don't think that they're going to skip a meeting. They're just going to keep going for 75 to 125 basis points, and probably more on the 125 basis point side, primarily because they think neutral is somewhere below 3%. And if that's the case, then the market is not quite pricing yet for all of the cuts that are likely to be realized, in our view. We are just showing
the chart, Ira, and it's actually moving even lower as you speak, which is just interesting to watch in real time. So you mentioned the curve move. We saw the two-year yield back down to 368. It was close to 382, around 384, that kind of range. The last I looked, the 10-year yield down as well, but it's sticking around 425 and seems to be very happy there. And the 30-year yield at 487. Are we pretty much done for the year, minus a little bit of volatility here and there?
I think that there's the scope for the yield curve to steepen further. So I do think that that two-year yields could keep on going down. Now, that being said, we are priced for that. So I'm very cognizant that if you look at what's priced in interest rate forwards by the end of the year, the market is priced for around 3.5% two-year yield by year end. Now, that's not crazy far away, right? You're talking about 18 basis points or so from where we are right now. But it's that 10-year yield yield that I think is people are questioning. There's a whole slew of people who are worried that the Federal Reserve cutting is going to stimulate the economy, drive inflation higher, and that the yield curve not only should be steeper, but that long-term yield should be even higher than where they are today. Now, I don't subscribe to that personally because I do think that inflation is something that that the demand side will take care of because people will stop buying goods and services and things like that, and prices will come down. But that's also what slows the economy and causes the Federal Reserve to cut more. So that's where I think that there is there is the scope for the market to do reasonably well through the end of the year, even if the Federal Reserve only cuts twice, but probably will cut 3 times, I think, by the end of by the December meeting.
That's all so fascinating. But Ira, just on that last point, markets obviously are going to look through September now and into October and December, right? How do you think about October and December, given that we still haven't got the 2 bits of data that we were waiting on for the September meeting?
Yeah, well, being so data dependent, then that does mean that we have to consider each individual data print. But I think if they go in, as I mentioned, I think if they go in September, you would need a massive change in the few data prints that you received before or that we'll receive prior to the October meeting. Because the October meeting, remember, we still won't have the October payrolls report before that meeting. We'll only have 1 month of full set of data. So I think that if the Fed goes in September, they'll go in October. If they go in October, they probably go in December as well. So that's where I see a string of interest rate cuts and kind of that policy inertia that I mentioned a little bit earlier.
Iris, thank you. I'm a little sentimental. It's the Fed Chair's last Jackson Hole speech. I think it's a day for a little sentimentality. That's Ira Jersey there.
Yeah, I agree with that too. Yeah, I think he's done a good job. So
yeah, well, I'm not pronouncing any judgment on whether he's done a good or bad job, but just the idea of Jackson Hole with Fed Chair Jay Powell no longer there for his speech. Iris, thank you so much. That's Ira Jersey of Bloomberg Intelligence. Coming up, we discuss the big moves in the stock market, especially when it comes to tech. Investors awaiting earnings, of course, from Nvidia next week as well. This is Bloomberg.
Up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
In case you missed it on Bloomberg Tech Asia.
How does Samsung think about competition? Because you have also so many Chinese makers coming out with foldables, with good cameras.
Rather than focusing on competition, I think we have been focusing on our consumers. I think healthy competition with other companies, I think will bring more innovations and then bring more benefits to consumers.
Don't miss Bloomberg Tech Asia every month.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Markets. I'm Vonnie Quinn. Turning back to the markets now, stocks sitting near session highs, including Nvidia, going back gains after earlier losses, with all eyes, of course, on earnings due next week. Let's bring in Bloomberg Tech co-anchor Carolyn Hyde. So, Carolyn, it's a feast of events at the moment. Jackson Hole today, Nvidia earnings next week, and we have the stocks of every single member higher today.
Which is the more important macro event? Before we used to perhaps say it was Nvidia earnings. Now we've turned our attention back to the macro that is the Fed. But you're
You're right. And actually, analysts have got really excited ahead of these NVIDIA print. We were excited in terms of 9 analysts, at least, have upgraded their price targets. You're seeing a record high average price target now over the next 12 months for NVIDIA, about 190. All of this is pointing to the idea that there's still rampant demand for their underlying technology, the infrastructure that they're building to help all the LLMs proliferate and indeed, therefore, generative AI to get into your and my hands.
What is the concern around China at the moment? Because it feels like it goes away and then it comes back again.
Exactly.
It comes back again.
Just haunts us continually, a bit like whether TikTok will ever be banned or not. And there was another iteration on that from President Trump today. But I digress. We go back to NVIDIA. Look, there is a report out of the information which initially did send the stock lower. And the information had reported that actually NVIDIA has asked its suppliers to basically stop making H20s. Those are the specifically made chips, not as powerful as those that US has access to, but certainly specifically designed for China. And we know that the Chinese government has rather pushed back against some of their own businesses to say, stop ordering them. We shouldn't be. Look locally, look to Huawei, with whose share price rocketed on this news coming from the information. Now, whether or not it's categorical ban or whether or not it's just a gentle reminder not to use them, it feels as though Jensen Huang himself was surprised by the pushback. In fact, Jensen's been over in Taiwan and took a sort of impromptu set of questions while at the airport, saying more broadly that he's trying to negotiate and navigate this with the administration in China thus far. But NVIDIA has said we constantly manage our supply chain to address market conditions. Is this a real market condition? How much has China pushed back in H20s? And actually, is it irrelevant? Because at the moment, he's trying to get his latest Blackwell product up and running and finessed for a Chinese market that would be allowed by the US administration. That's a whole other kettle of fish. But there is the worry about China. We'll see how that reflects on the 27th.
A scaled back Blackwell, isn't that what the president said he might consider? Yeah, he seems to be diplomat in chief right now. He seems to be able to talk to the US president, and we'll see, will he ever, get to talk to Xi Jinping or at least get messages through to him, but he does seem to be diplomat in chief. So those earnings are Wednesday, and you and me are hosting the close later on.
Exactly. We've got a whole set of hours of this.
Yes.
So I might have to go and change. I'm not sure if we can be dictating red across the screen when we're green.
Oh, monochromatic, I love it. Why not? Bloomberg's Carolyn Hyde, thank you. I do want to take you through some of these market moves once again, because it's just about an hour since the Fed chair finished his final speech at the Kansas City Fed Jackson Hole Symposium. He opened the door wider to an interest rate cut in September, and we saw stocks and bonds take off on the news. Crypto as well higher. We have the Dow up 2%, the Russell 2000 up close to 4% right now. Do stick with us all afternoon. I'm Bonnie Quinn. That does it for the moment for Bloomberg Markets. This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, central bankers travel to Jackson, Wyoming, and we go with them to the richest county in the country. In Dallas, we take a look at its plans to challenge New York's position on top of the financial world.
Wall Street is great. The future is Dallas.
And we sit down with Chevron CEO Mike Wirth to hear what he's doing to restore some balance after all the ups and downs of fossil fuels. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode,
We have shown that our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Premieres August 22nd, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hordern in Anchorage, Alaska, and this is Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump threatens to fire a top official at the Federal Reserve, escalating a pressure campaign. Welcome to the Friday edition of the fastest show in politics. This is Balance of Power on Bloomberg Television and Radio. I'm Tyler Kendall here in Washington alongside Bloomberg's Michael Shepard. Joe Matthew is off, and all eyes are on the Federal Reserve today. The White House ramping up attacks against Fed Governor Lisa Cook over allegations of mortgage fraud. But our focus was already on the central bank today as Fed Chair Powell gave his highly anticipated remarks at the annual economic symposium out in Jackson Hole, Wyoming. We'll bring you a live report from there. Our very own Bloomberg's Michael McKee is on the ground, and we'll also have a conversation with Lael Brainerd, the former director of the National Economic Council. She joins us here in our studio in just moments. As Michael Shepard, traders are really adding to their bets ahead of the next FOMC decision.
Well, they really are, and this has been one of the strongest days for markets in the past several months off of this news on the Fed. But there's other news that they've had to digest as well, Tyler. And we saw that Canada has decided to pull back on some of its retaliatory tariffs against the U.S. over some import levies that the governor there in Ottawa had found objectionable. Canada was one of the few countries that actually moved to retaliate against some of these Trump tariffs. And so we'll be looking to see more of the choreography between Prime Minister Mark Carney and, of course, President Donald Trump in coming days. And naturally, we're also going to want to get from Wall Street a sense of how they are digesting both the news from Canada and from Jackson Hole. We will go to Bloomberg's Charlie Pellet, the voice of Bloomberg Radio, and the New York City subway for the numbers.
Hi, thank you very much, Michael Shepard. Here's what's going on. Stocks very close to session highs. All about Jackson Hole. We'll take you there live in just a moment with our Michael McKee. But the Dow, the S&P, NASDAQ all advancing after Powell's remarks. You saw him on Bloomberg Television. You heard him on Bloomberg Radio. S&P right now up 93 at 64.64. That is a gain of 1.5%. Dow Industrials up 901. That's an advance of 2%. NASDAQ up 353, up 1.7%. Our Mag 7 index up 1.9%. Cannot ignore the Russell 2000 index. Big move there, up 3.8%. Dow Transport's taking part in the rally, surging 3.4%. Your 10-year at 4.25%, with the 2-year currently yielding 3.68%. Spot gold now up 1%, 33.72 the ounce. West Texas Intermediate crude a little changed, up 7 cents a barrel, 63.59. That's a gain of 0.1%. Bitcoin now surging by almost $4,000 a token, up 3.5%. Bitcoin at 116,398. As we have been reporting and as we continue to cover, President Trump says he will fire Lisa Cook from the Fed's Board of Governors if she does not resign her post over mortgage fraud accusations from a top ally. And NVIDIA has instructed component suppliers, including Samsung Electronics and Amkor Technology, to stop production relating to the H20 AI chip. This according to the information citing sources. NVIDIA shares today, they are advancing up by 1.3%. NVIDIA, very much a market focus next week when it reports earnings. Recapping stocks higher, S&P up 1.5%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Michael Shepard and Tyler Kendall.
All right, Charlie Pellet in World Headquarters for us in New York. Thanks so much. And today we're tracking our top story. Federal Reserve Chair Jerome Powell carefully opening the door to an interest rate cut come September. He gave what will be his last speech as chair to the Kansas City Fed's annual economic symposium earlier this morning out in Jackson Hole, Wyoming. And Powell pointed to rising risks for the labor market, even as concerns over inflation remain.
The stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
There was a lot hanging over these remarks, from the path of rate cuts to heightened pressure on the central bank from the White House. And we want to get into all of it with our very own Bloomberg's Michael McKee. He's out there in Jackson Hole, has been covering this all week for us. He's our international economics and policy correspondent. Mike, let's just start with a recap from what we heard from the Fed chair. What sort of signals did we get out of him today?
Well, basically by saying that the Fed it's okay to adjust policy, he told the markets that they are betting correctly. The Fed is on track to cut rates in September. That's a bit of a surprise. The feeling was he would keep his options more open, but for some reason the Fed has decided that the threat of unemployment rising and people losing their jobs is greater than the threat of inflation for the time being, and so they are on a path to cut in September. They could change their mind, but right now that's a pretty open suggestion that that's what they're going to do. It'd be pretty hard to walk that back. Their view is apparently that it is going to be a rough time for the labor market, with hiring really slowing down, but tariff inflation only slowly going into the economy.
Mike, we've had a lot overshadowing the Fed as we headed into the Jackson Hole symposium. And that, of course, has been the saga of Lisa Cook and the pressure from the president himself on her to resign. And today he escalated that by threatening to fire her if she didn't leave voluntarily. Have we heard from her today or from the Fed on this? And let me also ask, Mike, what sort of signal did Jerome Powell send about Fed independence during his remarks?
Well, I can tell you Lisa Cook is here. She arrived this morning and she attended the first opening session. She got a round of applause when she walked in. And then the question becomes, what happens next in her case? That has been a distraction for the Fed, but it now could rise above that and become more of a problem if indeed the president does follow through with his threat to try to fire her, because that would trigger a legal battle between the Fed and the administration. And we're not sure how all that would play out, and we're not sure how the Fed would react. I know that Donald Trump is about ready to have reporters into the Oval Office, and he always makes remarks, so I'm sure he'll be asked about that, and we may get some more guidance on what he's thinking. The Fed is not talking about it. They, as I said, consider this a distraction, and they said they don't want to get into a tit-for-tat back and forth. But at this point, we're just waiting to see what happens with that. Powell didn't send a major signal today because he didn't talk about Fed independence, also a bit of a surprise. But the other issue is what is the Fed's future? What is Jay Powell's future? So far, no word from the president.
And, Mike, as you are talking, reporters have been let in at the White House. Nothing yet here when it comes to the Fed, but we can break at least one headline. President Trump saying that the World Cup draw will be at the Kennedy Center on December 5th. There, you see him there if you're joining us on Bloomberg TV talking inside the Oval Office. Mike, just one more question for you to put a finer point on this conversation when it comes to the future of Fed independence. And I know we talk about this a lot, but it's because it's a big focus here in Washington, and that is those legal questions around whether or not the president could remove a Fed official. What do we know about what my understanding is a very high legal bar if there were to be a removal? And of course, these allegations against Lisa Cook at this point are just that. They are allegations. Oh. Looks like we might have lost Michael McKee there, but of course we thank him as always for joining and for his coverage. But to continue this conversation, and perhaps we will pick up right there, we are lucky to be joined now by Lael Brainerd, the former director of the National Economic Council under the Biden administration, also former vice chair of the Federal Reserve. She's a distinguished fellow at the Georgetown Center for Financial Markets and Policies. Lael, thank you so much for being there. Can we we just pick up this conversation at this point when it does come to Fed independence and what risks you see as we watch this pressure campaign from the White House ramp up?
Absolutely. Well, I think that first, what Jay Powell said today should have been music to the president's ears. He essentially, that was a very dovish set of remarks, where he essentially said that he also viewed the risks to the labor market as the greater set of risks, saw inflation rising perhaps more slowly over time, and opened the door, I think, very clearly for a cut in December, which is exactly what the president has been pushing so hard for. So it was a dovish set of remarks, and it really went quite far in the direction of confirming there would be a cut in September. Of course, we have two more important pieces of data that couldn't go in the other direction, but he did not qualify his remarks very much. So I think the question that you're raising about the Fed's independence is very important. The president looks to be getting what he wants in terms of the path of rate cuts coming down over time, reflecting what's going on in the economy. And it's counterproductive, I think, to suggest that this should be done due to political pressure as opposed to simply following the statutory mandate of the Federal Reserve.
Director Brainerd, you have also sat in that room as a member of the Federal Open Market Committee as Fed Vice Chair previously. Describe the challenge in balancing that dual mandate, especially at a moment like this when the economy is facing some strains that it really hasn't faced in more than a century, really. And we're talking about tariffs and how those are affecting the whole outlook on inflation. We heard the Fed chair talk about how the impact of those tariffs on prices might be momentary, but he did hold out the possibility that they might be more lasting. What is your view on the impact of prices, and how is the central bank balancing all that as it also looks at the labor market?
Well, I think this is a very tricky juncture for the Federal Reserve because it is responsible for keeping inflation low and keeping the economy at maximum employment. And when you see the large increases in tariffs going from 2% to 17% on average in a short period of time, that puts upward pressure on prices and downward pressure on hiring and the labor market. That's a stagflationary shock, which is the most difficult kind of shock for the Federal Reserve to handle. And they're trying to tell the public, the markets, exactly how they're weighing those risks. Up until now, we've heard a lot more about risks to inflation. Today, what we heard at Jackson Hole was the chair articulating how important it was to get out ahead of the potential recessionary risk from a weakening labor market.
We also heard Jerome Powell really highlight this idea of tighter immigration policy and how that is impacting the labor market. And I'm curious to dovetail this with the conversation we're having about tariffs. As these companies are trying to absorb perhaps the higher costs, are they also going to have to face higher labor costs?
Well, you're exactly right that not only have the tariffs created that kind of stagflationary shock, but into that mix is a much smaller inflow into the labor supply. And so it's very hard for the Federal Reserve to read the labor market right now. Unemployment hasn't budged, it hasn't gone up, but the rate of job creation has come down dramatically. And so they are trying to gauge, is that because we have so many fewer people coming into the labor market because immigration has essentially stopped, or is the labor market weakening, which will, of course, lead to an increase in the unemployment rate. And unemployment tends to rise very quickly when it does start rising, which is what the chair said in his speech today, which is why I think they are quite cautious about what's going on in the labor market.
Director Brainerd, we also wanted to ask you about economic policy more broadly. And do you see an end game in the tariffs that the president has been unrolling? And what is the lasting impact in terms of U.S. global economic relations with trading partners and allies and adversaries alike?
So I think this question about is this the end game is so important for businesses who are making these hiring decisions, they're making sourcing decisions, they are making pricing decisions, and what they want more than anything, which I think we all hear, is certainty. They want to know that the tariff structure is going to essentially be completed at some point, and that will allow them to basically change their supply chains and their hiring, and hopefully you won't see an ongoing increase in inflation. But if tariffs keep changing, keep ratcheting up, that will both make employers more cautious about hiring, and it could feed into inflation for longer. And of course, with respect to the international environment, I think trade partners are asking, to what extent can I really count on the U.S. to be a reliable international partner if the U.S. keeps changing tariff rates unilaterally based not only on trade considerations, but in some countries' cases, non-economic reasons.
To follow on that, what is the impact on the role of the dollar as the world's reserve currency? Do we see that at risk at all from this approach that the president is taking with trade and other areas?
Well, it's kind of a very important point. One of the great privileges of having the dollar be dominant is that it costs the U.S. government a lot less to borrow to service its debt than it would if we didn't have that dollar privilege. And so at a time when the national debt is projected to go up $3 to $4 trillion, the fact that we are playing fast and loose with the dollar, I think, does raise some questions about whether we might lose that advantage in terms of our borrowing costs. And that hasn't happened yet. The dollar has weakened a great deal, but when you see attacks on the independence of the Federal Reserve, it really does raise some questions about whether investors are going to want to continue to be as disproportionately invested in dollar assets, Treasury securities, as they have historically.
In the final minutes that we have with you, I wanted to pull on some of your expertise from working in the Biden White House, and I wanted to ask you about the more hands-on industrial policy that we've seen from this White House when it comes to a potential government equity stake in Intel, the so-called golden share in the Nippon Steel deal. How are you viewing what seems to be a shift in the public-private partnership? And a lot of this is because the administration is trying to bolster that domestic manufacturing. That's one of those reasons underpinning their tariff plans. How do you view this strategy by them that they're saying needs to happen in order to reach these goals that they've set out?
Well, let me just say I do think that in order to compete with China, which engages in a lot of industrial policy, that it has been important for the United States, for instance, to provide investment incentives for advanced manufacturing of chips here in America. It's great that we now have TSMC manufacturing the most advanced chips because of the Chips and Science Act. But we should compete with China based on our dynamic private sector. We should not be emulating China's state capitalism. And when I hear about these moves to take ownership stakes in some of America's most important and dynamic businesses, it really troubles me that we would be upsetting that balance. It's one thing to support the private sector. It's another thing to be moving into a kind of state capitalist model, which I do not support.
Well, in the 30 seconds we have left, let's drill down into that. Is this a proper use of CHIPS Act money, then, to do what the president is deliberating on doing, that is to take the Intel stake?
Yeah, so I think I don't know exactly the legalities of the stakes, but I just think it's bad policy. I don't think the U.S. government should be a shareholder in these companies. I think we should support private sector investment, support Intel and TSMC's and others' ability to compete with China so we can have the most advanced semiconductors here in the U.S., but moving to state capitalism is something that really troubles me.
All right. right. Lael Brainerd, we were lucky to have you here on this important Fed Day. Former director of the National Economic Council under the Biden administration, former vice chair of the Federal Reserve, and distinguished fellow at the Georgetown Center for Financial Markets and Policy. Thank you for being here. We'll continue this conversation on Balanced Power Plus, the latest on tariffs with Canada. Stick with us. This is Bloomberg.
In case you missed it on Bloomberg Brief.
We do see that there are some real inflationary pressures. I mean, one thing is, of course, coming from the tariffs. We are seeing some push from various kind of climate situation, and so that is why we also think that there is a link between climate risk and financial risk. I do think there is for sure a danger that inflation could be quite persistent here.
Don't miss Bloomberg Brief live every weekday.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, central bankers travel to Jackson, Wyoming, and we go with them to the richest county in the country. In Dallas, we take a look at its plans to challenge New York's position on top of the financial world.
Wall Street is great. The future is Dallas.
And we sit down with Chevron CEO Mike Wirth to hear what he's doing to restore some balance after all the ups and downs of fossil fuels. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it on Bloomberg Tech Asia.
How does Samsung think about competition? Because you have also so many Chinese makers coming out with foldables, with good cameras.
Rather than focusing on competition, I think we have been focusing on our consumers. I think healthy competition with other companies, I think will bring more innovations and then bring more benefits to consumers.
Don't miss Bloomberg Tech Asia every month.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Developing story on Apple, on reporting from our Mark Gurman. Apple in early discussions about using Google Gemini to power a revamped version of the Siri voice assistant, marking a key potential step toward outsourcing more of its AI technology. Apple shares part of a broader tech rally today. Apple up now by 1.6%. Google parent Alphabet up now by 3.3%. It is an up day for the Dow, the S&P, and NASDAQ after Jay Powell's remarks carried live on Bloomberg. S&P right now up 102. That is a gain of 1.6%. Dow Industrials up 902, up by 2%. NASDAQ up by 408 for the NASDAQ Composite Index, a gain of 1.9%. Our Mag 7 Index surging 2.4%, while the Russell 2000 Index of small cap shares up by 3.9%. The 10-year 4.25% with the 2-year, 3.68%. Gold up 1%, 33.72 the ounce, and